हेलो एवरीवन, गुड आफ्टरनून टू ऑल ऑफ यू, गुड मॉर्निंग, गुड इवनिंग टू ऑल ऑफ यू। आज हैं 15th ऑफ मई 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। फिलहाल देखोगे क्रूड ऑयल को कल रेजिस्टेंस पे था, गैप डाउन हुआ, फॉरेक्स में सेलिंग आ गई थी वापस रेजिस्टेंस से ही। एंड वो जो पूरा टारगेट था वो अचीव हो गया था। मॉर्निंग पे एग्जैक्टली कल वाला जो सपोर्ट बनाया था वहीं पर ओपन हुआ था, थोड़ी बहुत बाइंग आई, साइडवेज चला गया। देखते हैं होल्ड करता है या नहीं करता है इस पर्टिकुलर लेवल को। अगर ये होल्ड नहीं किया तो फिर थोड़ा सा ज़्यादा ही बेरिस हो जाएगा। नेक्स्ट सपोर्ट और नीचे है। अगर कहीं नीचे कैंडल क्लोज कर गया सक्सेसफुली दो 15 मिनट की 5000 टू 75 के नीचे, तो फिर ब्रेक डाउन ही हो जाएगा। ऊपर जाता है तो फिर यहाँ कहीं वापस सेल करेंगे। बाकी नीचे आया तो फिर नेक्स्ट सपोर्ट 5217 के अराउंड है। कि अगर डेटा की अगर बात करें तो काफ़ी डेटा है आज। 12:30 न्यूयॉर्क सेशन से पहले लंदन सेशन ओपन होगा। 6 PM पे डेटा है। 7 PM पे यूएस मार्केट ओपन। 8 बजे नेचुरल गैस की इन्वेंट्री एंड 5:30 न्यूयॉर्क सेशन की ओपनिंग। गाइस ये क्रूड ऑयल में ध्यान रखना है, क्रूड ऑयल में जो बाइंग का ट्रेड है ना, यहाँ पर ज़्यादा क्वांटिटी लेना मत, ठीक है। थोड़ा सा रिस्की ट्रेड लग रहा है, ये थोड़ा सा हाई रिस्की लेवल जोन है। इसलिए मैं मेंशन कर दे रहा हूँ, यहाँ पर ज़्यादा क्वांटिटी लेना मत, एसएल जा भी सकता है, चांसेस वेरी हाई। ये थोड़ा सा हाई रिस्क सपोर्ट लेवल है, ठीक है। हाई रिस्क सपोर्ट लेवल, सपोर्ट है जरूर बट थोड़ा सा रिस्क ज़्यादा है। प्राइस ट्राई कर सकता है, क्योंकि मुझे फॉरेक्स का प्राइस एक्शन मैंने देखा नहीं है, हो सकता है थोड़ा सा और नीचे डिप मार दे, तो क्वांटिटी कम रखना, टारगेट बड़ा है। रिपीट कर रहा हूँ, क्रूड ऑयल में जो लोग हैं या फिर ले रहे हैं, क्वांटिटी थोड़ी कम रखना, रिस्की जोन है, ठीक है। क्वांटिटी बहुत कम रखना, स्पेशली ऑप्शन बायर तो ज़्यादा बेटर है कि अगर ये यहीं से चला जाता है ऊपर तो बहुत अच्छी बात है, कम क्वांटिटी में बड़ा प्रॉफिट हो जाएगा, बट अगर नहीं जाता है तो फिर नीचे थोड़ा सा यहाँ इस एरिया पे आ जाएगा, तो यहाँ देख लेंगे, यहाँ पर भी ठीक सपोर्ट है ये। नेचुरल गैस भी थोड़ा सा अगर ऊपर आता है तो नेचुरल गैस में भी एक नेचुरल गैस भी थोड़ा सा ऊपर आता है तो एक छोटा सा सेलिंग का ट्रेड यहाँ पर भी प्लान होगा। फिर से रिपीट कर रहा हूँ, ये क्रूड ऑयल का जो बाइंग का ट्रेड लगा रखा है ना, ये रिस्की है, ठीक है। इज रिस्की, टू रिस्की। कोई अगर इस ट्रेड में है, क्वांटिटी बहुत कम रखना, या मैं कहूँगा थोड़ा सा वेट भी कर सकते हो नीचे आने का, बड़ी क्वांटिटी मत लेना। एसएल जाने के बहुत ज़्यादा हाई चांसेस लग रहे हैं इस रिस्की ट्रेड जोन में। मैं इस लेवल को रिमूव कर दे रहा हूँ। ट्रेड ऑन है, बट इट इज़ टू रिस्की नाउ। ठीक है, तो मैं इस पे अब 50-50 कहूँगा, 50-50% चांसेस है। जा भी सकता है, नहीं भी जा सकता है, सीधी सी बात बोल रहा हूँ। तो इट इज़ काइंड ऑफ अ रिस्की ट्रेड। आई विल सजेस्ट यू, अगर अभी भी बाइंग में हो, निकलना चाहो तो कॉस्ट को निकल जाओ, अदरवाइज होल्ड कर रहे हो तो क्वांटिटी बहुत कम रखना। इट इज़ ऑन अ 50-50 लेवल नाउ। ये आ जाए तो बेटर ही है। बाकी अगर ऊपर जाता है तो फिर मैं यही कहूँगा लक ही होगा बहुत अच्छा। गैप डाउन हुआ है ना सीधा ही उसने, बिल्कुल ही। रिपीट कर रहा हूँ, क्रूड ऑयल में ये लेवल थोड़ा सा हाई रिस्क जोन है। यहाँ पर जो ट्रेड बनाया था सपोर्ट वाला, उसका ध्यान रखना। अगर कोई अभी भी रुका हुआ है, क्वांटिटी ज़्यादा मत लेना, टारगेट बड़ा रख लेना भले ही। ठीक है, इसमें 50% चांसेस हैं कि ये सपोर्ट लेगा या फिर एसएल हिट करेगा। पहले रिपीट कर दे रहा हूँ, तो ज़्यादा रिस्क लेने की ज़रूरत नहीं है अगर अभी भी हो। मैं पहले ही बोल चुका हूँ, 50% चांसेस हैं। क्वांटिटी कम ही रखना अगर लिया हुआ है। नहीं लिया हुआ है तो बात अलग ही है। ये हाई रिस्क सपोर्ट जोन है। ठीक है तो है, उसको मैं भी चेंज नहीं कर सकता। तो कोई अगर इस ट्रेड में है तो, नहीं है कोई बात नहीं, थोड़ा नीचे का भी वेट कर सकते हैं, फिर ऊपर रेजिस्टेंस का भी वेट कर सकते हैं एग्जैक्ट लेवल पे। बट अभी के हिसाब से यहाँ पर यह लेवल हाई रिस्क जोन बनता है, तो मैंने बना रखा है, लिख रखा है क्लियरली। 50% चांसेस हैं, ऑलमोस्ट 50-50। नहीं, ट्रेड इन गोल्ड, गोल्ड में अभी कोई ट्रेड नहीं है 12:30 के बाद। 12:30 के बाद ही कुछ हो पाएगा। बाकी नेचुरल गैस में भी देखते हैं एक ट्रेड। फिर रिपीट कर रहा हूँ, क्रूड ऑयल का ये ट्रेड रिस्की है। 50% चांसेस हैं, एसएल भी जा सकता है, टारगेट भी। हाई रिस्क जोन है, सपोर्ट जरूर है ये, मैं ये मना नहीं कर रहा हूँ, बट ये थोड़ा सा, क्या कहूँ मैं, लाइक एक वर्ड आ नहीं रहा है उसके लिए, तो थोड़ा रिस्की जरूर है, पहले ही बोल दे रहा हूँ। लेकिन नेचुरल गैस में भी एक सेलिंग का ट्रेड प्लान रहेगा। नेचुरल गैस में फिर से रिपीट कर रहा हूँ, क्रूड ऑयल का ये ट्रेड लगा रखा है, रिस्की जोन पे है। ट्रेड बना जरूर है, बट 50% चांसेस हैं, इसलिए लिखा हुआ है हाई रिस्क जोन का ट्रेड। चाहो तो अवॉइड भी कर सकते हो, ले रहे हो तो भाई बहुत कम क्वांटिटी रखना। एग्जैक्ट थोड़ा सा और नीचे आ जाए या फिर ऊपर रेजिस्टेंस पे चला जाए तो ज़्यादा बेटर है मेरे अकॉर्डिंग। ठीक है, जो लोग अभी भी इस ट्रेड में हैं, नहीं है तो फिर लेट इट गो। बट थोड़ा रिस्की ट्रेड है, ध्यान रखना सब लोग क्रूड ऑयल में। लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया 9 लाइक्स पे नहीं रुकना है। डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल एज वेल। सब्सक्राइब भी करते रहो सभी लोग। नेचुरल गैस में भी देखो, जो सेलिंग का ट्रेड है इसका टारगेट डाउन साइड पे अप्रॉक्सीमेटली नीचे लेवल लगा रखा है वैसे तो मैंने, बट People who use AI will replace those who don't, said by Adobe CEO Santanu Narayan. करते रहो guys, don't forget to like the stream. Come on, जिन लोगों ने लाइक नहीं किया फटाफट से लाइक कर दो स्ट्रीम को। फिर रिपीट कर दूं, क्रूड ऑयल में ये एक सपोर्ट जोन ही है, थोड़ा सा हाई रिस्क जोन है। यहाँ पर एक ट्रेड मैंने बनाया भी था ये, बट बिकॉज मैंने बता दिया हाई रिस्क जोन है तो 50-50% चांसेस है, ऊपर जा भी सकता है नहीं भी, 50-50 एग्जैक्टली। ठीक है, तो जो लोग अभी भी बाइंग में हैं या फिर ले रहे हैं, भैया कम क्वांटिटी में लेना, रिस्क बहुत ज़्यादा है इस ट्रेड में। ठीक है, थोड़ा नीचे आ जाए तो बेटर है, या फिर ऊपर रेजिस्टेंस पे आ जाए और बेटर रहेगा। सपोर्ट है, बट जिस हिसाब से ये प्राइस एक्शन बिल्डअप कर रहा है उसके हिसाब से हाई रिस्क की जोन में कन्वर्ट हो गया है।
News when you want it with Bloomberg News Now. I'm Stephen Carroll.
And I'm Caroline Hepker.
Russia's President Vladimir Putin has named a group of low-level officials to join peace talks with Ukraine in Turkey today, while giving no indication that he plans to attend the negotiations himself. President Zelensky had challenged Putin to meet him for talks in Istanbul after the Russian leader offered to resume direct negotiations to end the conflict. US President Donald Trump was asked by reporters on Air Force One about the possibility that Putin might attend.
Well, I don't know, Michelle. I know he would like me to be there, and that's a possibility. If we could end the war, I'd be thinking about that. Now, tomorrow, we're all booked out, you understand, and we're all set.
But you'd go if he goes?
Go UAE tomorrow. And so we have a very full situation. Now, that doesn't mean I wouldn't do it to save a lot of lives and come back. But, yeah, I think they're thinking about something. I don't know that he would be there if I'm not there.
The US President was speaking on Air Force One as Zelensky reiterated his willingness to hold direct talks with Putin, even though he said he had little hope the Russian leader would show up. The Ukrainian leader also said that he would not attend talks unless they were held directly with his Russian counterpart.
Meanwhile, foreign ministers in NATO are gathering to discuss the future of European security ahead of a pivotal summit. The diplomats meet in Turkey this morning to establish the agenda for NATO's annual summit in June, where the US has made a higher defence spending target a priority. Germany's Chancellor Friedrich Merz says the West needs to stand together.
It is of paramount importance that the political West, ladies and gentlemen, does not allow itself to be divided. And that is why I will continue to make every effort to ensure the greatest possible unity between the European and American partners.
Merz's Germany is one of the countries taking on large amounts of debt to rearm. NATO estimates that the US currently accounts for nearly two-thirds of the alliance's defence expenditure, with Canada and Europe funding the rest.
The UK is drawing up plans for a special visa for foreigners who invest significant sums in Britain. Bloomberg understands the plans would focus on getting money for strategically important sectors, including AI and clean energy. James Woolcock has more.
Keir Starmer may say Britain's experiment with migration is over, but his government still seems to want foreign investors to come. Ministers are weighing a new visa for anyone who invests in Britain's strategic sectors. The potential move echoes US President Donald Trump, who has promised a so-called golden visa to anyone who pays $5 million to the US Treasury. The UK's proposal comes after a flurry of wealthy residents have left the country after tax changes. In London, James Woolcock, Bloomberg Radio.
The White House has announced deals with Qatar totaling more than $243 billion, laying the groundwork for a bigger $1.2 trillion economic pledge with the country. Now, the agreements include a $96 billion plan for Qatar Airways to acquire Boeing aircraft and a nearly $2 billion agreement for Qatar to buy US drones. The announcement comes on the second leg of President Trump's tour of the Middle East, during which he's focused heavily on securing investment. Michael Froman, president of the Council on Foreign Relations, says the deals could be pivotal.
I think some of the deals are likely to produce investments here and exports, very importantly, to those countries over the medium term. Some are probably more along the lines of agreement to discuss more investment down the road. And the thing about these investments is that it can take years, if not a decade or more, for the shovels to actually get put in the ground, and very importantly, for jobs to be created longer term. But it's very positive when we're selling more exports to other countries, like the planes and the engines that were announced.
That was Michael Foreman, the Council of Foreign Relations president, speaking there. Meanwhile, a separate US-Saudi defence deal agreed by Trump has been called into question, with critics of the move saying that the deal lacks specifics and may include repurposed agreements secured by previous US administrations. Experts have also queried the country's ability to agree those purchases.
10-year US Treasury yields have been moving higher this month as investors weigh plans by Congress to cut taxes while the government is already running a large deficit. But one veteran investor is suggesting the United States needs a Liz Truss moment. Bloomberg's Ewan Potts has more.
The bill currently moving through the House is set to increase the US government's debt by at least $3.3 trillion by 2034. That's the official view of the Committee for a Responsible Budget. The deficit is already large by any normal measure, above 6% of GDP over each of the last 2 years, levels normally only seen in recessions or wars. And that's left veteran investor Stephen Jen of Horizon SLJ Capital wondering if the US needs to see a repeat of what happened to Liz Truss, with US 10-year yields topping 5%. He says it's not enough to warn people about the ballooning deficit. Quote, they need to be punished. Jen adds, I'm not giving up completely, but I'm conceding that we don't seem to be moving in the right direction, and I'm fearful of what may happen. In London, I'm Ewan Potts, Bloomberg Radio.
In his first interview since handing over the reins of Berkshire Hathaway, the billionaire investor Warren Buffett says he made the decision to step down after finally feeling his age. Speaking to the Wall Street Journal, the 94-year-old said that there was no magic moment when he knew it was the right time to retire as CEO, but he had observed how much energy his successor, Greg Abel, brought to every working day and how his own days had slowed. He said that he did not feel his age until he was about 90. Once he did, the process was irreversible. When asked about staying on at Berkshire as chairman, he said, my health is fine. I get to work with people I love. They like me pretty well, and we have a good time.
The actress Scarlett Johansson has said that Hollywood filmmakers are being, quote, muzzled by big tech guys. In an interview with Vanity Fair magazine, the Avengers star noted that many of the people who funded the film industry attended US President Donald Trump's inauguration. She also said boundaries should be set for the use of artificial intelligence, saying she was angered at how eerily similar one of the voices on ChatGPT was to hers. Last year, the Marvel star alleged that OpenAI used her voice without her consent. The company's CEO, Sam Altman, denied the claims, but did pause the system in response.
Those are some of our top stories for you this morning. Let's get to the markets. So the equity rally wavering. You've got S&P 500 E-mini futures down by 0.2%. Stocks in Asia are falling for the first time in 5 days. MSCI Asia Pacific Index is down 0.3%. US Treasury yields climbed yesterday. 30-year yield briefly touching 4.98 this morning, stabilising since then. You've got markets thinking about the Trump tax bill. Also, recession fears do seem to be abating. The market continuing continuing to price out Fed cuts. So 2-year yields have risen over the course of this week around 13 basis points. Gold has hit a 1-month low, falling more than 1% this morning. Oil tumbling on Iran deal prospects, and also lots to think about for the rest of today. Walmart earnings, US retail sales, and you've also got UK GDP figures today. So those are the markets.
That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Caroline Hepker, and this is Bloomberg.
Looked on kindly.
Is the Saudis are giving us a roadmap for the next 18 months to bring production back, and they intend to meet it, right? And the market doesn't really need all that oil. So I think we're going to see lower prices. We're going to see contango in the front end of the curve potentially, i.e. the spot price may fall below the forward. And now it's going to be a long price war, but it's going to be rather shallow. So I think it's going to be very different. The opposite of the 2020 price war, which was really very short, but also very deep.
Negative. That's very deep.
Negative. Very deep.
That's very deep.
Well, for WTI, for Brent, Brent just went down to 20.
Right? Okay. I forget that detail. Let me. So that's interesting. So you say it won't be such an aggressive price war, but you did say 50 before we get up to 70. So I mean, is 50 some kind of bottom? Goldman Sachs yesterday was talking about, they've done some analysis of when President Trump gets active talking about oil prices, and they say it's when it's in the, he wants it between 40 and 50 is their analysis. Right. Do you think, does that matter to markets?
I mean, I think that's probably a little too low. I don't think we'll get into the 40s for a host of reasons. I think Saudi Arabia needs to also maintain its budgetary position, right? So I don't think they want to drive it that low. But they are trying to get their market share back, and everyone OPEC hasn't really been cutting. So I think probably the answer to me is Brent kind of bottoms out between 50 and 60. And then eventually we see better growth dynamics. We'll probably see more demand because the lower prices go, the more people want it, right? I mean, that's also part of the market dynamics, right?
Okay. Let me pivot towards the European space and grids, renewables, that whole conversation, Francisco, because it seems as if we haven't quite finished that conversation that started when we saw that blackout in the Iberian Peninsula. And we didn't necessarily all get to the bottom of what was going on there, but there was a lot of talk about the role of renewables. You've been writing about this recently. What do we need to know about the role of renewables and grid resilience?
So I think we need to know, the main thing we need to know is we need more backup, right? I mean, there's not enough grid inertia, I think, in some of these renewable heavy grids, right? So, and that requires investment. We are running effectively 10-year-old technology in 100-year-old grids, and that requires a lot of investment in the power sector. So we've obviously done the cheap part, which is to set up the solar panels. We haven't done the more expensive part, which is to look at transmission lines more carefully, which is to look at maintaining the right levels of inertia. And you know, probably you need a nuclear rethink, which is already happening across many parts of Europe.
And are prices okay? Are they high enough to drive that investment?
We think power prices are likely to keep falling because the issue is renewables, right? I mean, there's a technical issue we're talking about. There's also a price issue. Renewables produce power at a marginal cost of zero. So that makes it difficult for everything else to work price-wise. And that may have been some of the problem in the Iberian Peninsula in the days coming into a blackout. Remember, we had negative pricing the days prior across most of Europe because April is a time of the year where we have little demand because it's not very cold, but we have lots of supply because it tends to be pretty sunny. So we ended up with a lot of the thermal plants, or some of the nukes were on maintenance, and that I think left the network with little inertia to meet that oscillation that ultimately triggered a blackout. So that's how we think about it. But the reality of the matter is these power networks are going to require a lot of investment, but also potentially derivative markets to help find solutions. I mean, you have negative pricing for sections of the day in many power markets, and that's telling you have to invest in storage, right? You need more stored power.
Something else that the EU is focusing on, in addition to the grids and the renewables, is the potential of more sanctions when it comes to Russia. And this folds back into our earlier conversation on oil, and bringing down the price cap even further is something that's been floated in Congress if we don't see more progress on potential ceasefire talks in Ukraine and Russia. How effective are sanctions on Russia right now? Is this something the oil market should be caring about, or has the damage mostly been done?
I mean, look, there's always ways to tighten sanctions farther, right? So there's secondary sanctions, and we've seen that creating a certain amount of pain. I mean, I think the hard part here is that Europe is trying to wean itself off from Russian gas, but Russia still remains the second largest supplier of LNG, liquid natural gas, into Europe, right? Still remains a huge supplier of, second largest supplier of oil within OPEC, second largest exporter of crude oil in the world. So that's the hard part, and I think. I think ultimately some of the sanctions have, of course, they do inflict some pain in Russia, but they also end up inflicting pain in European consumers. So that's the thing you need to balance out. And in the meantime, you got to build out this grid that we talked about, renewables, and potentially just look for other solutions. I mean, I think we have to fill the gap. By 2027, 28, things will be easier. There'll be a lot more LNG coming from the U.S., which is where the European Commission has been looking at the end of 27 as the period where Europe can break away from Russian gas. But still, that's still 2.5 years away.
And that lag is concerning for a lot of folks. They wonder if the congressional story comes up before the EU is able to act on it. Talk to us a little bit about the gold price as well. Given all these geopolitical tensions, gold was flying, and now it's not. What's going on there?
Well, I think the gold story is pretty straightforward. It was a very overpositioned, right? I mean, if we look at our global fund management survey, gold was the most overly positioned asset across the spectrum, right? So everyone was long gold, was the trade. But in order for gold to sustain rises above $3,500 an ounce, you need continued investment demand. You need continued central bank demand, Again, we are up about 5% year on year. We think you need to be 10% and above. Remember, jewelry demand is down 20% year to date. And one of the issues in the gold market is that, again, prices have become quite volatile in this run-up. And typically when prices get volatile on the way up, it tends to signal a change in trend. It tends to signal potentially a temporary peak. Now, I'm not necessarily bearish longer-term gold. We still like gold in the long run, but we had a $3,500 dollar per ounce target, and we believe for now the peak might be in, and we might have to see another layer of tensions building up from the U.S. Not the case right now. Tensions are coming down on the trade side, as you know. Yep. The China deal on Monday, I think, has been a big relief for markets. So that's, I think, going to put a little bit of downward pressure on gold for a few months potentially.
35. This chart here, it's not one peak, it's two peaks. You can see it on the screen as well. Right. You've got a double top. Right. Come to just north of 3,400 twice. That's generally not a good sign. That generally tells you that the market is kind of coming up to these levels, finding a problem, and coming back down again. How hard is it going to be to get north of this level? I just from a sort of your experience, how big a line in the sand is that now?
It's a pretty big line in the sand. You need to see another massive layer of geopolitical uncertainty.
Massive layer?
Yes, massive layer.
So it's quite the bar is high, therefore. You use the word massive.
Massive layer, right? So remember, the trend is, trade is coming back together. We have 90 days, right? But so trade is coming back together. So hopefully the global trade system doesn't collapse, and we have some agreements. And maybe, who knows, maybe we have an economic boom coming on the back of this potential trade deals, right? A reordering of trade. So it would be bad for gold, good for equities. And then the other big question mark to my mind is the geopolitics of Russia, Ukraine. I mean, that's one area where things could still get better. Maybe not this weekend as we were hoping, because we've heard that the Russian delegation is not doesn't have the seniority that maybe we were expecting. So that's one area where things could get bad again, right? So again, think about U.S. imposing sanctions on Russia or some other layer of pressure. That could be that's kind of what I refer to, right?
Yeah.
So geopolitical tensions, U.S.-Russia building up. We don't see it right now, but that could be a reason why gold might pick up.
So that's an area of geopolitical tension, and that's an area of sanctions focus. Another one, but sort of moving in the other direction, could be Iran. And I guess we're back to talking about oil here rather than gold necessarily. But, I mean, oil prices down 2% on other media reporting what Iran might be prepared to give up in exchange for reduced sanctions. I mean, where would oil prices fall to if we saw Iran coming back in? I mean, that seems like a far-fetched question, perhaps, but things move quite quickly.
It did. So I think if Iran came in, the backdrop for oil could get more negative quicker, right? And no question. And the Iranians have been still exporting oil. Question is what kind of deal we end up with Iran. In my mind, there will be a deal with Iran, most likely, because I think the Iranians want it. They've had major losses with their regional allies, as we all know. I think Trump's been very vocal as well. President Trump's been very vocal about wanting to bring Iran back into the fold international community, so to speak. I think the U.S. partners in the Middle East also want a stable Middle East. And, everything we heard from President Trump was Middle East peace, 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 right? And so to me, this is an opportunity for Iran. It's an opportunity for Saudi Arabia, the rest of the Middle East countries, and the US of A to come up with a deal. So this is a bearish backdrop for sure. And in my mind, the partnership, everything seems aligned for it, with perhaps the exception of Israel, which has been vocal on the other direction. So yes, there is an additional backdrop there for
Francisco, thank you very much. Thanks for joining us. Francisco Blanch, Global Head of Commodities and Derivatives at Bank of America Global Research. Coming up on the programme, we're watching the read across to the European sports retail space with Dick's Sporting Goods in the United States. It's said to be in advanced talks to buy Foot Locker. We'll talk about that next. This is Bloomberg.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
Are you worried about your borders because of what's going on in Russia and Ukraine? Is that something you worry about in terms of the impact of Russia, Ukraine on your investment appetite for things like that?
I'm not worried about Russia invading Norway anytime soon. We are a member of NATO. We do border to Russia, but now, since Finland and Sweden joined NATO, we feel stronger than before.
So today, what would you say your biggest investment concerns are? You're running $1.7 trillion fund. For the average person not managing that much money, what should they be worrying about, and what are you worrying about?
No, I think you've got two things. One, you have the known unknowns, right? So, and there at the top of my list would be two things. One is inflation, because I think there is an argument in a tight labor market when you potentially decline the supply or reduce the supply of labor. In the US, you put on tariffs. These things can be inflationary, and there could be a moment where, given the high level of government debt, that the investors suddenly decide, you know what, we want a much higher coupon to lend to governments, and so you could see a step up in interest rates, which could be negative for financial markets. Then, of course, all the AI-related stocks. The epicenter here is Taiwan, so you need to watch that. The thing that really scares us when it happens is the unexpected.
Key investment investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
I want to take you straight to Qatar. You're looking at live pictures coming from there. The president is currently flanked by Kelly Ortberg, who is the CEO of Boeing, and Larry Culp, who is currently talking right now, who, of course, is the CEO of GE Aerospace. Both huge recipients of this order that we have just seen coming out of Qatar Airways for Boeing aircraft. Kelly Ortberg is now speaking. He is, of course, as I say, the CEO of Boeing, and the two of them are going to be providing the kit for this order. Making the kit could be interesting. Maybe we just listen in for just a moment.
Be selected by Qatar for this largest wide-body aircraft order in the history of Boeing. Major accomplishment for us, and thanks to the administration for your support.
That's the largest order you've ever had, right?
Yeah, for wide-body.
So one of the largest orders in history, but it almost has to be, if it's the largest order you've had, has to be pretty close to the largest order ever made, right?
Yeah, that's correct.
And you also, Boeing also got the jet fighter. We selected Boeing for the jet fighter, the state-of-the-art, the highest level. It's an amazing looking plane. If it functions as well as it looks, I think we're going to have a big winner. But we're also looking at some additional jet fighters. We have some really good ones that we have. We're taking a look at, strong look from one of your competitors, I must say, and we're doing something very special. But it's a special country. We were losing the Middle East because the past administration didn't handle the relationship properly, didn't show the kind of respect that they deserve. And me, I have a lot of respect, and I have a lot of liking. I like the Crown Prince a lot. I've known him a long time in Saudi Arabia, and the Emir is fantastic. And we're going to another country in a little while, the UAE, a fantastic man, fantastic leader. And they have great leadership talents in this part of the world, and that's why they're doing so well. And you probably read today the story about Iran has sort of agreed to the terms. They're not going to make, I call it in a friendly way, nuclear dust. We're not going to be making any nuclear dust in Iran. And we've been strong. I want them to succeed. I want them to end up being a great country, frankly, but they can't have a nuclear weapon. That's the only thing. It's very simple. It's not like I have to give you 30 pages worth of details. There's only one sentence. They can't have a nuclear weapon. And I think we're getting close to maybe doing a deal without having to do this. There's two steps. There's a very, very nice step, and there's a violent step. The violence like people haven't seen before. And I hope we're not going to have to do this. I don't want to do the second step. Some people do. Many people do. I don't want to do that step. So we'll see what happens. But we're in very serious negotiations with Iran for long-term peace. And if we do that, it'll be fantastic. And for this country in particular, because you're right next door, you're a stone's throw away, not even, right? You're a foot away. You can walk right into Iran. Other countries are much further away, so probably it's not quite the same level of danger. But we are going to protect this country. It's a very special place with a special royal family, and the head of the royal family is two heads of the royal family, really, if you think. Great people, and they're going to be protected by the United States of America, and I think we're not going to have to do it because I believe very strongly in peace through strength. Now, we just gave out in the budget a $1 trillion budget, which is the biggest we've ever done. $1 trillion, never came close to a number like that. We'd be at 800. It would be at 800 billion. Would be at maybe 900, 910. We never got anywhere close to $1 trillion, but we're doing it. Hopefully, we will not have to use these weapons. We make the greatest weapons in the world. We make the greatest fighter jets. We make the greatest, I guess Larry would know better than anybody, but we make the greatest planes in the world, the greatest missiles and defense systems. The Patriot system is the best acknowledged to be. I mean, this isn't from me. And we have a lot of it now. It's under order. And we're coming up with new systems, and we're coming up with a new system of drones, because drones are really, if you look at the war that's going on, it's horrible, but we are watching it very closely, and drones really seem to be taking over that war. And so I hope you're going to come up with some nice, inexpensive engine for a drone so that we don't have to spend so much. I asked one of the companies, I said, I want a lot of drones. And, you know, in the case of Iran, they make a good drone. And they make them for $35,000, $40,000. So I said to this company, I want to see it. They came in 2 weeks later with a drone that cost $41 million. I said, that's not what I'm talking about, $41 million. I'm talking about something for $35,000, $40,000 where you send thousands of them up. And that's a great way. And they're very good, too, and fast and deadly. Horrible, actually. When you look at what's happening with Russia and Ukraine, the drone is killing tremendous numbers of people. You hide behind a tree and the drone comes down and it circles you with fire. You don't have a chance. The tree comes down also, by the way. It's so intense. I mean, you see these trees being knocked down like they're being sawed down by a top-of-the-line timberman, like you know who? Sean Duffy. Do you know that Sean Duffy, the head of the transportation department, who's working right now on the airports and getting a system because Biden didn't do a thing for 4 years, and Pete Buttigieg was the head, and he goes bicycling to work. He takes a bicycle to work. Can you believe he's running the biggest air system in the world, and he takes a bicycle to work? And they say he's going to run for president. I don't see it. Who knows, right? But I don't see it. But when I look at what they've done, it's so horrible what they've done. And the work they did do, they wasted billions of dollars. They're trying to hook up air systems to copper, and they tried to hook up copper to glass, and the glass doesn't work with the copper. And they had 30,000 different contractors doing 30,000 jobs. And when they put it all together, they spent billions of dollars. It didn't even come close to working, and we're going to be giving out a brand new system. It's very important. We'll have the best system, and we think we know who that system is. But we have a lot of bidding. But we want one check. We want a unified system. We don't want to have 5,000 contractors in all different places. Some digging ditches and some not doing ditches because they want to go by satellite. Satellite seems to be the way to go. But so we're going to be giving that out pretty soon. But what people don't know about Sean, because I mentioned lumberjacks, that Sean, you probably didn't know this. That I'm not talking about this Sean. This Sean, no, this is a different Sean. Sean Duffy, the head of transportation. He's a great Sean, though, I have to tell you. But Sean Duffy was the world champion for 5 years, climbing trees and down, up and down, world champion. So that's what you call a serious lumberjack. And he's doing a fantastic job, too. A really respected guy and a terrific guy. And I mentioned the champion because when somebody's a champion, he's the world champion for a long time. He came down, when you come down those trees, coming down at a rapid, he said that started getting you back. You will often break your back. You miss a shot, and you're coming down a lot faster than the human body was meant to come down. But he's doing a fantastic job at transportation. But this has been a very historic trip. I watched some of the people talking about it, and even what I would perceive as enemies of ours, people that are not fair from the press, are saying it's been amazing. We've raised trillions of dollars in investments. There's never been anything like it. And just to finish, we have a country that now has, I think, Howard, we can say that at least $10 trillion of investment and potential investment. And if the past administration did $500 billion, it was like a lot. But we did it in 2 months because it's actually a little more than 3 months. But I always say the first month I had to get a little bit acclimated. So I didn't really do this the first, but when we started, so we've really been doing it, Susie, right, for 2 months. So in 2 months, we're going to have over $10 trillion. No country's ever come close to that. No country. And I want to thank the Emir because he put up a lot, and in terms of investment, it could amount to 2 million, 3 million, maybe even 4 million jobs in the United States. And more importantly, it's really important stuff. It's tremendous refining capabilities. It's capabilities for very high-end. AI is a big subject, and it's a big subject over here, too. I always say, what are you investing in? It seems one thing everybody seems to have in common is AI. So I don't know if that's a good thing or bad. Maybe you shouldn't do it because too many people are doing it, or maybe you should follow the crowd, fellas, okay? So you're going to figure it out. We have a man who's here who has been unbelievable, Scott Bessent, who's our Secretary of the Treasury, and who's so respected. When he speaks on television, it's like everyone just says, oh, okay. I had somebody the other day said, well, Scott Bessent said. I said, well, that's pretty good, Scott. You know? So I'm a believer. But when he speaks, the markets really listen. And the big thing is that we have, to me, the most important thing of all is that, forget about the recent stock market being so good. Much more importantly, we have hundreds of different big companies pouring into America now, creating jobs like we've never seen before. You know, the bad news, it takes a little while for that to, you know, when you build your factory and it takes a year and a half, 2 years, and they're going to build them very fast, and they don't need financing. That's the nice part. They don't need any financing. They have plenty of it. But they're building factories at levels we've never seen anything like it. And these are, you know, 10 billion, 12 billion, 50 billion. I said, how do you spend 50 billion on a factory? We have the chip companies coming in from Taiwan. We have Jensen, as you know, coming in with 600 billion. We have actually the biggest company of them all. You know all about it. Coming in. That was a big Mr. Wei.
फाइनली सपोर्ट पे आ ही गया है, ठीक है। एंड यहाँ पर एक बाइंग का प्लान रख सकते हैं। एक सपोर्ट है, एक नॉर्मल कैंडल ही बनी है, सो यहाँ पर एक बाइंग का प्लान रखा जा सकता है, कोई इशू नहीं है। यहाँ पर प्राइस 2 बार सपोर्ट ले चुका है और लास्ट टाइम हायर हाई बनाया था, तो थोड़ा सा अभी भी बायर बचे होंगे डेफिनेटली। ये नहीं कह सकते कि बायर सारे गए, बायर स्टिल देयर। ठीक है, तो एक छोटा सा बाइंग का प्लान यहाँ पर कर लो, ज़्यादा बड़ा एसएल लेना मत। इतना काफ़ी रहेगा, ठीक है। हाई रिस्क जोन में इसीलिए कह रहा था, यू नो दैट दिस जोन इज वाई हाईली रिस्की। बाकी यूरोपियन मार्केट 1230 हो चुका है, यूरोपियन मार्केट भी ओपन हो चुका है। करंट कैंडल 1230 वाली कैंडल ही है। एंड इतना काफ़ी है फिर उसमें। ठीक है, ये 2 ही टारगेट रहेंगे, देखते हैं। पहला ये, इसके ऊपर निकलता है तो सेकंड ये, तो इसको 2 पार्ट्स में डिवाइड करना। पहला यहाँ तक जाता है और ये फिर अगर ऊपर जाता है तो सेकंड। फर्स्ट इतना ही है। बाकी देखोगे तो स्मॉल कैप आज काफ़ी अच्छा पॉजिटिवली दिख रहा है फ़िलहाल के लिए तो। एंड बाकी इंडाइसेस भी देखोगे, निफ्टी ठीक ठाक मूव किया है, कह सकते हैं स्मॉल कैप ने। बाकी निफ्टी को देखोगे, मैं फ्यूचर की बात कर रहा हूँ, ध्यान रखना, मैं फ्यूचर का ही चार्ट देखता हूँ। तो निफ्टी फ्यूचर मॉर्निंग पे जहाँ पर ओपन हुआ था वहीं है वैसे तो, थोड़ा पॉजिटिव टेरिटरी में गया जरूर था, वापस पुल बैक आ गया, तो फ्लैट है। ठीक है, निफ्टी फ्यूचर 11 पॉइंट पॉजिटिव, तो फ्लैट ही मानेंगे। बैंक निफ्टी भी फ्लैट ही है, मॉर्निंग पे ओपन हुआ था जहाँ पे उसी लेवल के आसपास ही चल रहा है, तो कोई बहुत ज़्यादा मोमेंटम तो नहीं हुआ है। और 55,030 के अराउंड रेजिस्टेंस था, वहाँ से सेलिंग अच्छी आई थी। बैंक निफ्टी फ्यूचर में काफ़ी देर से वेट कर रहे थे, 250 पॉइंट गिरा, बट फिर वापस रुक गया। देखते हैं क्या करता है, नीचे आता है और या फिर यहीं पर साइडवेज हो जाता है। नीड टू सी दोज लेवल्स वेरी केयरफुली इन बैंक निफ्टी फ्यूचर। दो बार सपोर्ट ले चुका है प्राइस, ये थर्ड टाइम आया है क्रूड ऑयल में। लास्ट टाइम हायर हाई बना तो है, तो थोड़े बायर तो होंगे डेफिनेटली। स्विंग के ऊपर नहीं गया तो फिर लोअर हाई बन जाएगा, सीधी सी बात है, फिर ये वीक है, काफ़ी वीक हो जाएगा उस केस में। नेचुरल गैस इन्वेंट्री का फोरकास्ट देखोगे आज शाम को 8 बजे, लास्ट वीक 104 बुलियन आया था डेट, इस वीक 111 बुलियन एक्सपेक्टेड है। मींस लास्ट वीक के कंपैरिजन में ज़्यादा एक्सपेक्ट कर रहे हैं डेटा, इट मींस इट इज़ नेगेटिव फॉर नेचुरल गैस प्राइस। तो जो फोरकास्ट रखा गया है नेचुरल गैस का, वो नेगेटिव है प्राइस के फोरकास्ट के अकॉर्डिंग ही डेटा आता है। अगर फोरकास्ट के अकॉर्डिंग ही डेटा आता है तो प्राइस को गिरना चाहिए। देखते हैं क्या आता है एग्जैक्ट डेटा, भी तो काफ़ी टाइम है। निफ्टी भी फ्लैट हो गया, अब निफ्टी थोड़ा सा पॉजिटिव है, कैंडल ही ओपन इक्वल टू लो बने जा रही है। 15 मिनट की फ्यूचर में देखोगे पिछले तीन करंट कैंडल ओपन इक्वल टू लो, उसकी प्रीवियस कैंडल ओपन इक्वल टू लो, और फिर 10:30 की कैंडल भी ओपन इक्वल टू लो। वेरी हाई लेवल ऑफ एक्सपेक्टेंसी ऑन दिस पर्टिकुलर जोन फॉर नेचुरल गैस, फॉर बैंक निफ्टी सॉरी। इसके नीचे भी देख लेते हैं एक बार क्रूड ऑयल को, पहले एक बार बैंक निफ्टी का भी और देख लेते हैं। इसका तो हो गया वैसे, ऑलरेडी कर तो दिया है। ये इन्होंने कैसे कंसिडर किया है, कैप डाउन में कुछ हुआ होगा, दिख नहीं रहा यहाँ पे। क्योंकि उससे फर्क नहीं पड़ता, तो ये सीधा आगे नीचे आता है बैंक निफ्टी, डे लो काफ़ी देर से रुका हुआ है 54,600, इसके नीचे सस्टेन करता है तो मेरे अकॉर्डिंग 53,978 भी गिर सकता है। ऊपर भी रेजिस्टेंस ले चुका है तो देखना पड़ेगा किस साइड ब्रेक करता है। अभी तो बहुत ही स्मॉल सी रेंज में फंस गया ये 400 पॉइंट की फ्यूचर। क्रूड ऑयल लगता नहीं है अब रुकने के मूड में है। कल ऐसा लग रहा था ब्रेकआउट करेगा, आज लगता है ब्रेकडाउन पे ब्रेकडाउन ही करता चला जाएगा। नेक्स्ट सपोर्ट यहाँ पर अगर प्राइस होल्ड नहीं करता है तो फिर थोड़ा सा और नीचे है, जस्ट इसके नीचे एक और सपोर्ट। वो काफ़ी दूर हो जाएगा लेवल। लेट्स सी और कितना नीचे आता है अगर नहीं रुकता है तो। क्रूड ऑयल इतना क्यों गिर रहा है डिस्पाइट ऑफ पॉजिटिव इन्वेंट्री? इन्वेंट्री का ऐसा कोई इम्पैक्ट नहीं है। इन्वेंट्री पॉजिटिव है इसका मतलब ये थोड़ी ना कि प्राइस ऊपर ही जाता रहेगा, ये कोई थंब रूल नहीं है। इन्वेंट्री पॉजिटिव आई थी कल, वो कैंडल पे इम्पैक्ट हो गया था। मेनली इन्वेंट्री का इम्पैक्ट देखो, मैक्सिमम जो मैंने देखा है 15 मिनट की वो जो कैंडल बनती है ना उसमें हो जाता है, चाहे जो जो भी हो। बाकी थोड़ा बहुत अगर और अगर कंटिन्यूएशन में जाना होता है तो उसकी नेक्स्ट 15 मिनट ही कैंडल कैरी कर देती है, अदरवाइज उसके बाद कुछ खास नहीं होता है। ठीक है, बाकी प्राइस फिर अपने सपोर्ट रेजिस्टेंस पर ही डिपेंड करता है। अगर यहाँ होल्ड नहीं किया तो फिर और नीचे गिर सकता है 5177 के अराउंड। नीचे दो तीन सपोर्ट और भी हैं, बहुत पास पास में ही है, यहाँ पर भी सपोर्ट है। लेट्स सी पहले वाले में रुक जाए तो। बाय द वे 2 बार यहाँ पर आ चुका है, तीसरी बार आया है यहाँ पर। MCX चार्ट में फॉरेक्स का कह नहीं सकते। नेचुरल गैस भी साइडवेज हो चुका है रेजिस्टेंस पर। रॉयल फॉरेक्स में और थोड़ा नीचे सपोर्ट है। MCX में भी है नीचे सपोर्ट, यहाँ पर एक दो दो सपोर्ट एक ही लगा रखा है, इसलिए फिलहाल के लिए मैंने 5177 के अप्रॉक्सीमेटली। लेट्स सी यहाँ पर रुकता नहीं रुकता। इस टाइम तो दो अच्छे प्राइस एक्शन बनाए हैं, बिल्डअप किए हैं इसने। यहाँ पर एक हाई बनाया है, फिर हायर हाई बनाया है, तो थोड़े बहुत बायर तो यहाँ पर हैं पेंडिंग। बट अगर सेलिंग का प्रेशर बहुत हाई हुआ तो होल्ड नहीं करेंगे और नियरेस्ट सपोर्ट की ओर जा सकते हैं। लंदन सेशन शाम को ओपन होगा, अभी नहीं। अच्छा 60 पॉइंट वाला। फॉरेक्स में यहाँ पर भी सपोर्ट था, बिल्कुल यहाँ पर भी सपोर्ट था फॉरेक्स में। बट MCX में यहाँ पर एक ये हाई रिस्क जोन था। MCX में भी सपोर्ट है यहाँ पर, बट ये थोड़ा हाई रिस्क जोन है, इसलिए यहाँ पर लगाया है, नहीं कह सकते। लेट्स सी यहीं से रिवर्ट करता है या फिर थोड़ा और गिरता है। तीन परसेंट 4% डाउन है। क्रूड ऑयल की नहीं, नेचुरल गैस की इन्वेंट्री, क्रूड ऑयल की इन्वेंट्री नहीं है आज। कैंडल अभी वैसे 7 मिनट है क्लोज होने में क्रूड ऑयल की। ये 5230 के ऊपर 232 के ऊपर क्लोज होनी चाहिए। अगर ये 5232 के नीचे कहीं क्लोजिंग हो गई, ठीक है, क्योंकि क्लोजिंग का मुझे भी नहीं पता कहाँ पर होगी, अगर इसके नीचे क्लोजिंग हो गई तो फिर थोड़ा और नीचे आएगा। हाँ, अगर क्लोजिंग 5233 32 के ऊपर हो जाती है 15 मिनट की इस कैंडल की, तो फिर कोई प्रॉब्लम नहीं है। इट मीन्स इट इज स्टिल होल्डिंग। तो थोड़ा ध्यान रखना, इस कैंडल की क्लोजिंग बड़ी इंपॉर्टेंट हो जाएगी। अभी 6 मिनट हैं क्लोजिंग होने में स्टिल। ठीक है, अगर ये क्लोजिंग 5232 के नीचे आ गई तो ये और थोड़ा पुल बैक दे सकता है, ध्यान रखियो। उस केस में फिर हम थोड़ा सा कॉस्ट टू कॉस्ट ही निकल जाएंगे और प्राइस को गिरने का वेट करेंगे। अगर 5233 के ऊपर कहीं क्लोजिंग आ जाती है तो फिर अलग बात है, फिर तो प्राइस डायरेक्टली ही चला जाएगा। फाइटिंग वहाँ पर एक लिक्विड 5232 के अराउंड आई थिंक। गॉट इट। थर्टी सिक्स 35 है आई थिंक ये लेवल ना। लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को फटाफट से, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। थ्री मिनट लेफ्ट, 3 मिनट और हैं। 2 मिनट लेफ्ट। देखो ये अगर नहीं आती है ना क्लोजिंग लेवल के ऊपर तो फिर थोड़ा सा याद रखना है, क्रूड ऑयल में कॉस्ट टू कॉस्ट निकल जाएंगे, थोड़ा और नीचे गिरने का वेट करेंगे प्राइस का। चाहो तो कॉस्ट एसएल पे भी डाल सकते हो उस केस में। 2 मिनट और हैं, क्लोजिंग आनी चाहिए ऊपर। ट्रेड बना है, जरूर बना है, बट ऐसा ना हो कि ब्रेक डाउन ही कर दे प्राइस। वन मिनट इज लेफ्ट नाउ। तो कैंडल क्लोज हो गई है। यहाँ पर किसी ने अगर बाई करके रखा हुआ है एसएल कॉस्ट पर रख लो। ठीक है, अब अगर वापस नीचे आया है तो कॉस्ट टू कॉस्ट निकल जाना, या प्राइस को और नीचे आने का वेट करना उस केस में। समझ में आ रहा है? प्राइस को फिर थोड़ा सा और नीचे आने का वेट होगा। यहाँ कहीं से इसमें थोड़ा सा कॉस्ट टू कॉस्ट के आसपास एसएल जाता है इस करंट रेट में तो निकल जाना, फिर थोड़ा और नीचे आने का वेट करना। यहाँ पर नेक्स्ट बाइंग रहेगी, टारगेट सेम ही रहेगा, टारगेट में कुछ खास चेंज हुआ नहीं है, बट फिर प्राइस थोड़ा और गिर सकता है। कितना आता है नेचुरल गैस पे? साइड वे ही चला गया नेचुरल गैस। कॉस्ट टू कॉस्ट जाए तो एग्जिट कर जाना, फिर थोड़ा और गिरने का वेट करना।
I said, Mr.
Income. I think the market now is mostly focused whether we get additional tax cuts in the U.S. beyond the extension of the TCJA. And that, in a way, I think is one reason why also yields are moving a bit up, because it does look as if there's a lot of ambition to cutting tax beyond that. And that would imply, you live in the U.S. with deficits of 6-7%, with a slowing economy possibly higher.
Yeah.
A debt ratio that continues to go up. And markets are wondering.
कॉस्ट टू कॉस्ट अगर जाए क्रूड में निकल जाना, थोड़ा और नीचे आने का वेट करना, ठीक है? वापस री एंट्री मत कर लेना इस क्रूड ऑयल में। अगर ये निकलता है तो वापस थोड़ा और नीचे आने का वेट रहेगा। चला गया कॉस्ट टू कॉस्ट का एसएल, चला गया एग्जिट, इसमें से निकल जाना। कॉस्ट टू कॉस्ट एसएल गॉन। थोड़ा और नीचे आता है तो यहाँ से ट्राई कर सकते हैं वापस से। उड़ा तो दिया है एसएल।
Are there any efforts in a way to deal with that dynamic?
So when it comes to the real economy, we talked about kind of the tariff versus tax cut argument that the Trump administration is making. Let's talk about a different argument that they're making when faced with that question of yields ticking higher. A Trump official would make that argument that if yields tick higher, it's offset by the lower gasoline prices that you're seeing, the drop in oil prices for the end consumer, even if pricing may get a little bit more expensive. Or is that math that offsets each other?
You have the consumer that consumes and it looks at prices. So if CPI is lower, that helps. You also have a consumer, however, who wants to take mortgages and buy a house, etc. And there, the 30-year rate that your colleague just referred to is very important. So I think, will it offset? It really depends. I mean, but
what are they more sensitive to, though? Is it that mortgage rate, or is it that oil price, the gasoline price, the price at the pump?
Ultimately, 70% of U.S. GDP is private consumption, and private consumption is very dependent on a lot of it is on energy. Longer term, however, if you look at the housing market, if you have a higher 30-year rate permanently, and you have these mortgages that don't allow really for people to refinance or finance new housing, that would have an impact as well. You have to then say really where's the level, where do we end up to make up whether one offsets the other. But they're certainly walking in different directions.
Do you see a cheaper dollar going forward?
The dollar is a good question. There have been so many gyrations. I think in the short term, everyone was always caught on the wrong foot, going into the year thinking the dollar is going to be strong, tariffs add to dollar strength, then thinking, oh my God, the U.S. is so radical that there was a shift out of the dollar globally. By the time everyone got short the dollar, we got the China deal. Now everyone again got wrong-footed, was short the dollar. That's why you saw the shift back. We think in the longer term, there is now a view, I think, among international investors that one may want to be more diversified, diversified out of the U.S. dollar. And I think longer term, that doesn't bode well for continued dollar strength.
Why is that? Is it because they don't trust the United States? Is it because they're worried about deficits? Or is it ultimately that the global economy needs to rebalance? And the easiest way to do that, you could argue, is not via tariffs, it's by the dollar. If you reduce the value of the dollar, you change the whole dynamic. Is the dollar the easiest way to get to the kind of balanced economy that Donald Trump and many within the U.S. administration are ultimately looking for?
There's some debate of that, how much the strong dollar really led to what, the administration, has criticized a lot, the downturn of the manufacturing sector, etc. I mean,
The US is consuming a lot, and one of the reasons it can do that is because of the strong dollar. If you want to reduce consumption, one of the ways you do that is just by changing the dollar dynamic.
The exchange rates are important, and if you look at the dollar over like a 40-year horizon, we've never seen dollar strength in real effective terms. The way we like to look at it. The only time you saw peaks like this was in '85 and in 2001 or so, and we are at a peak now. You would think that is likely now to go in more likely to go in the other direction than to go for the further strength.
So the logical thing to do is to the administration is denying it, but is the logical thing to basically say to your trading partners, we would like a weaker dollar.
Yes, that would be. I would doubt, however, as I said, that the U.S. deficits in trade are really driven that much by the dollar. There's a saving investment balance, and I think the U.S. is not addressing that one.
Yeah.
And taking us back to trade then, Christian, I was just looking at lines, the EU's Maros Sefcovic, who of course manages the trade brief, talking about how he's going to meet with Howard Lutnick, and he's had another call with Lutnick yesterday. We've had our expectations managed about how slowly we get to a Europe deal on trade. How much does it matter to Europe? What's the sort of downside for the European economy that you're pricing in if we don't see a deal done on trade?
The downside is quite large, and Europe, in a way, seems to be at the very end of the queue. They keep emphasizing this. I think the Europeans also don't want to rattle the boat before the NATO summit on the 24th, 25th of June. It's very important for the Europeans, because that whole security issue is very, very key to them, and I don't think they want to upset Trump before that. But then afterwards, there's not a lot of time between the 25th and the 9th of July.
And the 9th of July is when the time expires.
The moratorium ends. That can always be extended. But the rhetoric out of Washington that the Europeans are, I think as Trump put it, in many ways more nasty than the Chinese, all that, I think, indicates that the negotiations will be difficult, but they're important. The European economy has 20% of its GDP are exports, many of them to the US. It's an open economy, and the sectoral tariffs on autos hurt it a lot. We'll see what's coming on pharma, very important for the Europeans. So they have a strong interest in really dealing with this, much more, for example, than the UK economy, which has a trade deficit with the US, actually.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
A free cup of milk a day, up to $13,000 per newborn child, even a marriage school promoting slogans like, "I'm willing to make breakfast, I'm best at doing housework." These are some of the measures local governments in China are trying to boost the dwindling birth rates. The number of marriages in China dropped to 6.1 million in 2024, an all-time low and down 21% from the previous year. China's one-child policy accelerated the pace.
Japan currently has 1.2 children per woman, but China currently has only 0.9, and it will decline. So China's decline speed is much faster than other countries.
At this marriage market in Beijing, parents are anxious to find a potential mate for their adult children. In China, owning a house and a car is often a prerequisite. But many young people no longer want to subject themselves to the financial pressures of getting married and raising children.
For me, buying a house in Beijing is the biggest problem, because personally, I don't want to settle down in Beijing, because living here is really stressful.
Abigail has been running a wedding planning business for nearly 2 decades. She's witnessed firsthand the hit to the now $400 billion marriage industry.
Our peak was probably in 2012. In that year, we probably handled more than 1,800 weddings. Now, most companies, including ours, plan about 100 weddings a year.
Higher educational levels also mean marriage is no longer the default rite of passage to adulthood.
I feel that among the newlyweds who are having weddings nowadays, I can say that half of them are forced to do so, trying to meet the needs of their parents.
And while marriage rates decline, divorce rates have been climbing. This firm started a business getting rid of personal effects to protect privacy. But the demand for destroying wedding mementos, like albums, dresses, and even rings, soon took up 90% of their sales.
We have now served over 5,000 customers, with a daily volume of around dozens of orders.
Beyond the wedding industry, analysts warn that declining birth rates will have important implications for China's retail sector.
The biggest consumer is children. It's a biological instinct for parents to spend money on their children. Therefore, the more children there are, the stronger their consumption power will be.
That's one reason the Chinese government is pledging childcare subsidies and free preschool education to boost the birth rate and reduce the demographic drag. Whether or not these incentives will be effective remains to be seen. But analysts expect more nationwide fertility benefits to be rolled out this year. Min Lo, Bloomberg News, Beijing.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations.
You said a little bit earlier, this notion that it's hard to see whether this is a one-time hit to inflation or whether it's more persistent. Ultimately, what do you think?
I mean, ultimately, any effort to force manufacturing back onshore into the United States is going to be inflationary. There's no doubt about it. And what frustrates me on this is that one of the reasons that Trump won the election was the American people had had enough inflation. They wanted a break from seeing their standard of living deteriorated by the ever-increasing price of goods and services. And so I really do think that the president needs to think long and hard about the necessity of helping to protect the standard of living of the American people by keeping the inflation, like, it's not a genie, it's like the inflation devil in the bottle.
So what does this mean for Fed Chair Powell? How difficult does this dynamic make his job, and do you think his job is secure through May of 2026?
I got to tell you, I'm really happy not to have his job. Like, he is the biggest no-win job in the country, because through the lens of hindsight, we will always be able to second-guess every single decision he makes. Right here, right now, he's grappling with, do you cut rates as the labor market shows ever so slightly signs of softening, or do you hold the course because of the risk of an inflationary spike coming from tariff increases? He's going to have to make that decision based upon evolving policies over the weeks ahead. It's a really tough predicament he's in right here, right now.
Ken, it sounds like you have doubts that the American economy can be easily transitioned into a manufacturing one. What are the chances of making that work? And do you think that it's a realistic goal?
I mean, look, there's a great video clip from Dave Chappelle, and it goes something like, Americans want to wear Nikes, not make Nikes. And I think he's spot on. I don't understand why we think it's a virtue to bring back to America low-skilled jobs in manufacturing. I completely agree with the president. We need the ability to ramp up our manufacturing base to strengthen our national defense. Spot on right. But I don't think the American people are looking for a return to low-skill, low-paying manufacturing jobs in our country. I don't think they want those jobs. I think they want jobs where we are building high-value-added products, successful businesses building high-value-added products where you can create jobs in that factory floor that are well-paying jobs. Those are the jobs we should aspire to create in our country, not jobs that right now China is actually trying to move to other, even lower-cost labor countries. Why do we want those jobs here in America?
I'd love to see this from your position leading Citadel, and also your message to Citadel Securities employees. What do you tell them to navigate all of this volatility?
So I will tell you that for my portfolio managers, it has been several really challenging weeks, because every couple of days there's another big headline on Bloomberg that we need to react to, and we need to reshape our portfolios with respect to. It's been a really difficult time for fundamental investors, because so much of the value of the companies that we invest in is being dictated by very quickly changing policies from Washington.
So your best way to navigate that?
I think in retrospect, perhaps holding cash would have been the best way to navigate this, but that's so contrary to our culture of always trying to be on the offense, always trying to find ways to create value in the markets.
Is there something fundamental that's changing about the way you approach markets?
Look, I fundamentally believe that this period of instability that we're going through will come and go. Like, fundamentally, I believe that as the Trump administration moves through time, as policies become solidified, the economic backdrop against which one invests capital will become easier once again.
Now, when you look at the tax bill, it looks like the direction of travel is such that you have $4 trillion in tax reductions, but $1.5 billion here in spending required. 1.5 trillion, very sorry, trillion with a T. How is that going to close the U.S. deficit?
Well, I mean, what's clear is that the numbers that we talk about in America are almost incomprehensible. Billions and trillions. I mean, it's just unbelievable how big government in Washington has become. And I think one of the areas the Trump administration is focused on is how to reduce the scale and scope of spending here in the United States, whether it's the efforts at DOGE or the debates that are happening right here, right now as we speak, about, for example, Medicaid and the cost of Medicaid to the states. The Trump administration is really thinking about how do we help to solve our nation's spending problem. And then at the same time, they're grappling with what is the right tax policy that helps us to pay for the promises that we've made to the American people, and yet ignite the maximum amount of growth that we can achieve in our economy. Because when it's all said and done, the only way the United States will solve for the promise it's made to its people is for us to far more rapidly grow our economy.
What role is deregulation going to play in that?
Well, I mean, deregulation is clearly already one of the huge accomplishments of the Trump administration. And why do I say that? Because the onslaught of new regulation has stopped. That in and of itself has been incredibly powerful for corporate America, the ability to focus on growing your business again without worrying about what new rules can be imposed upon you from Washington. Now, having said that, the efforts to deregulate are going to be more slow because it takes time to re-underwrite why was the regulation put in place to start with. How does this regulation serve the interests of the American people? It takes time to thoughtfully deregulate our economy.
Now, your companies have a footprint all over the world. Are you seeing investors hedging against U.S. instability, diversifying away from U.S. stocks or even U.S. treasuries, given the changes and the uncertainties that still exist around them with the administration?
I think there's been two very strong realizations by investors around the world. First, there was a bit of a knee-jerk reaction to pull back from the United States, to be anxious about investing in America given the stance and changing stance we took in areas like trade. But then there's also just a realization that no country in the world enjoys the rate of innovation and commercial development that we enjoy here in America. And so you have these two competing arguments that investors around the world are grappling with. Is the United States going to be a reliable ally and economic player in the world markets? And compare and contrast that with the reality that if you take a step back, no country in the world, other than perhaps China, comes anywhere close to America in terms of the rate of innovation and creative energy that goes into growing our economy.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Mann with Annabelle Jewelers.
Our top story is cautious trading in Asia despite gains on Wall Street driven by U.S. inflation data showing little impact from President Trump's tariff barrage.
NVIDIA extending its rally on a White House plan to dump Biden-era chip curves that wrangled allies while keeping restrictions that target China.
Also on the program, Wall Street banks raised their forecast for China's economic growth this year, citing the trade truce with the U.S.
Plus, China tech earnings in focus as JD.com surprises investors with its biggest jump in sales in years. Next on deck is Tencent, China's most valuable company.
All right, taking a look at the market action this Wednesday morning and US stocks. I mean, it's pretty exceptional. We have erased the losses on Wall Street this year. What trade war is maybe what some investors are asking this morning. In Asia, look, it's a little bit more muted. You can see there broadly we've got the MSCI Asia Pacific Index sitting flat this morning. So investors are sort of a bit in wait and see mode. But take a look at Taiwan just coming online, 1.4% to the upside. Certainly reflects what we saw overnight, which was the chip makers leading the rally. Across assets as well, one to note, because we're just watching yields pretty closely this morning. We had that US inflation data coming through overnight. The print cooler than expected. So it does seem that companies, they're not really passing on the cost of tariff to consumers just yet. TSMC there you can see 2% in the green. Let's change on. That's really sort of the upsides for the markets this morning. Of course, there's always some sort of downside to it as well, and you see that reflected Golden Dragon Index yesterday in the session as well. Investors are really thinking now, do we even need so much stimulus in China? And so that is being reflected. Earnings to note as well, because Golden Dragon Index, US listing, JD, of course, we had those numbers, gains there of more than 3%. But essentially, fastest pace of revenue growth we've seen for the company in a couple of years now. I think going back 3 years, actually. Going to get more details later on that competition we see between JD and Meituan in the food delivery space. Futures ahead, look, it's fairly muted again for the Chinese session. But as you said, Yvonne, it's also that focus on earnings. We've got JD, but coming up, we've got Tencent, for instance, Alibaba as well to end the week.
Yeah, we're certainly going to be looking at these earnings calls, what the CEOs are going to say about tariff, the impact, and how this is really going to play out. And then is it going to continue to spark in this HS Tech rally that we've been seeing of late as well? We do have some breaking news to bring to you when it comes to Peru. Now, we are learning that the Prime Minister, Gustavo Adrianzin, has resigned ahead of this censure vote. So this is what we have been hearing from earlier local reports, that they were organizing this transfer of power, and they are deciding between two names, according to some local media. But lawmakers did file that proposal to fire Adrianzin last week, following, of course, those violent incidents in the mining area. So that is the latest, and we're hearing from the Prime Minister of Peru. We'll get to that a little bit later once we get more information. Let's talk a little bit more about the markets and why we're seeing this rally underway, right? U.S. inflation, basically, we did see soften for a third straight month. That certainly is helping when it comes to what the Fed could do. Maybe that gives them a little bit more leeway and maybe pushing back now those expectations of when we could actually see those rate cuts. I believe Barclays was the one that's saying only just one Fed cut this year, maybe pushed back to December, they say.
Yeah, certainly it does seem that that Fed path has been pushed along, and really there's a lot of uncertainty. Of course, this trade truce, it's only for 90 days, and we don't really know what's going to happen between now and then. But two things really at play. You've got those companies that aren't passing on the cost to consumers. Yep. At the same time, you're really seeing consumers start to pull back, and we saw that softer services side. So people aren't really going out so much to spend on things like leisure and travel as well. So US inflation there, you can see in the chart, slowing, lowest we've seen now going back 4 years. And we're going to get more on this, of course, just in a few minutes from now. AIA Group is going to be joining us up ahead, talking about market strategy, trade ties, of course, between Washington and Beijing. The reset, perhaps. But President Trump, he has been in the Middle East as well, speaking with the Saudi Crown Prince, Mohammed bin Salman, announcing a pledge for what the president says is $1 trillion in commercial deals. Now, there is some doubt maybe around that figure, but it does include almost $142 billion worth of weapons sales.
We have the best military equipment in the world by far. That is undisputed. Our fighter jets, our missiles, our systems, our Patriots, everything. We have the best equipment. And beyond that, you're purchasing planes, you're purchasing a lot of different things, and I appreciate it. And you said, if you think 600 billion, but the 600 billion knowing you will be $1 trillion.
Today we are working on partnership opportunities with $600 billion, including agreements worth more than $300 billion that were announced in this forum. In the coming months, we will work on second phase to finalize the remaining agreements to raise them to $1 trillion.
Yep, and President Trump's visit to the Middle East has opened a floodgate of AI deals with the likes of NVIDIA and AMD, planning to spend billions of dollars in the region. Let's bring in our Bloomberg executive editor for global technology, Peter Elstrom, joining us now with the details. Peter, it's great to have you here back in the region. How big of a deal is this?
This is a very big deal. I mean, at a high level, it's a sea change, really, in U.S. policy towards some of these countries and their access to American technologies, including AI. The Biden administration had implemented implemented a series of curbs on what foreign countries could buy, especially AI chips. The most advanced ones are made by NVIDIA, of course. And the Biden administration had a very complex approach, a framework that they passed the last week in office, where under this rule called the AI diffusion rule, there are 3 tiers of different countries. You get different access to different levels of chips under that framework. The Trump administration has now just thrown that out, and instead they repealed that formally just this week, and instead they're going to do these bilateral agreements. What we saw during this trip is that they're striking deals now with Saudi Arabia. They're also going to do this in UAE. We've been able to break some news around that. But the result is that some of these countries that have decided to more closely align with the United States are going to get much greater access to chips because of this. In the case of the UAE, for example, it's probably 4 times as many chips as they would have been able to get otherwise. So it's significant, of course, for the allies, but it's also a big deal for companies like NVIDIA, which are going to be able to sell a lot more than they could have otherwise.
Yeah, and that, of course, was the big concern and the big pushback that we'd seen from Silicon Valley. The concern, though, of course, is when you have these sort of what would have been the tier 2 countries or regions that are getting more access to chips, the technology still has a way to get to China, and that is, of course, what it's all about. So how are they going to be preventing that from happening, or is it even possible to prevent it?
Right. Well, it's a very important point. There have been concerns, especially with the UAE and some of their companies, about whether these chips could somehow leak to China, either directly the physical chips, or they could tap into these computing capabilities through cloud computing in particular. They haven't disclosed any of those details at this point. We don't know what those are. At a high level, they're striking these deals where there'll be more access to these chips, but they haven't worked out some of those nitty-gritty details about how they're going to block China from getting access. That has been raised in Washington, even by some of the Republicans who are Trump allies, allegedly, raising questions about whether China is going to get access to these.
All right, Peter, thanks very much for joining us. And, of course, you can have lots of reasons to be coming back to the region as well. But that was Peter Elstrom there, Bloomberg's executive editor for global technology. Counting down to the open of trade, of course, mainland China, Hong Kong in just about 20 minutes from now. Earnings, the big focus this morning, JD.com. Of course, we saw it rising on Wall Street overnight. It is indicated to pop around 5% at the open in just a few minutes from now. Best pace of revenue growth we've seen going back 3 years. This is The China Show.
I think in retrospect, perhaps holding cash would have been the best way to navigate this, but that's so contrary to our culture of always trying to be on the offense, always trying to find ways to create value in the markets.
Citadel founder Ken Griffin there commenting on the recent market volatility due to the trade war between the U.S. and China, talking about cash might have been the best play during this whole tariff volatility and like. Let's bring in Mark Cohen, AIA Group CIO, who was also overweight cash during these turbulent times. I got to wonder, though, you've been kind of neutral to equities,
yes,
on credit, duration, I should say, underweight credit.
Underweight credit significantly, yes.
That was during Liberation Day. How are things changed now that we have seen at least tensions?
Yes, at least on the surface, it seems as though there's a pause in the market. Volatility's come back down. VIX is below 20, having spiked above 50. We were just talking about that. So now it's an opportunity to take another look at the portfolio. I think last time we chatted, we talked about what do you do in a period of heightened volatility. Don't take any extreme bets. Make sure your book is pretty balanced. So equity weightings across sector, across markets, nothing extreme. I think now with the market moving up in the US, our overall view is the US economy will slow this year, continue to slow. Not necessarily a recession, but will slow. And therefore, we're reweighting, taking the opportunity to reweight further outside the US, taking opportunities in other markets, but also generally slightly underweight equities.
So what are the opportunities then that you're seeing in the other markets?
Well, believe it or not, the A-share market, we see some value there. In Europe, though, a lot has already been priced in. Emerging markets have done well. Underweight credit in favour of govies, cash. So basically keeping the risk broadly neutral, but slightly underweight equities. From a macro point of view, our models are telling us something very different. They're telling us to sell equities significantly. But the earnings season looks like it's holding up reasonably well.
You also have a call about we might actually see wider credit spreads.
Yeah, no, nothing dramatic.
Okay.
We're not expecting a blowout, but we've been working off very, very tight spreads. So naturally, in a cyclical environment, you're going to see those spreads move out a little bit. We've seen a steepening of the curve, normalization of the curve, you might say. So generally underweight credits, and we still have building up positions in privates, particularly private credit.
We're just getting President Trump actually speaking in a Fox News interview, saying that they've got the essentially the framework now for a very strong deal with China. At the same time, there's other people that are saying this is something that could take 2 to 3 years to hash out. So what happens over the next 90 days? And also, what do you think beyond that if we don't get something that's really clear-cut in this sort of time?
Yeah, very difficult to see us get anything really clear-cut. The headlines are great, though. We saw China's resumed taking delivery of Boeing planes. These are great headlines, boosting share prices, improving sentiment, reduction in tariffs. There's a lot of work to be done. I don't think 90 days is going to be anywhere near sufficient to hammer out an extensive deal. And remember, in 1.0, Trump 1.0, that trade deal was never fully implemented. So there's a revisit of that as well coming. So I think markets are relieved, but I don't think overplaying it. A lot of the good news already priced in, and you can see that sort of reflecting across markets in Asia today.
Yeah, and despite things kind of looking better in equities, the dollar continues to head lower. We had a bit of a short squeeze, I guess, last few days. But what does that tell you about this whole de-dollarization? Is this a paradigm shift? Well,
it depends on your time frame. If you go out long enough, yeah, it's going to be a paradigm shift. But we don't see anything near term. I think the stability of the U.S. financial system, the importance in a global context, that's not going to change overnight. But yes, the dollar will continue to trade lower. It's on a sort of downward trend, and that's going to continue. We've seen the re-emergence of dollar issue in emerging markets, in bonds, for example. But dollar was slightly weaker, and currencies in this region benefiting from that.
Of course, the Taiwan dollar really shocked everyone. I mean, it was Yvonne's first day back from maternity leave, and she came right back.
Two hammering days.
Came right back into that one. But hedging strategies, I mean, given what you're saying about that dollar and the downturn, does it make you rethink anything?
Well, for us, we hedge extensively in the book. So, our rates exposure is extensively hedged. In terms of operational cash, we typically hedge part of it, if not much of it, to make sure that our reporting currency is protected. But overall, if you look at what's going on in the market, not easy to hedge NT dollars, so a lot of proxy hedging going on, and you saw that in the yuan, for example. So I think that will continue. There was concern domestically in Taiwan, where a lot of the positions that the lifers took were unhedged in US dollar securities, in particularly treasuries and fixed income bonds, and some of that was starting to play back. So probably we're going to see a continuation of the strengthening in the NT dollar.
Okay. And is this something that you think will go beyond just Taiwan? I mean, what do you make of these kind of dislocations that we're seeing across
the
region?
Yvonne, it could develop into a major dislocation depending on how far it goes. We've been there before, so it's something definitely you watch. I mean, during that period of heightened volatility, we're in 18 markets across the region. We're running money from 12 different locations. We got in a huddle and make sure that compared our assets to our liabilities with the significant move in rates and FX, that we were basically in line. And a lot depends on your systems, your data provision. So a lot of the work we've done in the last 3 or 4 years has paid off.
Yeah. We've just got the yuan reference rate out. You can see there at the bottom of the screen. But I want to ask about the dollar trend and vis-a-vis the direction of the Fed.
Yes.
What are you seeing this year?
Yeah, we're still seeing 2 cuts this year, June or July being the first. June would be opportune, given that they sort of reforecast their economic outlook. So it would be a good time to announce the first rate cut. What we're seeing is, as the long end backs up, it's an opportunity for us to put on a little bit more duration tactically in expectation that will come down thereafter. So that's a trade that we like. Don't need to take a lot of risk. It's paid off in this period of increased volatility, and it's probably a trade will continue.
Most people think that, given the inflation print that we saw in the U.S., that the Fed's not in a rush to cut, because that tariff impact seems to be at least not as big of a concern anymore.
Hasn't passed through yet.
Yeah.
Businesses have been reluctant to pass on the effect. There was a bit of front loading in terms of imports. That will still come through. Tariffs are still there, so it is inflationary. But if we compare it back to 21, 23, you don't have all the bottlenecks. You don't have the US ports with a problem. You don't have an imbalance in demand and supply of labour. Now you have more supply than demand in the US, and energy prices are lower.
Yeah.
So we don't see that push through in terms of inflation expectations. Probably hasn't peaked yet. We're expecting a peak US inflation about 4%, coming down to about 3% towards the year end. And given that, and given a rate cut and the fiscal announcement probably coming through in October, we're expecting US GDP to level out at about 1.3% for this year by year end, which is below trend but not a disaster.
I'm just taking a look at your notes, and you've got a contrarian view around US bond yields as well. So
Yes.
you talk us through that one.
Yeah, that's, as I was saying, as you see the long end move towards 5%, there's fears that inflation will sort of get ahead of itself and that will continue to break through. We don't think that's the case. We think inflation is anchored, lower energy prices, more of a balance in terms of supply and demand of labour, and therefore peaking and then coming off, and therefore there is an opportunity, a contrarian view, to go slightly long of duration as we go through to the rest of the year.
You mentioned that the opportunities are in China now, A-shares.
Yes.
What's sentiment like now? I mean, are people asking you more questions about how to invest in China?
Well, remember, we're onshore in China,
Yeah.
so we're domestic, so we have to invest domestically. So it makes a lot of sense to hunt out opportunities where you're getting higher yield. We're seeing a lot of work done on cleaning up the supply chains and making sure they're robust given the trade tensions. And earnings outlook is reasonable. So in that environment, we see opportunities. Tech sector in particular.
Yeah, I was going to ask about the tech sector. Do you think that still the DeepSeek effect is playing out? It was kind of interesting because there was so much anticipation that we'd see those better growth forecasts or earnings forecasts, but it didn't really translate that much.
It's a slow burn. As we saw in the recent announcement to try and support the economy, we saw the cut in reverse repo rates, we saw the cut in the prime lending rate, and we saw some measures coming in to boost support for spending, whether it was elderly care or the tech sector directly or agriculture. These are all sort of incremental steps that will support the economy, and it will flow through to different sectors.
Still, though, I guess those changing expectations, how much do we really need to see stimulus? And that's really being hitting
Well, they're going to be
sentiment.
disappointed because I think what we're going to see now is with this 90-day pause, I don't think there's any hurry to take any measures. Let's see how that plays out before we see another round of stimulus.
All right, Mark, thanks so much for
Thank
joining
you
us
very
this
much.
morning. That was Mark Conan there, AIA Group CIO. And again, that stimulus question is something that really played into sentiment yesterday. And we're seeing it again reflected ahead of the open. 10 minutes away from now, we are watching the China show, and this is Bloomberg. All right, we're getting some lines now from Beijing where the Brazil president, Lula da Silva, is speaking at a news conference and really saying basically that they're leaving Beijing quite happy. Obviously, we've been hearing of over 30 trade deals or agreements for Chinese investment in Brazil were signed during this trip between President Xi and Lula. So including the likes of mining, transport infrastructure, ports, as well as cooperation in AI and climate action. And they talked a little bit more about the defense of multilateralism, that they are in a united front on that part. Yeah, and I think it's really that question as well. If you get that breakdown in the relationship between the US and China, China also needs to look to new partners. And the global south, of course, is one of the key ones that can kind of fill that gap. And that detente, though, that we're seeing between Washington and Beijing is also playing into the economic outlook as well, because there's some very interesting calls that we've had overnight in terms of banks lifting their growth forecast for China.
It's interesting. He mentioned here, Brazil will put reciprocity in its relationship with the U.S. Brazil is not afraid of competing with the U.S. There was a lot of talk leading up to this summit that Brazil had to choose between the U.S. and China, and we're clearly seeing where they're leaning towards now after this trip.
Yeah, absolutely. And just on those calls, JP Morgan, Goldman Sachs, so let's just get into them. So JP Morgan actually has upgraded its China 2025 growth forecast to 4.8%.
Yeah.
Previously been at 4.1%, and that is after these trade talks with the U.S. were actually a lot more constructive than they had expected. So growth for the third quarter, or second quarter to the fourth quarter rather, seen at 3% year on year. But again, it's that question around stimulus, and they're saying, you know what, we just do not need it right now.
And the assumption is that the tariff levels have to remain in place. after this 90-day reprieve, right? So that certainly is one assumption that we have to think of. But yes, there you go. By the way, we have UBS coming on at the bottom of this hour, 4%. They're still holding on to that forecast. We'll talk to Yifan Hu about that in just a bit. In terms of the pre-market and what we're looking at in Hong Kong here today, we talk about what the tech sector is going to do. We're focusing very closely on JD.com. There you go, though. We're up about 0.9% on HS Tech is up 1.5%. That is thanks to JD.com. We are actually seeing a pop in those stocks about 4% after, as Bell mentioned, the fastest sales growth we've seen since 2022. We're also focusing on more earnings coming through from JD Logistics. Tencent is up. I think we have Alibaba coming up as well. So certainly there's a lot of focus on the tech sector this week, Bell.
Yeah, I think Tencent and Alibaba in particular, those numbers are going to be really key to understand whether the optimism that we've seen around China's tech sector, whether it can essentially be sustained. And as I was saying before, we sort of had the DeepSeek effect. We didn't see it translate so much into growth expectations or earnings expectations for these companies. But remember, of course, Tencent and Alibaba are also very domestically exposed. They're making a lot of money out of the Chinese consumer. Other names to watch as well, you've got SMIC and Huawei as well. So these are two in the semi space. They're actually doing a little bit better than expected. We did see semi stocks rising overnight, but this is actually something that doesn't benefit these Chinese players, because you've got perhaps more exports really from Nvidia, AMD, other US names going to the Middle East now. You've got the US that's repealing these Biden-era rules and making it easier to export US technology. Chinese semi-names had been the beneficiaries, though, because there was an expectation if the US pulls back, China needs to step up, and you're going to see more investment into these names. But anyway, pretty flat today.
It's lifting all boats, at least for now, in terms of what we're seeing in the chip sector there. But yes, a lot in focus here today. We'll talk a little more about the earnings with BI coming up and really what led to that surge in profit, or at least in the sales when it comes to JD.com. A lot to do with the competition when it comes to the food delivery space, as well, as Bell mentioned. You're watching the China Show. The Open is next.
Welcome back. You're watching the China Show this morning, counting down to the open of markets, and sentiment is looking a little bit better, actually. We had seen futures indicating perhaps we'd see a little bit of weakness. We've lifted off that so far. Some of the reasons for optimism, of course, you've had some upgrades to economists' forecasts for GDP. So this trade truce, that sort of detente, at least for 90 days. But at the same time, you've got those question marks. Okay, how much stimulus is going to be necessary right now?
Yeah, perhaps they don't have to roll out too much fiscal stimulus, at least now that things have at least toned down when it comes to the trade tensions. And certainly that is one to watch. And I think the focus now moves more towards earnings, as we talked about as well. Now that tariff noise seems to have dissipated a little bit, we're going to look more into the economic fundamentals, or at least the fundamentals of these corporates. And JD.com certainly is one of the ones that we're going to be highlighting this morning here. But here's your open right now. We're pretty flat when it comes to your onshore benchmarks here this morning on the CSI 300. We're just hovering around that 3,900 level. In terms of what we're watching out for as well, it's really what comes down to the currency, which has shown some strength of late. But we're watching very closely that fix today was also quite strong from the PBOC. CATL is having a down day. There's been a lot of news about that upcoming IPO next week, and certainly that's one to watch. But it is overall quite slow. But you are watching commodities like iron ore, Shanghai crude catching a bid here this morning. Steel also doing quite well. Copper on the back of that, right? So all these trade deals have been talked about between the U.S. and China and Brazil, for example, as well. That certainly is helping the commodity complex and helping with the whole sentiment here this morning. You flip the boards and watch what's going on in Hong Kong. We talk about that tech sector. Really, that's going to be the focus here today, when you have the likes of Tencent Music, you have the likes of JD.com, all showing pretty good numbers for the first quarter. Revenue did beat estimates for both of those companies. We're watching Samsung. That's one thing to watch, though. Those shares are actually plunging this morning after the first quarter result did miss. There's still a lot of pressure around that company as well. But there you go. Tencent is up next. We're up some 1% there. Alibaba up 1.5%. So the tech sector doing quite healthily well this morning. As we talked about dollar China, we're still hovering on that 719 level as well. And yeah, it seems like property is probably the one sector that is slightly to the downside here today. So earnings. We talk about JD.com. Core business seemed to be good. I think a lot of questions was with the food delivery and how much they're really burning in terms of cash and throwing out those discounts to really continue in this whole battle when it comes to the food delivery side of things. Interesting enough, there was a meeting between the regulator and some of these food delivery platforms too, Belle.
Yeah, absolutely. And I think exactly it goes to your point. You sort of have this competition to the bottom, or the race to the bottom in lots of different sectors in China, but food delivery is one of them. And JD.com, it's a very ambitious play that they're making to compete against Meituan in this space. Chip stocks as well to note, because we're tracking names like SMIC, Huahong. We actually had seen those looking a little bit better in pre-market. Again, you're seeing that translating in the session today. But this is actually a bit of a different story. Still linked, of course, to the broader theme of tech, but we did actually see chip stocks and chip names like Nvidia, AMD leading the gains on Wall Street, because we're seeing the Trump team thinking very differently around how these chip restrictions play out.
Yeah, it's a whole different approach the U.S. is doing when it comes to how they deal with these sort of chip curbs and really taking out some of the Biden era restrictions there. And certainly that does lift the boats of Nvidia and the like. We talk about the amount of floodgates and deals and chips that could be heading to that region now. Let's turn it back to China and really talk more about what this means. I'm bringing up Bloomberg Intelligence equity and strategy analyst Marvin Chen. Also joining us is UBS Global Wealth Management Regional CIO and head of APAC Macroeconomics, Yifan Hu. Marvin, I'll start with you. Tariff reductions across the board, and really it has lifted a lot of boats. But what does it mean for China?
Yeah, I mean, we've seen the initial reaction quite positive because, markets see the tariff reductions as larger than expected. But we think this is kind of like, well-managed expectations, right? Trump floated 80% right before the talks. He floated 60% during his campaign. So now markets are cheering 30%. But, we think 30% is still quite disruptive for Chinese exports, and is still one of the highest in the world in terms of U.S. tariffs. So what the tariff reductions does bring is some temporary relief for investors from the daily back and forth on the tariff rates. But investors will now have to start thinking about what happens after 90 days. There's still some uncertainty around a deal if and when that gets done. And in the end, it's all relative, right? What rates, what deals does the U.S. strike with other markets impacts China as well?
We had President Trump on Fox News earlier this hour talking about having the confines of a very strong deal with China. But what exactly could that look like?
Yeah, so if we look at, the key items from the first trade deal, I think, it could give us an idea how negotiations will go this time around, given that many of the key measures were not met. So number one will be China importing a lot more U.S. goods. In the first trade deal, this was $200 billion U.S. over 2 years. So this translates roughly to doubling China's annual imports from the U.S. Second would be market access in some of the more strategic and perhaps protected sectors in China. Along with that comes IP rights discussions. And lastly will be likely around currency management, how China manages its currency. So we think that, given that, a lot of the framework is in place, a trade deal could come quicker than last time around.
Earnings, that certainly is a big thing. What are you looking out for this time, particularly when it comes to the tech sector, too?
Yeah, so, we did see earnings revisions accelerate during April, likely due to tariffs. But really, this has so far just been offsetting some of the tech optimism from earlier in the year. So far, earnings outlook for China is down by roughly 2% from the start of the year. And this is broadly in line with the rest of emerging markets. So, it'll be interesting to see if this tariff reduction, we see some stabilization in the earnings outlook after this announcement.
All right, that was our Bloomberg Intelligence equity and strategy analyst, Marvin Chen, joining us. Thanks very much for your time. And Yifan, turning to you now, we just heard there around this sort of shape that the trade deal could take and the question mark, of course, of what it means for China's stimulus. But what's standing out to you right now for how Beijing responds and thinks about those discussions with Washington?
I think first it's like a positive surprise, to lower down to the 30% of the tariffs, although it's just for 90 days. So I think for the Beijing side, I think the first will continue to negotiate and try to keep at least not higher than this 30%. And also I think they have the chance to for the U.S. also to cancel, maybe lower the 20% of the fentanyl tariffs. I think then that would be quite positive for the market. And the second, like just as mentioned, like for the stimulus side, in our view, I think for the monetary side, we'll still keep easy. So I think besides the rate cuts, we still expect 1 to 2 rate cuts, and also like 20 to 30% of the interest rate cuts for the second half, and also some support like for the capital market and also for the re-lending. But for the fiscal side, I think its pace and the size, it's really like will adjust against the progress of the negotiation. So I think that for that part, so currently with quite good data for the first quarter GDP data, and also with the progress, we think probably the pace of the stimulus will slow down. I think the plan is there, including supporting for the consumption, for the elderly, for the infant, and then maybe some of the real estate projects. But I guess the pace will adjust.
Now it's the race to import stuff, right? I mean, in these 90 days, how much front loading could we see, and what's going to happen afterwards?
I think the front loading, we will say, for this, for the second quarter, not only for China, for the whole Asia, I think the exports will surge, for the front loading. And then I guess, depends on, the negotiation. So I guess, among Asia countries, probably, for Japan, Korea, maybe India will come out the final results first. So that could set up some, a standard for the rest of the countries. So I guess, for China side, we think that there's a possibility to keep this the rate as 30% or even lower. The reason is I think that China still have the cards on hand, the purchase agreement, just Marvin mentioned, we still have the purchase of agriculture goods, LNG and other goods, and we have the fentanyl control, that's discussion at hand, and also for the issues for the illegal immigrants, return illegal immigrants. We also have the rare earths export control, and we still have the lots of control on that. And also I think the China for the U.S. side, of course, have the tech and AI. I think that the cards on hand. So I think that there is still room for negotiation, because currently we have that regular communication system. So I think that this mechanism can ensure at least a relatively smooth market for the 90 days. But of course, uncertainty is there. But we think the chance of to reach some, maybe at least keep the status quo is very likely.
You know, China is still pursuing negotiations and agreements with other countries as well. And just this hour, for instance, we've been hearing from Brazil's Lula, for instance. I mean, he's saying that the US should have talked to China before taking unilateral steps. But essentially that they've agreed that China will boost its presence in Brazil. So how much can China offset the risk from Trump? And how much of this is sort of permanent, I guess, rerouting that we see into new markets?
Yeah, I think that's also another strategy, another leg of the strategy. So we see China stressing its trade with ASEAN countries, with Latin American countries, and with the European countries, and also stressing for the investment, mutual agreements. So in our view, for the trade side, it's more in the future will be a preferential regional arrangements rather than this kind of global arrangements. And also for China, another side is pushing for the CNY globalization. So that's also very important. I think that yesterday China just signed the agreement with Brazil for the currency swap, and also the China is now is pushing for the digital CNY the system.
It brings a lot of questions about where the dollar moves from here. It seems like Trump's trade policies have really hastened this sort of structural change in Asian markets. You look at equities, you look at bonds, you look at currencies. Do you think that Trump is kicking off a process that has no return?
I think the returns for him, depends on how he count the return. He will always claim he's successful. So I guess for the purchase agreement, we can tell especially for the agricultural goods, LNG, and for maybe the defense items and autos. I guess that could be his gain. And also for some of the investment, for example, for Japan will already agree to invest more, and I think the the TSMC and also like a set plants like in the U.S. So I think that like for the investment and the trade could be like in the short term like his gains. But of course for the longer term, I think his aim is for the supply chain, especially for the manufacturing move back.
Guys, क्रूड ऑयल देखो आ गया सपोर्ट पे वापस, यहाँ से वापस बाई कर सकते हैं. नॉर्मल नेचुरल सपोर्ट है, बाय फ्रॉम दिस एरिया. लगाया उतना ही है, अगर इसके ऊपर जाएगा तो फिर एक ब्लू कलर की लाइन तक रहेगा, एक सेकंड टारगेट. फाइव टू 90 से सेल कर सकते हैं क्या? वहाँ पर कोई सेलिंग का मेरे साइड से ट्रेड नहीं है. बाकी आएगा तो देखेंगे इस एरिया के अराउंड थोड़ा सा ऊपर. यहाँ से बाय जरूर कर सकते हैं. लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम.
Back to the U.S. For that part, we are not sure like if he can succeed.
We've got earnings coming up later today from Tencent. We've also got Alibaba that's ending the week, and we're going to be watching very closely, particularly in Alibaba, what they say about AI, and this all relates back to the DeepSeek effect. And I'm curious for your view on whether you think that DeepSeek effect is still playing out in China, because it wasn't just something that really related to the tech sector. People were saying about the DeepSeek effect coming across all other sectors as well. Yesterday, for instance, I was on the phone, but I was talking with a pharmaceutical company in China, and they were saying how it had impacted their industry. So do you still see the ramifications or the ricochets going out?
Yeah, I think I would view like a DeepSeek is not only one company, not only like for the software application. I think it's an ecosystem. So like a DeepSeek is built up like the AI infrastructure for China and can apply it to many other sectors like pharmaceutical, manufacturing, and that's quite different like from the U.S. Like I think for example, for the U.S. system is like Nvidia ask every countries have to build up its own data center, have to train its own AI. But in China, I think the system is more like an AI infrastructure, and then different sectors maybe can enter or kick in by the hardware. So China is like a combine of the software plus hardware ecosystem. And also plus, I think that for the China side, for the application of the AI, and it's the strength of China.
I was speaking to Amy Lowe yesterday at the New Voices event, and she meant, there are clients that are more interested now in diversifying away from the dollar and dollar-denominated assets. And she mentioned China as maybe the next destination. Where is the opportunities, I guess, do you see in China specifically now?
We recently just upgraded China's tech to attractive. So we also say for the AI ecosystem and also its related sectors definitely will be like the future for China as well. So now currently I think there are several reasons for investors like in China, the AI and also its application. Stable CNY, or even could have the chance of the appreciation. Like our forecast, like for the end of the year is 70.2, next year 70.1, and also like I think that for China side, because its valuation still it's low comparing with the U.S. side, and also it's the market is less relevant to the U.S. So I think not only for like the sector itself and also for asset allocation perspective, I think that China now getting attractive like to the investors.
Yifan, that was Yifan Hu, their Regional Chief Investment Officer and Head of APAC Macroeconomics at UBS Global Wealth Management, and actually just coming back and recapping some of those lines from President Trump's interview with Fox News. It has just ended, but pretty wide-ranging and coming, of course, as we know, President Trump is in the Middle East. He's been speaking at an investment summit in Riyadh, for instance, overnight, but also talking about the relationship between Washington and Tehran and these efforts for Iran essentially not to have a nuclear weapon. So President Trump talking about that, saying he does not want Iran to have such a weapon, but he does want them to make a lot of money here. But he essentially, just to recap, doesn't want Iran to be a nuclear power, which of course is what we've seen in the past. He is prepared to essentially exert maximum pressure and drive Iranian oil exports to zero if they don't.
All right, and more on that, of course, from this meeting that we're seeing between Beijing and Brazil. We are recapping some of these lines from Lula, the president, praising also Trump's approach to Israel's war in Gaza. That's one thing that's just came through. But also talking about what the U.S. should have done, should have talked to China before these unilateral steps. They say more trade is good for everyone, and Brazil is not afraid of competing with the U.S. We got plenty more ahead. This is Bloomberg.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
Chinese EV tech company Pony AI says it's targeting around 2028 to break even. That's after it announced deals with Uber and also WeChat. CFO Liu Haojun Wang told us exclusively about their growth strategy in China and globally as they look to scale up robotaxi production.
You already see our deal with Uber. Actually, it underscores our strategy to scaling up. At the end of last year, we have about 250 robotaxis, primarily running in China, and our strategy is to scaling up. Just about 2 weeks ago, we debuted our 7th generation robotaxi in the Shanghai Auto Show, and we will deploy these robotaxis, new robotaxis, in China first, but also including the global market. So when we are exploring global market, definitely we're looking into the market where would have strong mobility demand, welcome regulation framework, and also strong partnership. So Uber will be one of our preferred partners to exploring these global markets. We are planning to launch a robotaxi with Uber in Middle East first in this year. So I would say definitely you will see more and more Pony robotaxis running in China and other global market in the coming quarters.
When it comes to business viability, when do you expect to break even or even turn profitable?
I think that's a very great question. And also that's why we're rolling out the 7th gen robotaxis, because these new robotaxis are so cost effective. We believe with these new robotaxis, we can prove, first of all, on the UE level, they will have a very good UE economics, break even, even making some profits. So once we have this proof, for sure we'll quickly scaling up with these new robotaxis. And with our larger fleet of our new robotaxis, that definitely will support the company to break even. So that's our path towards viability.
How quickly can you scale up when it comes to this WeChat deal? And is the goal for profitability still 2028, 2029? Do you have a date or a year in mind? Has that changed?
So I believe definitely the scale up will coming from like hundreds at the end of last year towards thousands and then tens of thousands. That's the path we'll take. For sure, this scaling up definitely will take a few years. So we do have, like James previously mentioned, probably like around 22 to 28. That's our target to break even for the company.
Leo, you mentioned, of course, the positive view of what can happen with your China business, but at the same time, because of increasing economic pressures in China, not to mention, of course, the growing competition as well. What are your prospects and the challenges that you could face headed towards that goal of profitability by 28 or 29?
Well, definitely there is up and down in China's economic, but as you can look in terms of mobility service, China is still the biggest one. And also the demand in mobility service is still very, very strong. That's why we do see, in terms of the total addressable market, especially in China, that's still very, very huge. And for that huge market, for a company like Pony to make commercial viable, it only needs a small percentage in the mobility service. Then we can still achieve that goal. And not to mention, we are also targeting at other global markets. So I think the room for us to grow and make commercial viable is very huge.
And that was Pony AI CFO Leo Haojun Wang there speaking exclusively to Bloomberg's Sherry Yan and Heidi Strout-Watts. Now, subscribers can watch us live and see our past interviews on our interactive TV function. That is TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation. Send Bell and I any questions for our guests, for us. You just want to chat? Check it out at TV Go. Plenty more ahead. This is Bloomberg.
Out in the region, we have US dollar is the reference currency. So again, we are looking at both diversifying the currency, diversifying the asset classes into different asset classes like alternative or commodity. So gold is getting very popular.
Yeah, gold, China, even crypto. That was some of the things that we got from Amy Lowe, where some of their investors and clients are really turning to now that we continue to see this sort of dollar selling wave that continues on here today. And certainly, it was a great conversation that we had in the New Voices event last night, Belle, where you and I were both speaking to the likes of UBS and Morgan Stanley and really talking about how this whole dollar de-dollarization trend is going to play out. And I think your guest had a little bit more of a nuanced kind of answer to that.
Well, I think there's also sort of Tina that comes into it. There is no alternative. Yeah. And I think that's also what investors find is, maybe there's sort of questions marks around the US exceptionalism story, whether that's going to be sustained. But at the same time, where else can you put your cash to work? But we're going to have more ahead. You're watching The China Show. This is Bloomberg.
Welcome back to The China Show. Here's a look at the HSI a half hour into the session. It looks like we are continuing to punch some gains here. We're more north of 1% in terms of this equity market. And certainly there has been a lot of optimism, whether it is what we saw in those U.S. CPI print, which did show maybe that tariff impact isn't quite there yet in the data. The Fed maybe have some patience there. And certainly when it comes to these earnings that we're getting through from the tech sector in Hong Kong and the China tech space, that is looking a little bit more favorable too. And maybe it's why we're seeing these gains here this morning.
Yeah, that's right. I mean, take a look at some of those numbers. For instance, we had JD overnight. It rose on Wall Street. You're seeing, again, that sort of proportional gain on Hong Kong or in the Hong Kong listing this morning. JD Logistics a little bit under pressure, but tracking Tencent Music, for instance. Yeah. Tencent Music report today ahead of Tencent. That's the big one we're watching later today. Want to see how that gaming segment is going in particular. At Samsonite's actually a bit of a different story.
Yeah, I mean, the shares are plunging. This is after they missed estimates in the first quarter. And really, analysts are that, they're not quite out of the woods woods yet when it comes to this tariff war. So they continue to face pressure here, and maybe the stock has not really priced in much of this de-escalation scenario just yet. So that's why we're seeing that down some 8%. But we mentioned Tencent is coming up next, Alibaba coming out later on this week as well. So there's still a lot on tap. I think we can push aside the tariff noise for a bit first.
Yeah, it's interesting. It's sort of like the trade war sort of faded back and earnings is really coming to the fore this morning. But take a look how we're going broadly in the session today. We're still positive, a little bit positive, but not really seeing the amount of gains that we saw on Wall Street or that level of optimism. I mean, US stocks have completely erased all their losses now from so-called Liberation Day. Watching Taiwan in particular, because you can see they're leading the gains this morning up 1.5%. Again, it tracks what we had on Wall Street overnight. Chip makers were really in the lead. You're seeing NVIDIA, for instance, AMD cleared now to send billions of dollars worth of technology to the Middle East. So it's really this repealing that we're seeing of these Biden-era chip curbs. What exactly is the Trump administration going to be putting in place, though? The other big story, of course, as you said, Yvonne, really comes back to those US inflation numbers, because it rose by less than forecast in April. And what's really coming across is that companies aren't really seeming to pass on the cost of those tariffs just yet to consumers.
For now, right? So certainly that gives the Fed a little bit more breathing room. And certainly you have the likes of Barclays saying, look, we just expect one rate cut now from the Fed, and it's pushed back to December. I think you're starting to see more of the banks push back their expectations of when the Fed can actually cut now, given that those trade tensions have softened a little bit. Certainly that's one to watch, but there you go, the CPI print there, holding pretty steady and really showing that a third straight month where we have seen prices actually not seeing that much pressure. So certainly that's one to watch here. But the pain trade still remains, right? Can you continue to chase this rally across risk assets, right? And certainly you heard from that Bank of America fund manager survey, and it was 38% of these fund managers are still underweight when it comes to U.S. stocks. That's the most in 2 years. Their exposure to the dollar, the lowest since 2016. Lots of questions to ask for Jack McIntyre, portfolio manager at Brandywine Global. And Jack, a lot of questions about whether, this risk rally has any sort of legs. Can you continue to chase it?
So, Yvonne, we're probably in an environment where there's more questions than answers right now. That buy dip mentality that's been in place for for a few years now. You made a lot of money. We're seeing that unfold right now. Do you chase it? That's a tough one, because certainly given the developments, U.S.-China trade sort of relaxation, the odds of recession have been diminished, not totally eliminated. We've kind of moved beyond sort of, way beyond peak uncertainty with tariffs. But now we've got some other things kind of out there percolating on the fiscal side in the U.S. So I'm hesitant. My mindset is we've participated. We've had good returns. Let's kind of get a little bit closer to home, meaning become a little less convicted right now.
Yeah, I think, for instance, you've got someone like the Citadel founder, Ken Griffin, saying the best place to have been during this volatility would have been to have stayed in cash. And I think it's really exceptional that the VIX is back below 20 when you think it was above 50 just a couple of weeks ago. So how do you exactly invest in, and what's your strategy right now?
So, okay, a couple of things. So being global bond managers, we have the luxury of being able to move money all over the world right now. And, we've been, I'm going to say we're going to be at the forefront, because we were underweight U.S. dollars, and that was our highest conviction. Where we are now, though, we're still underweight, but we've been reducing that underweight. It's a crowded trade, as you just mentioned. We've got to see how other things sort of unfold. It's interesting. I mean, there's a lot of complacency around right now. You mentioned the VIX. Well, volatility in fixed income is still pretty low. I mean, we're starting to see that 10-year Treasury yield test 450. If we get above 450, we'll have to see what kind of response we get in some risk markets.
Jack, do you think that this dominance in U.S. financial markets, how much do you think is really seen to continue to erode? Is it just kind of at the margin? I mean, when you look at a Treasury market, do you think that they still continue to be a supplier of safe and risk-free investments in this world, or do you think that has shifted overall now?
So at the margins, I think it has shifted, and this is what determines prices, things that happen at the margins. I mean, the Treasury market is the deepest liquid market out there. I mean, it's not going away. It's still going to be the bulk of non-U.S. investors' assets. Same thing with the U.S. dollar, but it's not going to be as big as it was. There's this, the diversification. I don't think that's stopping. Central banks are profit motivated. So, and we've seen some good news, but part of that American exceptionalism wasn't just the tech sector. I mean, we kind of ballooned our budget deficit more so than a lot of other countries, and now we have to see how that sort of unfolds as we move down the path of kind of focusing now on the tax package. I mean, the tariffs. I'm not going to say it's old news. It's clearly not. It's still ongoing, but it's not it's like it's not. It might not be the main narrative right now, at least for the next. I guess 90 days, since we're kind of on pause between the two largest economies, the U.S. and China. But next step up now is kind of does the Trump administration push the envelope, trying to do too much in the way of tax cuts, not enough government spending, and how that interplays with the consumption tax, which ultimately is tariffs. So there's a lot of things unfolding right now.
Yeah, let's get into that a little bit more. I love it how you say that maybe trade isn't going to be the main story right now. So what exactly comes to the fore for you? And you're mentioning sort of like how it interplays with the U.S. consumer. What are you seeing there as well?
Yes, Annabelle, it's interesting. In Trump 1.0, it was the tax cuts. The sequencing was different. The tax cuts and then tariffs. This time it was tariffs, and now we're going into tax cuts. So I'm really kind of focused on how this plays out. And we're going to know pretty soon in the House of Representatives. They in May, in this month, by Memorial Day, they should have an idea of what the tax package is that they can shift on to the Senate. So really kind of focused on that part right now, because again, on the tariff side, we're moving in the right direction. So yeah, and again, we are going to get tariffs. So this is 10% a minimum. It's going to influence the consumer, and part of this is how the ability of companies to pass on that tariff. Because if they can, you're going to see some maybe uptick in inflation, which we have not seen yet. But if they can't, maybe inflation remains fairly tame, but then it eats into their profit margins, and the equity market's not going to like that.
And what does it mean for this whole relationship between the dollar and rates as well? I mean, we've seen the breakdown between yields and the dollar of late. I'm just wondering, the bond vigilantes and arguably did box in Trump when it came to these tariffs on Liberation Day. Do you think that they could come back when it comes to the fiscal front?
Oh, very much so. The bond vigilantes have their finger on the trigger. And again, what's interesting is you kind of marry that idea with Treasury Secretary Bessent say, hey, we're focused on the 10-year Treasury yield. I mean, that's kind of seemingly where the put option is. So we've got to see how that sort of plays out. I think what's been influencing currencies this year, more so than rate differentials, is growth differentials. I mean, that was kind of the roadmap we had. Some version of sort of what happened in 2017 when the U.S. lagged the rest of the world from a growth standpoint. I still think that's going to play out. The Fed is certainly, we know that the Fed is not going to be cutting, at least what we know today. The Fed is not going to be cutting as much as what the markets had priced. And meanwhile, the ECB is continuing cutting. So that rate differential could provide a little bit of support for the U.S. dollar. But ultimately, I think the bigger determinant of currencies is going to be relative growth.
Yeah, and I can see, to your point, the Fed is really just in evaluation mode like a lot of other people. But just sum it up for us around the evaluation we have on the U.S. exceptionalism story. Is that narrative still intact, or has it been permanently dented, do you think?
It's been permanently dented, but we're seeing sort of a mini reversal of it right now. Again, I mean, the Magnificent Seven, they took the brunt of the selling. There's some good, probably value anomalies, but this is not the start of a 3-5 year period of American exceptionalism. I think that ship has sailed, and I think ultimately the U.S. dollar is going to continue to weaken over the coming years.
All right. Yeah, certainly one to be watching very closely. That's Jack McIntyre, their portfolio manager at Brandywine Global. And still ahead on the China show, it's these deals that President Trump is looking to make around the world. And that includes, of course, the Middle East, where he's been in Riyadh, of course, speaking with the Saudi Crown Prince Mohammed bin Salman. We'll get more on that big investment pledges that has been made. More details ahead. This is Bloomberg.
Well, President Trump and Saudi Crown Prince Mohammed bin Salman have announced big investment pledges at their summit, although the exact value of the deals is not clear. For more, let's bring in our Bloomberg News editor, Jill Deesis. But certainly there was a lot of optimism, as we heard in these press conferences, and it really seems a sea change in how U.S. policy is towards AI and the relationship in the Middle East.
Yes, well, Yvonne, I mean, first of all, we know that Trump essentially treats diplomacy as deal-making or deal-making as diplomacy here, right? So, I mean, when he's going into the Middle East, a lot of his involvement in the region, I think he really wants to frame around, well, you know, who can we really cut these deals with? So you had that, you know, big sort of press showing between him and MBS where they talked about unveiling, I think they said $1 trillion worth of deals. I think plenty of reason to be skeptical about that figure. That is already kind of the value of, I think, Saudi Arabia's entire gross domestic product. We've seen, you know, some other figures kind of floated around. White House says it's about $600 billion worth of deals. You know, some of the signage at the event suggested maybe $300 billion. But I think the point here is just that, you know, as you said, you really have Trump kind of coming into the region, not really talking about human rights or any other concerns whatsoever, giving this idea of, we'll kind of like let you alone and let you do what you want to do, but, you know, we want to bring foreign direct investment into the United States. You know, we had a pretty big defense contract deal announced, you know, that Trump had mentioned, as well as, I think, really, to me, the big showing here, those, the, you know, NVIDIA deals where you're talking about semiconductors that they're going to be giving to, you know, Saudi-based companies. So I think all of that really kind of shows you that, yes, when it comes to Trump, it's all about let's make a deal, and then any kind of geopolitical relationships will kind of build off of that.
Yeah, so maybe a couple of question marks over sort of the numerical value of what that exactly ends up being. But you mentioned, of course, this deal that NVIDIA and AMD can send their chips to Saudi Arabia. So just dig into the details on that one.
Yeah, Val. So essentially what we've heard now is that you've really got, again, NVIDIA and AMD giving these semiconductor chips to this company that is backed by, I think, the Saudi private wealth fund. So I think really raising some eyebrows there. To me, what's also really interesting is it sounds like there could be some additional details to come, some additional deals to come. A lot of questions about, I think, you know, the sort of wisdom of NVIDIA sending really high-level chips to the Saudi government. I think there's raised some concerns about whether or not that could ultimately funnel its way to China, which obviously both the Trump and, you know, previously the Biden administration have made a lot of noise about trying to prevent China from getting access to the most cutting-edge technologies. But it does, though, indicate, I think, you know, this idea of this partnership of this idea that, you know, Saudi Arabia, obviously, like everyone else in the world, wants access to incredibly high-end technology. The fact that you've got, I think, NVIDIA in particular being like a key player of this, and this, you know, sort of announcement coming right as Trump is in region, I think is pretty momentous, and really, you know, sort of, you know, gives you an idea of the direction of, you know, where, you know, the U.S. is really kind of focusing its alliances right now.
All right, Jill, thank you. Jill Deesis there, our Bloomberg News editor. I want to check oil prices here. Obviously, we've been seeing some optimism, I think 4 days of gains when it comes to oil prices, just given the positivity when it comes to U.S.-China trade at time. You have President Trump's hostile rhetoric on Iran supply as well. Goldman had a very interesting take on this. It's not just about supply and demand, but you really got to look at the social media posts of the president now to determine where oil prices are going to go. So they've been scrutinizing Trump's social media posts, and they say Trump has been focused on oil and U.S. energy dominance, having posted nearly 900 times, and they think Trump favors about $40 to $50 for oil. Interesting take there.
Yeah, very interesting one. And of course, we've got OPEC Plus as well playing into this.
Yeah.
And Saudi Arabia really led them on sort of a simple mission, which was cut production, lift prices, cash in. But certainly we're watching how that cartel also sort of interacts, I guess, with that call. As you said, $40 to $50 a barrel. But the other world news that we're tracking, of course, this morning, still linked to what's ongoing in the Middle East, and President Trump saying that he's going to be looking at lifting U.S. sanctions against Syria. This is following the toppling of former President Bashar al-Assad. The move will provide a significant boost for Syria's new president, whose Islamist rebel group overthrew Assad's regime in December. Trump says his recent discussions with Saudi's Crown Prince and Turkey's president persuaded him to make the move. Israeli President, or Prime Minister rather, Benjamin Netanyahu says he's days away from ordering an all-out escalation of Israel's war against Hamas. Netanyahu says his armed forces are preparing to, quote, finish the job. That's after 19 months of attacks on Gaza. Hamas this week released the last surviving US-Israeli hostage, but still holds 58 Israelis, with fewer than half believed to be alive. We'll have plenty more ahead This is Bloomberg.
The conversation about US exceptionalism and the challenge to US exceptionalism has very often been associated with the Magnificent Seven. And the Magnificent Seven, as much as that leadership in the US has been driven by the large cap or mega cap stocks, it's not synonymous with US exceptionalism. US is still the deepest and highest quality market. There are many areas within the US to traffic that are very interesting.
Well, that was Christina Au-Yung there speaking at our New Voices event last night. And just for people that aren't familiar, and if you are interested actually in applying, because applications are open, but this is a Bloomberg program. It's intensive media training for senior women in finance. And we kicked it off last night with a really great event, really great conversations. You can see there from Morgan Stanley. But you were speaking as well with UBS.
I just love the fact that Christina Au-Yung car drifts. Like
she also does car drift.
That was my favorite thing.
Incredible hobby.
And how she adopts that sort of mentality to how she looks at investment. And I love it all. But yes, Amy Lowe had a lot to say from UBS as well. This whole revival into China, that's certainly something that was echoed from Christina as well. And UBS Global Wealth Management has certainly been seeing this sort of pivot from their high net worth clients, increasingly shifting away from dollar assets and turning into likes of gold, crypto, and the mainland. Their Asia chairman, Amy Lowe, told us why a diverse portfolio is key to navigating the risks.
I think one thing for sure is volatility is definitely here to stay, and uncertainty as well, despite the fact that actually, generally, the market reacted quite positively, and the temporary solution came a bit earlier than expected. And we've been talking a lot to clients lately, and so clearly clients are looking for diversification, looking for advice. I remember I just came back from a few business trips, and in some of the meetings, in one of the meetings, we have 12. The client bought, because 70% of our clients are entrepreneurs, so definitely it has a lot of impact to both their business and also to their investment. So in that particular meeting, he brought along the family office, the whole family office, the CFO, the strategy planning, and the question will be around, what should I do with my investment? How am I going to diversify my business? So I think clearly it has an impact.
You were in Taiwan, right, during that historic surge? What was it on the ground? What was it like among some of the clients that you talked to?
I was there when the NTD went up so much. And obviously, as I said, from the client point of view, they are also looking, because Taiwan primarily is a very export-led kind of economy, despite the fact that the tech sector is also quite strong. So we have a lot of discussion on how we going to help them and support them in diversifying their business. And there are also a lot of M&A opportunity. To be honest, right now we are very, very busy on all the corporate advisory activity. Okay, and that happened in some of the discussion in Taiwan, as well as looking at also diversifying their portfolio, because out in the region, we have US dollar is the reference currency. So again, we are looking at both diversifying the currency, diversifying the asset classes into different asset classes like alternative or commodity. So gold is getting very popular.
Okay.
And also looking at NTD, what are they going to do there? And then also looking at succession planning, and met a few of the next gen who are now in the picture running the family. So then the topic like setting up of the family office and also learning how to diversify is.
So is that the theme now, to diversify away from dollar and dollar-denominated assets? And where to?
I mean, into other asset classes like even crypto, gold, and also looking at other currency. Because as I said, bulk of our clients almost 100%, if not 90, 100%, are in dollar. So looking at also some other currency. And in the past, it's also quite U.S.-centric.
Yeah.
So I've been also observing and witness some of the diversification out of the U.S. portfolio, 20-30% to Hong Kong, China. And I mean, you all know, in the last few years, it was a very difficult year and market in China, in Hong Kong. Whenever we talk about China, they almost want to shut me off. Don't talk about China. But now, in recent months, going into some of the international conferences, they will ask me proactively, Amy, what are some of the investment opportunity in China?
Yeah, great conversation between Yvonne and the UBS Global Wealth Management Asia Chairman Amy Lowe there. But taking a look at some of the moves in the session so far today, Baidu is one that we're watching. There's actually just been an announcement or reporting rather from the Wall Street Journal in the past 30 minutes or so, but essentially that Baidu is preparing to test its driverless ride-hailing services for the first time in Europe. So it's going to be its latest efforts to expand overseas. Of course, it's really that rising competition we're seeing within the mainland market. China shipping stocks, port stocks also in focus, and this is really that de-escalating trade tension story. We're going to see a lot more exemptions on lots of different Chinese exports to the US, for instance, and again, these are the big beneficiaries.
Yeah, the shipping rates are going to shoot up. That's sort of the assumption here, just given this massive amount of front-loading that might happen during this 90-day cooling period between the US and China. So certainly we'll watch the shipping space very closely. We're also watching some of these Korea solar stocks as well. There's been a lot of talk about this space. There you go. We're up about close to 10%. So they're tracking some of these U.S. peers that we saw in the U.S. session on these earlier draft rules. Those seem to be favorable for the likes of the solar stocks like S Energy, that's up some 13% in Seoul right now. We got plenty more ahead, breaking down some of the tech earnings out of China coming up next. This is Bloomberg.
It's 11:29 a.m. in Tokyo. Japanese markets just about to go into their lunch break. Broadly in the session, you can see that we've got Asian equities that are still holding in positive territory, and that's probably actually really the China story. Japan, though, is under pressure today, and it's interesting because we were speaking with Jack McIntyre from Brandywine Global at the top of the hour, saying tariffs have sort of faded a little bit, but what's coming to the fore this morning in the sentiment is really earnings. And in Japan, we've had Nissan, we've had Honda, both of those stocks really under pressure so far today.
Yeah, I mean, and obviously the auto sector is very much engulfed in this whole tariff impact and this whole trade war,
I guess there's
right?
always a way to link back.
Yeah, so I mean, at least you got to look at what the commentary has been from some of these CEOs and what pressure they face moving forward. But certainly we're watching the tech sector in China because there's a lot of talk about what the earnings picture is going to look like. So far, it's been pretty favorable for the likes of JD.com, Tencent Music. Tencent set to report later on here today as well. We did speak to Mark Conan from AIA Group earlier about what he's expecting for the earnings season.
We're onshore in China, so we're domestic, so we have to invest domestically. So it makes a lot of sense to hunt out opportunities where you're getting higher yield. We're seeing a lot of work done on cleaning up the supply chains and making sure they're robust given the trade tensions. And earnings outlook is reasonable. So in that environment, we see opportunities, tech sector in particular.
Yep, more on the earnings season now, and JD.com, we talked about the revenue growing at its fastest pace in 3 years after those stimulus measures from Beijing. And then Tencent reports today and projecting to sustain that steady pace of growth despite the domestic economic turbulence. So for more, bringing our team from Bloomberg Intelligence, senior analysts Catherine Lim and Robert Lee. Catherine, I'll start with you on JD. It looks like they're making some inroads in the food delivery sector. You have also these consumer subsidies really helping as well. What stood out to you?
Yeah, so JD.com is definitely benefiting from, the subsidies that we're seeing into electronics and home appliance. This is a key category for the platform. And then notwithstanding, they are now going into food delivery that is benefiting from, the additional spending on services within China. And really, I think this year, when we talk about consumption in China, it's within the country. Previously, a couple of years ago, it's talking about expatriation of Chinese consumerism. This year, we're talking about repatriation and everyone spending in China, which is good for platforms like JD.com. And the delivery, we've seen the government intervention overnight as been announced. So I think it's good for new players like JD.com, level playing field. So, we definitely can see more driving the revenues for JD.com in this space.
Yeah, talk us more in detail about that government regulator meeting and why exactly it needed to be called in the first place as well.
Yeah, so, it wasn't too long ago last month that, we saw on social media, they, being JD.com, Meituan, writing messages that seems to suggest that they are not really cordial and, there were suggestions of exclusive agreements that is barring dining merchants from going into each other's platform. So that's not great. And, definitely the anti-monopoly watchdog, caught that and decided to actually have a talk with them. So all in late April, obviously, Ele.me by Alibaba, they're not going to be sitting there and waiting for JD.com to take market share from their food delivery business. So, they've actually joined in the entire, I would say, chaos and party. And we start to actually see a 10 billion subsidy program coming from Ele.me as well.
There's a lot of concerns about the cash burn for JD, how much they're spending on these discounts and cash coupons to get people onto the food delivery platform. How sustainable do you think that sort of strategy is going to be for JD?
Well, I guess overall, if you actually look at the e-commerce business, whether it's food delivery, whether it's, just selling things on platform, it is a very cash-generative business. So every quarter, you're going to actually see that swings in the cash flow. For JD.com, relative to Alibaba, and I'm sure, Rob can actually add on that, they're not quite into that whole big AI and cloud yet that requires a lot of the, cash and capital. More importantly, let us not forget that there is still the listed entity of JD Logistics and JD Property, I believe, or JD Industrials that's actually pending listing in Hong Kong.
Yeah, well, Robert, exactly. Let's go to you on that because AI probably isn't going to be sort of one of the really standout areas to watch. It's more on that gaming side, right, still for Tencent later today?
Yes, I think realistically Tencent's business remains driven by games, driven by advertising, a little bit of fintech, and obviously underpinned by its position as the ubiquitous, a go-to app within China, WeChat. That's the reality of it. So I'm sure there will be a lot of talk about AI and the potential opportunities that it may bring in the long run, and also the scope to realise cost or efficiency savings in their business. But I think, we're unlikely to see any major surprises. It will be a relatively steady, solid set of numbers, but lacking surprise. Famous last words here. Not wanting to tempt fate. I think that's the nature of Tencent's business, isn't it? It's a very defensive play. They've got market leadership. It's quite a well-diversified business. It's not exposed to the intense consumer pressure that we see, obviously, in e-commerce or have seen in e-commerce. So, I think going into the numbers, they'll be solid, but, maybe not making such screaming headlines in the morning.
We could use a break from those. When you take a look at the external threats, though, I mean, with tariffs, how exposed is Tencent to U.S. tariffs?
Okay, well, ultimately what they sell, or two things, really, it's service-based, isn't it? Computer games and obviously advertising and things that relate to their social media app. They're not selling physical goods, so therefore they've escaped the tariffs on that front, and their exposure to U.S. tariffs is relatively limited. And the other thing is, most of the business is domestically focused, so again, it's outside the scope of US tariffs. So I think that's one reason why you've seen the stock price, outperform or perform relatively well compared to its peers. And, financially, it's a more defensive play. So I think we'll see with the, incumbent US president, because you never know what may be coming the next day. But, they're relatively well insulated from tariffs.
Yeah, and we had that, of course, that big embrace of China's tech scene as well earlier this year. But how does this all set us up then for going into the second half of the year, and what's going to be sort of the outlook, or what are you going to be watching for in the guidance?
Okay, going back to the comments I said, quite a well-diversified defensive business. So I would imagine the outlook into the second quarter and even into the third quarter looks fairly solid. There's some seasonality in their video games business. Again, that looks good. However, I think there is some, risk. I don't want to overplay it or But in terms of the fourth quarter outlook, because ultimately they are dependent on sentiment holding up both in the corporate sector and in the consumer sector. Obviously, near term, I would guess a lot of people have said China's come out quite well from this tariff conflict, but that has led to, it has had an impact. The impact is not zero. The tariffs on China are higher today than they were, 6 months ago, and that is going to be a drag on economic growth. So I think there is a question mark as to whether that impacts sentiment and confidence in the consumer sector and in the corporate sector into the tail end of the year. And if that does come through, I don't think we're going to see a calamitous collapse at all in any of Tencent's business, but I think there is scope for maybe weakness on our advertising business, which is quite economically sensitive, and also their fintech business. Games as a whole is more slow and steady, in times good or bad. Your hardcore gamers like David and, is probably in his bedroom on his Xbox or whatever. So that's quite a defensive business, I would say. But anyway, I think, again, it's a defensive business. The chance of any major surprises either way is quite low. But, we need to keep an eye on the economic barometers and certainly into the fourth quarter.
All right, David, gaming in his bedroom. Well, you can be as if you're not, Dave. Let us know if you're listening. But Robert, of course, very busy day ahead for you with Tencent numbers. That was Robert Lee there from Bloomberg Intelligence. And Catherine, it's not over yet because we've got Alibaba coming up later this week as well. But it really is, in the China tech scene, very much coming back to the DeepSeek effect. And really great story coming up because it's that sudden emergence of the Chinese AI play, of course, how that's also thriving despite the US efforts to slow it down. So more on this big take coming up. You're watching The China Show.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Well, 6 months after DeepSeek really shocked the world and its founder, Liang Wenfeng, becoming famous globally, insiders are sharing how the startup is thriving. And this comes, of course, despite Washington's efforts to slow down China's AI industry. Let's bring in our Asia Tech reporter, Jieping Huang, joining us. And Jieping, such a great story and so great that you're here to talk us through it. So, it's been a couple of months in the making. You've spoken to a lot of people around this ecosystem as well. But what did you learn exactly about DeepSeek and its founder as well?
Yeah, everyone wants to talk to Liang after the rollout of the R1 model. We tried, but it didn't work. He apparently only taking meeting with the top Chinese senior leaders. But for this story, we talked to over 24 former researchers and employees at DeepSeek, as well as VC investors and CEOs in China's AI industry in general. So DeepSeek is still a bit of a black box to us because we don't know its revenue or profit. But what we do find out is that this is a nerdy founder who really believes in the open source ethos, and he's probably spending much more time coding than he probably should, more time than his researchers, and he really empowers his employees, including interns, to take on big development tasks. So this is what China has in the startup spirit.
It's so interesting, just the amount of research you guys have done, the people you've talked to, and how the whole company works as well. But you mentioned where it's based, Hangzhou. It's a whole kind of place where a lot of AI sort of babies or little startups are coming through here. But tell us a little bit more about how the company works. What else have you learned from that?
Yeah, I actually traveled to Hangzhou for this story. We call the AI up and starters. We call it the AI 6 Little Dragons. So I didn't get to meet all of them, but I do noted from my reporting that investors, including some U.S. investors, are increasingly coming back to China, including Hangzhou, to look at potential investment opportunities. Like one of the little dragons is called Brinkle. It's usually compared to China's Neuralink. So it's apparently meeting investors for a new funding opportunity. So I guess the entrepreneurship and the VC world is starting to come back a little. Also, apart from the startups and upstarts, we also have the big guys, like we'll have Tencent and Alibaba earnings later this week. For Alibaba, it's also benefiting from the rise of DeepSeek. Like for its cloud segment, it's one of its fastest growing business, and AliCloud has been adding DeepSeek to its marketplace, and it's also betting those little dragons. So I would say there's a lot of comeback.
It's really interesting what you say about the mentality of the founder, and also the approach that he has with staff, and giving people a lot of free rein to explore new projects and take on ambitious goals. But out of the people that you spoke to, did anyone flag any risks? Because it can be a challenge to move from that sort of startup mode into more established business.
Yeah, chip is definitely one of the big hurdles because of the U.S. restrictions on China's ability to get the most advanced NVIDIA chips. But people also believe that restriction will also perhaps backfire, in the sense that those Chinese chip startups are trying to really innovate. If they don't need to rely on NVIDIA. They have to ramp up their R&D a little bit. So this may be a double-edged sword.
Yep, but yes, it's great to highlight one of the tech rock stars out there, and one of the emerging ones. Great piece there, Zhoping Huang. Make sure to check out his big take here, the Asia Tech Reporter joining us. And yes, it certainly was a team effort on that story. It's on the Bloomberg. It's on for subscribers now. If you want to take a look on your terminal, just go to Function NI Big Take. You can also check out the big story there on Bloomberg.com. Now let's get back to where the whole U.S.-China discussion is right now. A former U.S. ambassador to China thinks the trade war between D.C. and Beijing is nowhere near coming to an end. Nicholas Burns told us the root cause of the current tensions lies in China's trade strategy.
Well, first of all, I start from a first principle, and that is that China's been the largest and most important disruptor in the global trade system for about 3 decades right now. There's a reason why the United States and many other countries around the world have placed tariffs on China. China's manufactured exports in particular is because China's been dumping them around the world below the cost of production. And it's been a killer for jobs, both in the United States historically in the last several decades, but also around the world. You have a situation now where Turkey and India and Brazil and Colombia and Mexico and Canada and the United States and the European Union have all put tariffs on China. So I have a degree of sympathy for the situation that President Trump and his team inherited, which was a situation that we left when I left in mid-January as ambassador to China. President Biden, a year ago, in May 2024, placed 100% tariffs on Chinese EVs, 50% on semiconductors, 25% on lithium batteries. So the root of this problem is China and Chinese trade policy. The Chinese are trying to act now. You saw it in the statements over the weekend from Vice Premier He Lifeng, is that they're the innocent party, that they are the victim of this trade war by President Trump, when in fact, and that they're the responsible party, when in fact the reality is quite different. I think it's important to set the stage. Having said that, these are going to be very, very difficult negotiations.
During your tenure, you were trying to, if I may, rehabilitate a relationship that had worsened during the first Trump administration, develop conduits for communication, reestablish economic and security ties. When you left that post, could you have envisioned this turning out the way that it has, in terms of how the rhetoric has been ratcheted up, the tariffs have been put in place? Is it the worst case that you envisioned, or worse yet still?
I certainly did not anticipate 145% American tariffs on China or 125% Chinese tariffs on American goods. And the trade war that has resulted effectively led to a trade embargo as of the past week, when no ships were sailing with goods back and forth, when manufacturers couldn't export to each other's countries, and you see the significant shortage of goods that traditionally are important to both economies. I didn't expect that to happen at all. And that's the most important thing happening in the global economy right now, which is another reason I think that eventually both sides have to agree to a deal to calm global markets. We're the two largest global economies, so we have a profound impact on the health of the global economy, but we also need the global economy to be functioning in a rational and stable way. There's so much at stake. I didn't see that happening. I think few people saw that happening. You remember candidate Trump pledged 60% tariffs on Chinese goods, and people thought that would be a revolution. Well, 145 was a revolution of a different magnitude. And I think, we're not anywhere close to being out of the woods.
You're watching the China show and taking a look at US futures. Look, I think this board really doesn't put it in perspective what happened overnight, because we actually saw the S&P 500 and the NASDAQ 100 turning higher for the year. So these risks around tariffs is certainly sort of fading into the rearview mirror for now, at least with this temporary truce between the US and China. It also plays into that question mark around US exceptionalism and is that narrative still intact? And overnight, of course, we've been speaking about the New Voices event that we launched in Hong Kong and speaking with Morgan Stanley about that, because the Asia Private Wealth Management business, the head of that, Christina Au-Yung, talking about the trade truce rather between Beijing and Washington, how that set a scene or the scene for the rebound of stocks on Wall Street we saw, but also what it means for repositioning in China. Here, take a listen.
The conversation about US exceptionalism and the challenge to US exceptionalism has very often been associated with the Magnificent Seven. And the Magnificent Seven, as much as that leadership in the US has been driven by the large cap or mega cap stocks, it's not synonymous with US exceptionalism. US is still the deepest and highest quality market. There are many areas within the US to traffic that are very interesting. There is still significant innovation coming out of the US. And if anything, yes, we had experienced higher levels of valuations that were necessarily comfortable for clients to be getting into with fresh money. Now we've seen that retrace a little bit and actually setting a healthy scene to get back into some of these interesting names.
As it retraces, though, and maybe some funds flow away from the US, where do they go into? What are you advising clients?
So on the other side of the US is actually what we've seen now in China. We're seeing an emergence of really interesting themes coming back out in China. We're seeing that China is emerging from being the world's factory, from making and manufacturing products for everybody else and servicing everybody else, to actually becoming a global leading innovator in its own right. And opening and paving the way for repositioning in China. Valuations are not demanding. We've seen significant investment in R&D, talent, capabilities, their own supply chain, and we're actually very interested in and excited about the opportunity set in China.
What's the right proportion, though, to allocate to that market?
So in terms of global asset allocation, our investment committee is recommending something like a 40-40-15 split between fixed income, equities, and alternatives, with the balance in cash and cash equivalents. Now, rather than allocating to specific markets, it has become increasingly important to have a globally diversified portfolio to navigate through that volatility. This is why we have seen alternatives take up an increasingly important role, a core function in client portfolios. Now, a 40-40-15 model is designed to help an ultra-high net worth client with a balanced growth objective achieve something like a 7 to 8% total return over a 7 to 10 year horizon, but with about the same degree of volatility. Now, if I set the scene in terms of what that means, achieving 7 to 8% returns per annum with about the same volatility in an environment where volatility is elevated is significantly harder work than, say, in post-GFC era where volatility was much lower.
And that was Morgan Stanley Private Wealth Management Executive Christina Ouyang speaking at our New Voices event here in Hong Kong. All right, time now for trending in China, our daily look at what's making headlines in national newspapers. And we're talking about the Securities Times now, that they're saying there is still space for the renminbi to rise further against the dollar in the short term after China and the U.S. reached a truce on tariffs. A report from the China Center for Economic Research, meanwhile, at Peking University, also talking about the currency, saying the yuan is expected to remain volatile and rise this month, fluctuating between 7 to 7.3 against the dollar. But yeah, this appreciation of the renminbi is certainly one to watch. The fix today was quite interesting, right? It was strong, but not as strong as what analysts were expecting here. So perhaps some restraint from the PBOC here today, too.
Yeah, and actually, the first time we've seen the daily yuan support below estimates for 2025. So I mean, it's clearly something to be tracking very closely. But in terms of equities, we're actually seeing the Hang Seng pushing higher in the session today, up about 1%. So we're kind of off the highs of the day, but it's very much that earnings story that's playing into this as well. We had JD, for instance, on Wall Street, Tencent, Alibaba coming up to end the week. But that's it from the China show.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations.
There is a lot of appeal to U.S.-denominated assets still.
I don't think we're going to see this resurgence to buy America.
It's very hard to undo a decade of policy that's been very favorable for the U.S.
From a market perspective, anything that lowers that amount of uncertainty is positive.
Most of the gains are behind us because it still is very hard for the S&P to reach new highs.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
How is it only Wednesday? Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday as the president doubles down on deals.
And with this trip, we're adding over $1 trillion more in terms of investment into our country and buying our products. There are multi-billion-dollar commercial deals with Amazon, Oracle, AMD. They're all here. Uber, Qualcomm, Johnson & Johnson, and many, many more.
President Trump clearing the way for NVIDIA and AMD to sell chips to Saudi Arabia, boosting chip stocks and helping to wipe out all of the equity market losses for 2025. Attention now shifting to Washington as House Republicans push to reach a tax compromise, potentially as soon as today.
Before we get to taxes, before we shift our focus yet again, I think it's fair to recognize just how rare it is to see this type of upswing in this type of period of time, let alone the period of time. It is incredibly rare for the S&P 500 to be down more than 15% and then actually climb out of that hole. It's only been done 5 times over the past span of modern history. So do people have confidence in this, or is this a head fake that is designed to really be a short squeeze and exercise the maximum amount of pain?
I think you're bullied into this if you're missing out on these gains. Over the past few weeks, we've had a positive growth shock off the back of the headlines of the past few weekends. A positive growth shock that's led to revisions in equity market price targets higher, revisions to Federal Reserve forecasts for rate cuts, pushed them out. A positive growth shock that's moved this market in a major way in the last month or so.
A positive growth shock that we didn't necessarily get the worst case scenario. And so suddenly we have long-term investors who are grappling with, okay, is this a really good thing? Or are we looking at tariffs that are still, even after the revisions, at around 16%, which is according to Yale Budget Lab, which is the highest level still going back to 1937. How do you factor that into an economy that we will not get a clear picture of potentially for as long as a year, as we were hearing about yesterday? It becomes really cloudy. And then you add to that the confusion around policy. How much can we just focus now on the tax bill and ignore all that noise?
Well, let's sit on the tax bill and let's talk about the yield curve. So the 2 years anchored around 4%. This idea that the Federal Reserve is anchored around doing nothing for the foreseeable future. Further out along the curve is starting to get really interesting again. The 30-year pushing towards 5% once more, and this time for different reasons.
If you end up with the tax bill as originally drafted, which was a real kind of a rough draft on Friday, and they've been up all night trying to get this together, and then it's going to go to the Senate and it's going to be rewritten completely. So initial estimates do have it increasing the federal deficit by about $5 trillion over the next 10 years. You would have to imagine that this supply would end up pushing yield term premium upward for this long end of the yield curve, which is one reason why people talk about 5-year, people talk about maybe 10-year. Nobody talks about 30-year. Priya Misra talking about that as the risk asset at a time of so much uncertainty.
The bond market in focus, the 30-year this morning, 490, 10s at 445. Coming up this hour, we'll catch up with Victoria Fernandez of Crossmark as stocks to raise losses for 2025. Norman Rule of CSIS as President Trump vows to lift sanctions on Syria, and Jens Nordvik of Exante Data on why this is just the start of a bear market rally for the dollar. We begin this hour with our top story. President Trump emphasizing the importance of coalition building in the Middle East. Joining us now from Dubai is Bloomberg's Jordan Fabian. Jordan, welcome to the program, sir. Yesterday, deals, 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 and then a shift to foreign policy. What's the next leg of the trip all about?
Cementing a relationship with another U.S. partner in Qatar. This is a nation that, geopolitically, they've relied on to try to negotiate hostage deals with Hamas. And the president is also looking to extend that deal making to Qatar as well. There's that possibility that the Qatari royal family gives him a luxury 747 jetliner to use as Air Force One, not to mention other sales from companies like Boeing to the Qataris.
Jordan, how much does this really cement the Middle East's position as a new power broker at a time when power seems to be shifting away from other centers that have traditionally been thought of that? I'm thinking in particular of Europe.
Certainly. I mean, you look at a country like Switzerland that traditionally has served that role as a neutral broker between two nations. And to be fair, we did see that when the U.S. and China reached their tariff détente last weekend. But increasingly, the U.S. and other nations looking to Qatar to broker these deals. Controversially for a lot of U.S. policymakers, Qatar has been a client of Hamas. That's something that some Republicans, even allies of Trump, have scrutinized, say that U.S. shouldn't have such a close relationship with a country like that. But the president is putting aside concerns about human rights, about traditional U.S. values in the search of a deal. He says, as long as you're dealing with the United States, we're going to look the other way on those other matters.
Hey, Jordan, appreciate the update. As always, Jordan Fabian there. Out of the region this morning on the latest, the next leg of the trip, a turn towards foreign policy after a big boost to chip makers in yesterday's session.
Yeah, who didn't get a boost, right? We were talking about NVIDIA, AMD, Amazon, Alphabet. We're talking even Cisco coming out with some sort of sweetener from that particular transaction, some seeming more concrete than others, but really a deal-palooza over there in the Middle East.
Helped to wipe out what remained of the losses of 2025. Equity futures this morning just a little softer. NASDAQ futures down by not even 0.1%. Here's the view on Wall Street this morning. Victoria Fernandez of Crossmark writing, uncertainty is still the name of the game, but perhaps trade negotiations can begin to offer an off-ramp, with headlines providing some tailwinds to the equity markets and a steepening of the yield curve. Victoria joins us now for more. Victoria, good morning. It's good to see you.
Thanks for having me.
We're back to where we started, 2025. How much has changed, though? How different is this equity market?
Yeah, it's all about the underlying, the internal momentum that we're seeing in this market. So we had the external momentum. We've seen the S&P come and make a 20-day high. We've seen it recover, as you were talking about, in a very quick pace from the downside that there was. But what does that internal momentum look like? And it's still weak. And to me, that's the key component. We just saw this week the amount of S&P constituents making 20-day highs that are in uptrends, sectors that have been in downtrends and relative lows that are now changing to relative highs. The question is it a head fake that you mentioned a moment ago? Are we just on a 90-day pause where is the downside, the declines on the downside, is that reversing a little bit? Yes, but do we have that solid trend on the upside that we really want to see? I'm not sure we're there yet.
Well, let's talk about leadership. Where's it coming from at the moment? And how's that developed over the past few weeks?
So that's changed, and a change in leadership is one of the things that we've been wanting to see to say that this market could continue, right? So we were looking at utilities, we were looking at staples, we were looking at financials before. Now we've started to see industrials come up a little bit. Consumer discretionary is coming up. Leave out Google, leave out Meta, even though that's about 2/3 of that sector. You look at more of the entertainment component, the gaming names, that's starting to take some leadership. So you're seeing that shift, which is positive. But again, is it just because of a headline that we had over the past week, or is it going to be more fundamental?
Yesterday, John asked someone, what's on your dashboard of economic data to watch, given the fact that everyone is saying that the soft data is unreliable and the hard data is also unreliable because it's backward-looking, forward-looking, and whichever way you're looking that you would like. So how do you assess the real-time implication for the economy at a time when policy is not set? And you have a motley kind of response from corporate America, with American Eagle withdrawing its outlook, others actually upgrading what they see ahead.
Yeah, I think the soft data, hard data conversation is actually really important. Soft data really kind of telling you where the momentum is in the market, but the hard data being the confirmation of what you're seeing. And typically it's soft data that flows through to hard data. I don't think you can ignore soft data. It is out there. A lot of it is self-fulfilling. When you have consumer sentiment really low, that means the consumer is not going out and buying because they're concerned. So maybe you're not seeing it in retail sales yet, or maybe some of the hard data is really being affected by the pull forward that we saw in front of the tariffs. And so therefore it's muddled. It's a little murky, and I'm not sure we can rely on it wholeheartedly. Even the CPI report we got, people are saying, look at the last half of April where it all started moving up again. Maybe that tells us the next couple months could be a surprise.
I have to say, when we start talking about economic data at this point, my mind starts to hurt because I think about all the variables, and you could talk about even the sentiment data, the soft data, as being backward-looking because sentiment could have shifted quite considerably in the past
from day to day.
Moments, from day to day, right? So here's this question. If you still do have tariffs at the highest level going back to 1937, sure, it's not necessarily as high as it could have been. Do we have a sense of what the ramifications are and how much has already been priced in and how much more has to go?
Yeah, I think when we talk about what's priced in, it's interesting because I think a much brighter outlook on tariffs is being completely priced in this week. And maybe that's too much. Maybe we're getting over our skis a little bit in that direction. We've heard that the market could probably take a 10% universal tariff. We heard that in the beginning. There'd be a little bit of noise, but it would be something we could handle over the long term. And I think it's interesting that that's kind of where this administration has come back to. If you look at the deal with the UK, if you look where we are with China, it says 30%, but 20% of that is actually a fentanyl component. It's the 10% that's on the tariff. So maybe that's where this administration comes back to and says we can handle that. And over a 10-year period, talking about the budget, that's about $2.25 trillion. So I think there's some math going on behind the scenes as to where these numbers end up.
Speaking of the economic data, the number 5 container carrier, Hapag-Lloyd, had this to say, estimating the boost of more than 50% to volume compared with recent weeks. The last couple of days, we've seen a huge surge of volume, and now we need to see how long that lasts. So we've had the front loading, then we had some quiet, and now we've had a boom again.
Yeah, and we heard that same kind of tone from Maersk, right? The idea that these ships are going to start going in mass because everyone's going to try to pull things in as quickly as they possibly can. Ryan Peterson of Flexport saying there is going to be a boom in deals. So how do you price that in?
There's a scramble. The Fed chair's head must be spinning.
Yes.
The president's pushing for rate cuts. The inflation data was a little bit better than expected yesterday. How much comfort can you take from that?
I don't think there's much comfort there, actually. And I think when we see the premiums go higher on the longer end of the curve, as you were talking about a moment ago, some of that is because we're just pushing cuts further out in the year, in my opinion. If I'm Powell and I'm sitting there, and he doesn't ask my opinion, but if he did, I think he's saying, look, now I've got even more uncertainty I have to deal with. Now he just pushed my decision time 90 days out with the deal he made with China. I thought I was going to be okay July, maybe making a decision. Now I'm in August. I'm at the September meeting having to do that. So I think his job just got a little bit harder, actually.
We're looking forward to the update to the forecast in the next month or so. Victoria Fernandez across markets is going to stick with with us. If you're just joining us, equity futures this morning negative by about 0.1% on the S&P 500. Lots to talk about regarding the tax bill. We'll do that in just a moment with an update on stories elsewhere this morning. With your Bloomberg Brief, here's Yahara Ahmed. Hey, Yahara.
Hi, John. On that tax bill, House Speaker Mike Johnson says a compromise on SALT could come as early as today. A proposal being debated would increase the cap from $10,000 to $30,000, phasing out for individuals who earn at least $200,000. The standoff over SALT is one of the remaining sticking points as Republicans seek to advance President Trump's tax cut bill through the House. Meanwhile, NATO allies are working on an agreement to significantly boost defense spending. Negotiators are making progress on a path to achieve 5% of GDP on defense and related spending by 2032. The agreement would mark the biggest spending increase by Western allies since the end of the Cold War. And President Trump continuing his criticism of Fed Chair Jay Powell, posting on Truth Social after yesterday's CPI data, saying no inflation and prices of gasoline, energy, groceries, and practically everything else are down. The Fed must lower the rate like Europe and China have done. What is wrong with too late Powell? That's your Bloomberg Brief. John?
Yahara, thank you. The pressure is never ending. Up next on the program, closing in on a compromise.
This bill will get to the president's desk, and we hope to do that at least by July 4th, if not sooner. We believe this is going to be jet fuel for the economy. It will also send a very important signal of stability to the bond markets and the stock market.
We'll get to that in just a moment. We'll catch up with Bloomberg's Tyler Kendall live from New York City this morning. Good morning.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
This equity market wiping out the losses for 2025. Positive for the year. Positive post-April 2nd. Up from the low by almost 20% on the S&P 500 in just a number of weeks. This morning, negative by 0.1% on the S&P. Likewise on the NASDAQ. Under surveillance this morning, closing in on a compromise.
This bill will get to the president's desk, and we hope to do that at least by July 4th, if not sooner. I think in this bill, what we'll do to extend the Trump-era tax cuts is going to be critical for the economy. We believe this is going to be jet fuel for the economy. It will also send a very important signal of stability to the bond markets and the stock market to let people know that Congress is on the job.
Here's the latest this morning. House Speaker Mike Johnson saying Republicans could reach a compromise on the SALT deduction today, a main sticking point in Trump's economic package. Bloomberg's Tyler Kendall joins us now from the nation's capital for more. Tyler, let's talk about that sticking point. What does a compromise look like?
Yeah, hey, John. So at this point, the proposal that's on the table is what you outlined there. It would lift the SALT cap from $10,000 to $30,000 per individual and be phased out with income limits. But these Republicans from high tax states like New York, New Jersey, California say that's not enough to ease the tax burden on their constituents. And for context, they came into this week saying that they wanted to see that cap lifted to $62,000. Now, we know House Speaker Mike Johnson is negotiating with them directly, and there appears to be a way out of this, which is that the tax bill currently on the table is pricing out at about $3.8 trillion. We know the House had about $4 trillion to work with, so there could be some additional room there. But of course, that would spur concerns by fiscal hawks who are looking for savings where they could. A few different areas where we could potentially see some compromise. The speaker said that they're considering doubling the cap for married couples. That could potentially be somewhere where we could see some broad consensus. And then the other thing to watch for could be expiration date. So perhaps they will lift the cap to a higher level, but it just won't stay in for as long. John, in all of these conversations, though, important to keep in mind that these lawmakers are really digging in. These are Republicans Republicans that represent swing districts in blue states. They say that they help deliver this majority for Republicans, and this is the issue that they campaigned on.
And Tyler, nobody is sleeping in that city right now. It sounds like everybody was up all night trying to go through this draft, which sounds like a lot of fun. Now, of course, it's going to go over to the Senate if it does pass and get completely rewritten. So do we have a sense of how much House Republicans and Senate Republicans are on the same page?
Yeah, Lisa. In fact, they actually are still on the Capitol, still working through this markup. One estimate that we got is that particularly when it comes to the tax cuts, that could go into mid-afternoon. It's going to be 24 hours plus of debate. Now, both sides say that they are working together. If you listen to President Trump, he says that the White House is closely in touch with both leaders, House Speaker Mike Johnson and, of course, Senate Majority Leader John Thune. But at the end of the day, it depends on who you ask, because Senate Republicans have already signaled concerns with a few things that the House is doing, including the SALT cap, but also when it comes to those Medicaid cuts that we are expecting. The current House proposal does implement those work requirements for able-bodied adults ages 19 to 64. We know that's going to be a sticking point in the Senate, but at the same time, there's also a lot of fiscal hawks in the Senate who want to see some deeper spending cuts, so we're going to have to see how this all shakes out.
Critical for the economy, jet fuel for the economy. Tyler Kendall, thank you. With us to extend that conversation, Victoria Fernandez of Crossmark. Victoria, your view, is it both critical for the economy and jet fuel for the economy?
It is critical, I believe, for the economy. When you look at all of the elements that this administration wanted to bring together, they hit us with tariffs first, which was kind of that negative component on the economy. They need the tax component. They need the deregulation component to come in and help buffer that. Is it jet fuel? I think it's more of the buffering than the jet fuel in order to kind of bring this economy back onto solid footing, like we were talking about earlier, get those internal fundamentals going. But it really frustrates me when I hear them say they're digging their heels in on things. And because a good deal, they always say, is one where nobody's really happy. And so that's what I think we have to do here. They have to have some compromises on something, whether it's SALT, whether it's on the Social Security components, whatever it may be, the healthcare components. There has to be some kind of a compromise, and until we see that, I'm not sure we're going to get much out of it.
Well, let's focus on the composition of the agreement, if we do get one. So there is a difference, of course, between removing a potential headwind and providing a tailwind. The bulk of this bill is going to be extending current law.
Right.
What are the sweeteners that could act as that jet fuel in the years to come?
Yeah, I think some of it are the campaign promises that people are looking for to see. So the no tax on tips, right? Lowering taxes on seniors, some of that. The SALT deductions. And they're actually talking about closing loopholes, right, on pass-throughs for SALT, which they're saying is going to raise like $900 billion. Okay, well, that's great if we can see. Everyone loves a closed loophole. So if we can get some of those things done, maybe that's positive. But that's where we have to see some of these elements come in. We're seeing child tax credits getting extended, incentives for businesses in regards to building, manufacturing plants and R&D and expensing all of that. That, I think, is where you're going to get the tailwinds coming. We'll see profits increase in corporations. To me, that's saying margins are better, employment will stay well, and consumers will spend.
Maybe I'm just naturally a nervous person, but as we start talking about this, there are sort of two sides of the coin that both potentially could be really problematic for the bond market. Either you've got jet fuel that injects some sort of growth shock that is positive, but also potentially inflationary. Or on the flip side, you have essentially a less growth forward type of proposal that increases the deficit and also creates a problem for long-term bonds. So do you see it either way potentially being a risk for the bond market?
Yeah, either way, you're going to get a steepening, I think, of the bond curve, right? You're going to see that longer end go higher, in my opinion. And we talked about Powell a little bit earlier. I don't think that puts him in a great position to say, well, great, let's cut and bring the shorter end lower. So I think you're going to continue to see yields move up on the higher end. I think they'll probably stay somewhere around the 450, 460 level for now, being in kind of that trading range. But that pressure is there. It's really, Lisa, it's the credit component, right? Credit component, you look at investment grade credit, it's only out about 20 basis points on the year. High yield, obviously much further, about 250, 300 basis points out on the year. So I think they have to watch and see what happens to the credit spreads. And does that give them a signal that maybe things have gone a little bit too far?
This is important. You think that the credit side of things is the more interesting one, not the duration side that could potentially speak to the whole bond vigilante movement that could get spurred by some sort of deficit spending plan.
Well, because It's that credit component that I think is really kind of the underlying driver of what we're seeing across the board. It's what's going to tell us what can happen with earnings. Earnings is going to drive, like I said, what you see with profit margins and with employment and all of those elements that the Fed is watching and that the market responds to. So I do think we have to watch credit, although I will say over the last few months, the FX markets have been driving more than the credit markets, which isn't typically what we see, right? Credits usually are canary in the coal mine. But it's that combination, I think, of concern around credit and what's going to happen if corporations don't get the incentives that I think they're waiting on, which means we're not going to see CapEx intentions probably go higher. There's going to be some concerns there. But then you also look, we had a very poor 30-year.
Guys, natural gas में ध्यान रखना, last candle open equal to low बनी है, exact resistance पे not good. लास्ट कैंडल को देखोगे ओपन इक्वल टू लो बनी है रेजिस्टेंस पर ही अभी भी, ज़्यादा रिस्क मत लेना. अपना लो ब्रेक कर दे तो बेटर है, गलत जगह पे ओपन इक्वल टू लो कैंडल बना दिया है. बाकी क्रूड ऑयल सपोर्ट से वापस चल रहा है, ठीक ही है, यही टारगेट है पहला, फिर देखते हैं और टारगेट मिलते हैं. तो लास्ट कैंडल देखोगे ना नेचुरल गैस की, इट इज़ ओपन इक्वल टू लो. रिजेक्शन मिल रहा था मार्केट को यहाँ पर थोड़ा बहुत, बट नाउ प्राइस इज trying to hold that level. आगे इंडियन मार्केट भी हो गया क्लोज ऑफ सीधा 5:30. न्यूयॉर्क सेशन की ओपनिंग होगी, फिर देखते हैं वॉल्यूम शायद थोड़ा बढ़ जाए दोनों ही जगह पे. नॉर्मली इस तरह की कैंडल सही नहीं होती, मैंने बार बार होता है. लास्ट कैंडल जैसी बनी है ना ओपन इक्वल टू लो, वो भी एग्जैक्ट लेवल पे नॉर्मली या तो सच में ब्रेकआउट कराते हैं या फिर फेक ब्रेकआउट कराने के लिए ही होती है, सो दैट ट्रैप किया जाए. अपना प्रीवियस कैंडल का लो ब्रेक करके वापस नीचे आ जाता है तो स्टिल फेवरेबल रहेगा डाउन साइड के लिए. अगर नहीं आ पाता है तो फिर और ऊपर जा सकता है 303 नेक्स्ट रेजिस्टेंस के आसपास. तो अगर होल्ड करना है तो एटलीस्ट प्रीवियस कैंडल के जो बायर है इनको निकालना पड़ेगा, विच इज एज पर ओपन इक्वल टू लो. बैंक निफ्टी निफ्टी को देखोगे दोनों ही काफी अच्छा क्लोज हुए हैं, पॉजिटिवली क्लोज हुए हैं। निफ्टी तो नीचे से वापस गया, रेजिस्टेंस ब्रेक करा, नेक्स्ट रेजिस्टेंस तक पहुंच गया डायरेक्टली। लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। सब्सक्राइब भी सभी लोग कर दें। 4 PM हो गया है गाइस. मोमेंटम बहुत स्लो दोनों ही जगह.
Auction. We saw yields go higher after that. What does the demand look like there? It's very much a combination of the two.
What do you think is behind those poor auctions? Because I think there's a big difference between saying we're going to have deregulation, pro-growth, pro-risk bills going through Washington, and that leads to high yields. A difference between that and people starting to worry about financing the deficit, international investors requiring a weaker dollar and higher bond yields. Which road are we going down?
Yeah. I think international investors are still there. Maybe they're not buying quite as much, but we're not seeing them really go in and sell out of their treasuries. There was this huge concern around that. We're seeing it more on the equity side. We saw in the last week of April about 15 billion move out of U.S. equities and into European equities. So we're seeing that transition there. I don't think that's it. I think it's more of a concern around the debt. I think you could have some bond vigilantes out there. And it could be people saying, wait a minute, if this is all going to happen and yields go higher because recession is now less of a concern, maybe I'll wait on the 30-year until yields are a little higher and lock that in.
So put that all together. What are you doing with bonds?
So we've actually done, and I know you hate this word, but we're doing a barbell in our strategies, and so I should whisper that over here to Lisa.
I could tell where you were going with that, the hand motions.
But I think it makes a lot of sense. That kind of belly of the curve has been the most expensive part of the curve. So you've got to do what's best for your clients, and that's buying on the short end, and then it's going out a little bit longer and locking in there. We're not going out 30 years, but we're going 7 to 10, and then buying some on the short end too. I think when we finally get easing later this year, that'll be beneficial, and we want to have cash flow for clients.
There's two words we despise even more: idiosyncratic and diversification.
Good. I didn't use either of those today.
You want to be diversified.
Yeah, diversified. Idiosyncratic. I think transitory can get thrown in there too.
Yeah, transitory belongs there too.
Short-lived, as you pointed out.
I think the list is long, right? Victoria, it's good to see you. Thanks, you for being here.
Appreciate
Thank you.
it.
Victoria Fernandez there of Crossmark. Up next on the programme, we'll catch up with Norman Rall of CSIS as President Trump vows to lift sanctions on Syria. Live from New York City this morning. Good morning to you all. Equity futures on the S&P 500 just about unchanged. From New York, this is Bloomberg. Wall Street absolutely scrambling to update forecasts. Big revisions following the US-China trade truce over the weekend. Upgrades to the S&P 500 from Goldman, from Ed Giardini. Wells Fargo and Chris Harvey saying this: stocks have come very far, very fast. We think that what were ceilings now become floors and expect dips to be bought. Saw some evidence of that already this morning. We were down a few tenths of 1%, and now we're almost positive. On the S&P, we flip into the green on the Nasdaq 100 in the last couple of moments. 3 hours away from the opening bell. Let's get you some morning movers. We can do that this morning with Danny Berger. Hey, Danny.
Hey, John. One stock that's still decisively into the green is NVIDIA. Shares up 1.8%, still enjoying that afterglow of the benefit of all the deals announced at the U.S.-Saudi conference, giving Saudi more chips as the Saudi new venture looks to build out a data center, as the U.S. also considers letting the UAE have more chips from NVIDIA too. Dan Ives writing a note this morning saying that it is an AI revolution for Saudi, a new market for NVIDIA, especially as China continues to face restrictions. Also, one of the biggest movers for the S&P 500 pre-market is United Health. Those shares up 2.6%, but it is a bounce back from a big decline yesterday, 17% after the company completely suspended its outlook, named a new CEO. We are getting more details about that new CEO this morning, about some of the compensation that he will get: a $1 million base pay, $60 million in equity options. They were also sure to underscore that he would have security benefits as the new CEO. Finally, rounding things off this morning with a company that has also suspended its guidance for 2025. That is the retailer American Eagle. They blamed macro uncertainty, but to be clear, the first quarter, they gave a pre-update of that, looking very weak for them too. It had excess inventory, they had discounts, and again, they just had an inventory write-down too. So those shares massively under pressure this morning, down 14%, John.
Danny, thank you. I can't think of a more difficult time to try and manage your inventory through all of this over the last few months. The pandemic was the pandemic, whatever that was. This moment's been tremendously difficult for these guys.
They have to deal with not only the potential of tariffs, but also fast-moving fashion, particularly for the teenage set, which I can tell you is a very fickle bunch. But I will tell you that I do find it interesting. Some pulling their guidance, some upgrading their forecasts, like on holding. How much is execution and how much really is the macro environment?
Another update coming tomorrow. Retail sales tomorrow morning and earnings from Walmart. So look out for all of that. On our radar this morning, President Trump delivering on his promise to strike deals on his Middle East trip, clearing the way for NVIDIA and AMD to sell chips to Saudi Arabia. Both of those names, Bramo, again this morning, higher in the pre-market.
Fascinating to me, the fact that, first of all, to set the stage for this trip, President Trump got rid of the so-called diffusion rule under Joe Biden, which was basically to prevent or limit the number of chips that could be sold to places like Saudi Arabia and Qatar. Now they're talking about selling a massive amount in addition to getting these contracts for the likes of NVIDIA, AMD, Global AI, Amazon, Cisco, Alphabet, OpenAI, the list goes on and on and on. Question now goes to, are there any strings attached? Is there going to be any kind of way to avoid having those sales go over to China? What are some of the details underpinning some of this, given some of the strategic discussions that have been going on in the United States with other trade negotiations as well?
What's clear, though, the president's in deal-making mode big time internationally over the past week or so, both on the chips front in the Middle East and the trade front in Geneva, with the Swiss brokering that deal between the Chinese and the United States. Scott Bessent getting that done. And that's seen this equity market unwind all of those losses we've seen over the past few weeks. Now attention turns back to Washington And we're going to hear a lot about the tax bill in the weeks to come. The House Speaker Mike Johnson saying Republicans could reach a compromise on the SALT deduction as early as today, a breakthrough in one of the biggest sticking points in advancing President Trump's tax agenda. And then it's on to the Senate. And as you said, then it's back and forth, back and forth, back and forth, and this could be taking a while. But ultimately, they've got an aggressive timeline. They want this done by Independence Day.
And they're basically not sleeping in order to do it. The fact that they've basically been up all night in order to write and rewrite some of the details here is important. Tyler Kendall pointed to the fact that some proponents of increasing the SALT tax deduction have talked about how some of the proposals are not as expensive as people previously thought, so they can use that extra wiggle room to potentially go toward increasing the SALT tax cap. And so here's the question. Who's going to win out? The sweetener crowd or the fiscal hawks? Because that really is the battle that the market is going to be watching most closely.
Or the bond market.
Exactly.
And we've been talking about that a few times. I think you've got to pay attention to the long end of the curve. It's subtle, but we're just starting to push those levels, push back to those levels that got people nervous a month ago.
And it goes to this theory that we've talked about extensively, where if you don't necessarily have tremendous amount of growth, but also a marginal increase in the deficit, that could be the wrong kind of sell-off at the long end of the yield curve that I think a lot of people are trying to avoid.
The president celebrated defence spending just yesterday. NATO allies are working on an agreement to boost defence spending themselves in order to meet President Trump's call that they allocate 5% of GDP. Sources telling us here at Bloomberg the NATO foreign ministers will discuss the initiative this week.
And this really would boost spending for the entire region for the first time, or to the greatest levels that you've seen since the Cold War. I mean, if they were to actually go through with this, they are in discussions. Mark Rutte, who has been actually a proponent of some of these, has been instrumental in this. I am just curious how far they will go and whether this is viewed as stimulative. I know that a lot of people have been talking about this is one bullish case for Europe because they're going to be spending. Is it for a growth perspective, or is it for just some of the defense companies that have seen the biggest boost from this?
Can we just think about, though, and reflect on the difference between now and the president's first term? The sneering, the smirking, the pushback that he received when he was pushing them to spend more. And here we are, years later, and they're all getting together without him, trying to push defence spending up to 5%. Not because they're trying to bow down to the president, but because they realise he was right all along. That's a major change.
There has been a major shift, and there are these arguments, and they have some real credence that some of what President Trump is doing is pushing other regions, including Europe, to do what their economies need anyway. In this case, the backdrop of the Ukraine-Russia war really drives home the need for them to beef up some of their military resources at the same time that the U.S. is threatening more strings attached. So it's a very different reality, but you are right. This is a very different tone in these negotiations.
Huge wake-up call for the Europeans over the last several years, that's for sure. Let's stick with foreign policy. President Trump vowing to lift sanctions on Syria and ramping up pressure on Iran to strike a nuclear deal.
We are currently exploring normalizing relations with Syria's new government, as you know. I am also ordering the cessation of sanctions against Syria to give them a fresh start. I want to make a deal with Iran, but for that to happen, they cannot have a nuclear weapon.
The former senior U.S. intelligence official Norman Rule writing the following. The president's visit reinforces the growing sense that Saudi Arabia and the UAE play an expanding role on the world stage. Norm joins us now for more. Norm, welcome to the programme, sir. I just want to pick up on that line of thinking. If that's the case, if they spend an expanding role on the global stage, Norman, at whose expense? Who is being left out?
Good morning. Well, I think their view would be no one is being left out, but rather they are playing a new role where they connect the global north, the global south, and they're able to represent voices that previously weren't heard so often. Africa, India, and the smaller countries of the world. The COP28 that took place in Abu Dhabi, I think, was a representative of this and changed many regional views. And they see that they can bring together Zelensky, Putin, President Xi, President Trump, and they can solve problems in a way that Europe is no longer able to do so.
So, Norm, let's talk about one of the problems that they tried to address yesterday, and that was Syria. What's the significance of lifting sanctions on Syria?
The significance is huge. It provides Syria with economic possibilities to restore an economy that's been shattered by years of sanctions and its own mismanagement. This decision also comes at a time when Europe is considering its own sanctions posture towards Syria. For Syria to reestablish itself in the international community, particularly in the Arab world, independent of Iran's control, it must have a viable economy. There were great celebrations throughout Syria after the president's announcement with the credit going to the Saudi Crown Prince for making this request.
There's a good deal of skepticism, Norm, about this embrace of the Middle East and a question of how much they can fill that role that Europe used to play of being a true ally of the United States and whether they can be relied upon over a longer period of time. From an intelligence perspective, do you think that there is some dissonance there, or do you think that the rules of the game have just completely changed in terms of who the allies are and who are not?
I think it depends on what game you're playing. I think it depends on what your targets and issues happen to be. If you care about freedom of navigation and you're looking at the Red Sea, if you're looking at the Persian Gulf or other locations, you're going to have to work with the local players, and you need to give them a capability to burden share. So the president's significant military package to the Saudis actually enhances their capability to do what we would need them to do to burden share in that area. And in many ways, this is what we did with Europe over the decades.
There is this question, Norm, about whether this is going to become a liability down the road. And there is also some concern about opening up. Yes, it's a deal palooza. And yes, you see all the tech leaders in the Middle East trying to get deals. But the prior administration was trying to limit some of the chip sales to the region. They were concerned about potentially those chips getting passed along to China and beyond. And this question of what kind of limits are we setting on these strategic areas? Do you have a sense of what kind of strings are attached around these chip sales?
Absolutely. And it's an important and valid concern that the previous and current administration share. And the Saudi and Emirati position have been clear. Tell us exactly what you want us to do to make sure this technology is protected. They have not said, this is what we'll do and you have to live with it. Rather, they have said, tell us what we need to do in terms of a security architecture, physically, in terms of access, in terms of how we use this data, this material to make sure that it does not touch your security equities. And that explanation satisfied sufficient critics within the Trump administration to make this proposal possible. And it will be transformational, not only for Saudi Arabia and the Emirates, but there will be a splashover into the region. You're going to see their engagement with India, Africa, and Europe change dramatically as a result of this.
Norm, do you think that some of the naysayers of all of this are just worrywarts? The people who are talking about the plane from Qatar to the president as being a security hazard or other types of complaints are just people who are trying to find something to gripe about? Or do you think there's anything legitimate here?
No, the world is filled with people who like to gripe, and there are plenty of legitimate criticisms in the world. I'll leave it to others to talk about whether or not this plane is a legitimate gift or not. But in terms of what we would do in a security sense, we have more than sufficient technical capability to ensure that if a plane like that were to come to the United States, that we would be able to make sure that it is not a security threat to the United States. It would be stripped and rebuilt in many ways to have equipment placed in it so that it could be used. So it's not going to be a security threat once it's looked at. But as to the appropriateness of its acquisition, that's for others to talk about.
Norm, since we're dealing with worries, can we just finish where we started and address one significant worry? Who is this individual running Syria right now? We understand his role in overthrowing Assad, and we understand that Assad was backed by the Russians and the Iranians to some extent as well. But is being the enemy of my enemy's friend sufficient to make you a trustworthy partner in the region?
Individuals who have dealt closely with the president of Syria state that he seems sincere in his desire to be a president of Syria, that he is driven not by his previous associations with al-Nusra, an affiliate of al-Qaeda, but rather of a desire for a unified Syria. His approach to handling the Kurdish issue and some of the other ethnic elements of Syria is reassuring, but the proof is going to be in the behavior going forward. And the fact that the president is talking about lifting sanctions doesn't mean sanctions can't be placed in the future if that behavior is reversed.
Without a doubt. One to watch. Norman, thank you, sir, for your thoughtful responses, as always. Norman Rule there of CSIS. Things are so busy on the foreign policy front, we didn't even get to Ukraine. And the potential for a significant meeting taking place in Turkey tomorrow.
Yeah, this might be the first meeting since the real conflict began in Turkey between Zelensky and Vladimir Putin. I know that Zelensky has talked about President Trump possibly stopping by to say hello and popping in. You raise a good question, though, about the Syrian president and this question of, do you give a chance? Do you not? What do we know? At the same time, how do you support an economy that's been flat on its back at a time where potentially it's getting a new start?
Things are delicate there. They always are. Equity futures this morning just about unchanged on the S&P with an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. Israeli Prime Minister Benjamin Netanyahu says he's days away from ordering an all-out escalation of Israel's war against Hamas. Netanyahu says his armed forces are preparing to, quote, finish the job. Hamas this week released the last surviving U.S.-Israeli hostage, but still holds 58 Israelis, with fewer than half believed to be alive. Meanwhile, Burberry shares are rising nearly 16% in London trading, the company announcing plans to cut as many as 1,700 jobs, representing about 18% of its global workforce. The cuts will amount to an additional savings of $80 million in the next 2 years. The announcement also comes as the company reported better than expected comparable retail sales in the fourth quarter. And hundreds of Starbucks workers have walked off the job to protest a new dress code which requires baristas to wear solid black tops. Starbucks Workers United represents staff at about 570 of the 10,000 company-run U.S. stores. It's filed a complaint saying dress code changes during contract talks are unlawful. That's your Bloomberg Brief. John?
Yahara, thank you. Going to leave that there.
Really?
Yeah, I'm
impressed. That's seriously restraining.
I'm being very, very disciplined this morning. Up next, a turning point for the US dollar.
Fiscal deficits still being high, likely the trade deficits being high. That on balance, I think, means the dollar's likely to be on something of a weakening trend.
Jens Nordvik of Exante Data joins us next. Looking forward to this one from New York City this morning. Good morning to you all. You're watching Bloomberg TV. Equity futures this morning, just about unchanged, stable at the moment on the S&P 500. A raise in losses from early this morning. We were down about 0.1% or 2. We're now unchanged on both the S&P and on the Nasdaq 100. We're positive by almost 0.1%. Under surveillance this morning, a turning point for the US dollar.
The reality is, the dollar is at the center of the global financial system. That is an extremely sticky phenomenon that's been a part of our backdrop for decades. You see the likelihood of ongoing twin deficits, those fiscal deficits still being high, likely the trade deficits being high. That on balance, I think, means the dollar's likely to be on something of a weakening trend.
So here's the latest this morning. The dollar sliding as traders weigh a potential new focus for the White House. A person familiar with the matter telling Bloomberg the US and South Korea discussed currency policies earlier this month and agreed to continue talks. Jens Nordvik of Exante Data has been bearish on the dollar for months and writes the following. It's likely that we're at a multi-year turning point. I think the dollar should be moving substantially. Jens joins us now for more. Jens, good to see you, sir.
Good morning.
It's been too long. Thanks for dropping by. We've got some time to work through this. You're looking at potentially a system-level shock that leads to a strategic reallocation of the US dollar away from the US dollar to other currencies. Can you just set the scene for us from 35,000 feet, what you think's happening here?
We've really been on a strong dollar trend since the summer of 2014, right? So we've had this incredible run in US equities. We've had US yields that were generally higher than other places around the world. And investors from Europe to Canada, Australia, Japan have been very comfortable building up really big allocations to the US, unprecedented high allocations, right? And now we're coming into this year, a lot of people were expecting, Trump 2 is going to smell a bit like Trump 1. People actually added aggressively to their equity exposure into this year, right? And then it has turned out that Trump 2 was not really anything like Trump 1. And a lot of people are rethinking those allocations. And it's not just about the tariffs, right? It's about what's happening with foreign policy, who are allies, what's the NATO arrangement going to be. There's a whole host of issues, right, that means that a lot of people are thinking about, is it really prudent, as somebody who's allocating globally, to have such incredible overweight in the United States? So I'm not talking about is the reserve currency status going to disappear. We're talking about people who have been very, very overweight. Are they going to do some risk management and take the allocation down? And I think the feedback we get from speaking to chief investment officers all around the world is that it takes a lot to shock them, but they are shocked, and they want to change their allocations.
To your point, this has been building for a decade plus of dollar longs building across all asset classes. What we're trying to understand now is, as we take some of the air out of that trade, what are the policies that you see that make the shift away from the US dollar sustainable, durable, beyond just the chaos of the last month or so? How do you think about that at the moment? And do you consider them a push dynamic, bad policies in the US pushing capital out, or a pull dynamic, better policies elsewhere, sucking capital in? Which one is it?
Yeah, so the first thing I would say is that we have a list of US policy shocks. And that list of policy shocks is actually generating policy shocks elsewhere, right? So in Europe, we've had now a historical change in fiscal policy where essentially the fiscal rules have been rewritten, right? The rules that underpin the euro have now been changed in a way where you can invest more effectively, right? That's a big change. So that's important for the growth outlook in Europe. We just talked about, as you mentioned, right, the NATO budget potentially also totally different, right? 5% numbers. We used to talk about whether we can get to 2, right? So big changes. So that's something that underpins this idea that there are other places. Because if you have more investment in Europe, you also have more bond issuance, right? So the whole supply and demand dynamic is changing. It used to be the case that there was actually very few assets to buy in Europe, and that's changing too. If you look at the comparison between international investors and U.S. investors, in the U.S., you have an incredible home bias. That's the other part of the story, right? If you look at all ETFs that are issued in fixed income in the U.S., 1.7 trillion, there's only 0.5% that has any foreign currency exposure. So it can only go one way from here. That's not going to be quick, but over time it will happen.
There's an important point here. You said that this isn't necessarily the loss of the dollar as being a reserve currency. This is just simply a normalization and diversifying away from the dollar. Some people might say that this is a feature, not a bug of this administration, that they want a weaker dollar in order to increase exports. And actually, we're going to see this increasingly as a part of policy, not just as a potential consequence.
Yeah, I think you're right. We certainly have people within the cabinet, Scott Bessent included, right, that have a different nuance to dollar policy compared to the past. There's always this focus on, okay, how do we insource some manufacturing, and a weaker dollar certainly would be helpful in that regard. And you're right. I think if you look at the price action today, it is influenced by these let's call it Bloomberg headlines about Korea trade deals, so and currency deals. So there's an element of that. So nobody's going to be fighting this trend if the dollar is going gradually weaker.
How much more weakness is there? And potentially, do you see the euro as the biggest winner?
So again, we've literally been going in one direction for 11 years on a trend basis, right? So we've just started. And if we have a big asset allocation shift, it's something that can play out over a 6 to 9 month horizon. And we can easily have, a 5% move down in the dollar index, right? And then we get to these questions. So, okay, is it going to be orderly, or could there be something that's more dramatic, right? And what we had in April, I have never seen. I've been doing currency analysis since 2000, effectively, right? What we saw in April, we have never seen before, right? Where U.S. bonds are selling off, equity is selling off, and the dollar trades down. So I think that was only for not that many trading sessions, but it's still a warning sign that that can happen, right? So I am, in addition to what we just spoke about, I think there's some additional tail risk that if the budget process is not one that investors are comfortable with, I worry that we can have some of the same dynamics as we had in April. So that wouldn't be my central case, but the people who are involved in these budget negotiations have to remember what happened in April. The U.S. bond market is not a kind of indisputable safe haven anymore.
Yeah.
And what happens with the budget is absolutely going to matter.
There's evidence that spooked not only investors, but also the White House in the last month as well.
Yeah, you said yesterday, who's the bigger arbiter, Republicans or the bond market? And I think a lot of people are watching the bond market very closely.
Based on this conversation, it might be the bond market. Jens, good to see you, sir. It's been too long. Thanks for dropping by. Jens Nordvik there of Exante Data. Up next on the programme, Wei Li of BlackRock, Tobin Marcus of Wolf Research, Holly O'Neill of Bank of America, and the former New York Fed President, Bill Dudley. From New York, the second hour of Bloomberg Surveillance. Up next.
It's really hard to get a true economic read.
It sounds like there's a lot going on under the hood.
Potentially, there's more growth worries priced in the U.S. than elsewhere.
The risk of recession is receding here.
If there's still uncertainty on the other side of that bad data, it's very hard to sort of look through that.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The president just touching down in Doha. We'll get you an update from Anne-Marie in just a moment as we commence the second hour of Bloomberg Surveillance. Good morning to you all. Your scores look like this on the S&P 500. Equity futures totally unchanged this morning on the S&P, slightly positive on the Nasdaq. A quiet session today, a busy one tomorrow. Tomorrow, you'll hear from Chairman Powell. You'll see retail sales, and you'll get an update from Walmart as well. Look out for all of that. Our heads are still spinning here at Bloomberg. What a year it's been so far. Year to date on the S&P 500, we are now positive, up on the year. We dropped almost 20% from the highs. We've rallied more than 18% from the lows. This has been vicious. It's been fast.
And it's been rare. This typically does not happen. Just to put this into perspective, I keep going back to this. Bespoke Investment Group came out with the statistic showing only 5 times in modern history have we seen this kind of retracement of a more than 15% loss in 1 year. So it raises this question, is this the start of something bigger, or is this a sort of knee-jerk response to headlines that potentially could change at any moment when we're staring into the black box of data that's messy and a Fed chair who's telling us just wait and see, and wait and see.
We've heard all these comparisons to the pandemic. It's not the pandemic. And we've said repeatedly on this program, the biggest difference is the president can turn the virus on and off whenever he likes. And over the weekend, he turned it off again.
There seemed to be a real sea change when it came to the relationship between the U.S. and China. The fact that tariffs were brought down, the pause period, and suddenly there was not a goal of decoupling fully. I think that phrase really changed the game for a lot of people. Suddenly, there were the contours of the rules of a new game. That more broadly, these two economies, the biggest in the world, are interconnected, but in a couple of key areas, there are going to be greater disputes. Of course, the problem with this is the world doesn't stay on hold for 90 days. And we see the Chinese leader Xi Jinping heading over to Latin America, trying to strike deals over there, criticizing the UK-US trade relationship. So this story isn't written yet, but for now, the temperature has been turned way down and people are celebrating.
The mood music has changed, that's for sure, in this market. The focus shifting once again. This time, it's shifting towards tax policy. We'll get you an update on that as well in the next 20 minutes or so. Equity futures just turning positive on the S&P 500. We're up by 0.1%, turning positive on the year as well. We'll catch up with Wei Li of BlackRock in just a moment. We'll also speak to Holly O'Neill of Bank of America on the state of the U.S. consumer. And we'll get you an update from the former New York Fed President Bill Dudley on why the Fed's problems aren't over. We begin this hour with our top story. President Trump in the Middle East, emphasizing the importance of coalition building. Anne-Marie just landing in Doha, head of the president, and she joins us now for more. MH, welcome to the program. Welcome back. Give us an update on what you're expecting today, and please take some time to reflect on what we heard just yesterday.
Well, really yesterday, Jonathan, I think wanted to highlight this administration, the economic relationship, the deals the president was able to put over the finish line. A lot of that we need to make sure we're tracking because it's big numbers. Do they actually come to fruition? That's what we're going to be keeping an eye on. Things like AI, data centers, advanced technology, those chips that Saudi Arabia, UAE now going to be able to get their hands on. Really a transformation of a lot of these economies that have been traditionally economies. They're able to exert their influence due to the price of oil and gas. The president is now really shifting towards foreign policy. And what better place to do that than Doha? Whether or not as the Trump administration or the Biden administration, Doha and Qatar has served as this mediator when it comes to talks in Gaza, when it came to the fall of Kabul and Afghanistan. The Qataris have seen as a place where they want to step in and try to mediate. So we do have the past few weeks, as soon as yesterday, We had negotiators here from Israel. Of course, this is where Hamas's political office is, as well as American officials are here trying to get some sort of ceasefire agreement when it comes to Gaza. And we should also reflect on what happened this morning. The president this morning met with the new Syrian leader for 33 minutes, and then he came out and talked about the fact that maybe we're going to have new relationships, normalized ties with Syria. This comes after yesterday the president talked about a cessation of sanctions on Syria, and I'm getting mixed messages from Washington, D.C. There's some people who say, why do you continue to keep a country in chains due to the actions of the previous regimes? And there are others who are skeptic about al-Shura and obviously his ties in the past as a militant leader in al-Qaeda. But as Norm Rule said in the last hour, he was talking about the fact that they do think this is someone that the administration sees as he wants to turn over a new leaf. The Arab world erupted in that room yesterday because they want to make sure Syria stays within the Arab world and is not leaning towards Iran.
It's a sea change in the region. Anne-Marie, appreciate the update. Stay close. Anne-Marie's going to go off and do some reporting, and if we get any headlines for you, we'll bring them to you. It's been a big move, both for the broader market and for chip stocks specifically. That deal for AMD, for NVIDIA, looking for new markets when they've been effectively closed off by the Chinese and the US, and their fight that continues.
This really is the key point. How much do the sales in the Middle East really offset the lack of sales that you get over to China, given the fact that there will be that strategic decoupling that Treasury Secretary Scott Bessent talked about?
Let's get you the view on Wall Street. This from Wei Li of BlackRock, writing the following. We still see tariffs causing further contractions in quarterly activity, but the cumulative impact may be more limited. We stay risk on. Wei joins us now for more. Wei, good morning.
Good morning.
Can I pick up on that line? The cumulative impact. How are you measuring that?
Well, there are two potential templates that we can mirror what's happening right now. One is COVID, the pandemic. You switch off and you switch on. But in your case, you're saying that you can switch off again and switch on again. But we're talking about kind of being able to switch it back on quite quickly. The other template is Brexit, where you have multiple kind of years of cumulative scarring, where you have the economy below trend even today. So right now, given how quickly we have seen walk back, maybe the COVID type of template is appropriate in terms of structural scarring, but we're already seeing some sort of contraction, and I think technical contraction in the future is not off the cards. It's not off the table, but chances have been lessened because of the immutable law seemingly at work to guide the destination of where we end up.
When you say we stay risk on, what does that mean in today's market?
It means positive on U.S. equities and corporates in terms of credit over U.S. government bonds. I think what we have seen so far this year, especially this week, is that greater uncertainty doesn't mean greater certainty of a bad outcome. People make false equivalence between the two, but there's a huge difference. So when we talk about kind of U.S. debt arithmetics, when we talk about supply chain dependency, this will govern how quickly decoupling can happen, if at all, which is why we were able to stay risk on despite elevated uncertainty in terms of policy making. I would also say, we talk about U.S. equities recovering year to date. U.S. equities more than recovering the drawdown since April the 2nd. But U.S. government bonds haven't. Term premium went from 35 basis points on April 2nd to 70 basis points. Dollar hasn't recovered fully. So there is something more exceptional about U.S. equities and U.S. corporates, and this is what we are focused on in terms of our risk-on strategy.
This is something a number of people have put up, have talked about, the fact that U.S. exceptionalism still lies with U.S. big tech, and it still lies with some of the mega trends as you've put them out there. It doesn't lie necessarily with the dollar and U.S. assets per se, just by virtue of the U.S.'s position in the world. I want to stick with tech. This has been a bet of yours and the sort of structural theme. Just on a tactical level, has the rally already taken back all of the bullishness that you feel? And for now, it feels like maybe it's going to take a breather, even with some of these deals going on in the Middle East?
Well, tech has taken the brunt of market correction since beginning of the year. We think that there is more to go. If you look at their guidance, they have all committed to their previous capex spend, if not increasing. Broadly, companies are guiding down their capex expectations, but for hyperscalers, they continue to be all in on AI transformation, and multiples now look a bit more attractive compared to compared to before the sell-off, right? So we do still think that there is more to go. Now, the bigger picture, we talked about the walk back and how markets are kind of jumping on incremental positive development. But the bigger picture is that we're still talking about a landing zone or for U.S. effective tariffs somewhere between 10 to 15%. That is still 5 times more than the levels at the beginning of the year. Everything considered, we're still talking about an environment where we have higher tariffs, potentially.
Okay guys, 5 PM हो चुका है, almost 15 मिनट और रह गए. Natural gas कुछ आ ही नहीं रहा, you know, resistance पे ही sideways हो गया. Morning पे भी resistance पे sideways, अभी भी resistance पे sideways. बाकी सारा काम इस कैंडल ने खराब कर दिया. ये कैंडल ही ओपन इक्वल टू लो बन गई थी. इट इज स्टिल रेजिस्टेंस है, रेजिस्टेंस पर ही, बट मुझे ऐसा लग रहा है कि यूएस मार्केट तक शायद मूव ना हो. ना 5:30 तक मूव नहीं आया तो ट्रेल कर लेना ऐसे.
Lower growth because of that and potentially higher inflation because of that. So I think that big picture is important to bear in mind as we think about portfolio construction. And I think markets jumping just to incremental positive news development is a typical case of behavior buyers of anchoring. We just look at kind of the incremental pieces, but the big picture has, tariff represents a stagflationary shock, and we still have higher tariffs compared to before.
Which speaks to sort of the divergence between tech exceptionalism and the rest of the universe. And I just wonder how pressured the rest of the universe of stocks you see as really feeling, especially if you do see potential risk to government bond markets going forward.
Which is why we definitely prefer tech and financial.
इस क्रूड ऑयल में भी हाफ प्रॉफिट बुक करके ट्रेल करना, ठीक है, बुक द हाफ प्रॉफिट एंड देन ट्रेल. थोड़ा टारगेट बड़ा है ये, 115 पॉइंट का डायरेक्टली तो नहीं आएगा, 60 पॉइंट के आसपास मिल गए और ऊपर जाता है तो देखते हैं. बुक द हाफ प्रॉफिट एंड देन ट्रेल रिमेनिंग क्वांटिटी इन क्रूड ऑयल.
That have been leading in the latest earnings season compared to the rest of the market, compared to small caps, for example. So we see tech as the drivers of U.S. exceptionalism in terms of U.S. corporates, and maybe the rest of the markets as passengers of U.S. exceptionalism wave. And especially at times like this, where we're still talking about higher rates, high for longer, central banks not able to come to the rescue of the economy as they were before, we still want to focus on companies that can grow their margin, that can grow their profitability. And if you look at the latest earnings season and also previously, tech and financials remain those sectors that we want to focus on.
What happened to the European trade? Where is it now?
Well, we closed the European underweight to lean into the European trade, but we're just neutral, not positive.
What's holding you back still?
What's holding us back? Well, what we have seen so far, if you look at the rally back from the lows post April 2nd, is that the outperformance of Europe over US has stopped. US started catching up now. And if you look at the hoops that MERS has to jump through to get confirmed, there remains risks around implementation of all these ambitious policies and reform targets. So we do want to see more kind of clarity around the ambitious targets for us to be positive across the board. But we have liked European financials for a long time. They have been outperforming. We also see opportunities in defense as a sector, given the future spend and lack of capacity in that space. So being selective on European equities, definitely seeing a lot more opportunities compared to the beginning of the year. But the market has come a long way. So I think one thing that we have seen so far is reversal strategy as a near-term way of navigating market volatility has worked, and right now reversal strategy seems to support the U.S.
There's this reason why people are sort of saying pause to Europe. Just want to finish up with China. Do you think that there is more to go there, given the fact that seems like there isn't a full-scale decoupling, and it does appear to be supported by some fiscal as well?
Well, we're also selective in China. We're neutral more broadly across the Chinese equity market, but we like technology in China because of the innovation potential, as well as China tech potentially going a bit more globally. And we also like financials in China because of the national team's support, as well as funds closing their underweight. But the reaction of Chinese market to the latest development has been somewhat mixed, because the more we see kind of progress on the trade front, the less likelihood there is for more support on the policy side to come through. So now there is definitely a positive momentum in that previously people are talking about maybe 3 handle for Chinese growth this year because of the tariffs implication. But now people are very quickly upgrading their forecast for Chinese growth this year. So selectively opportunistic and positive on Chinese equities is our near-term tactical view. But over the longer-term structural constraints around kind of aging population, lower growth, that hasn't changed.
So those estimates revised higher to closer to 5% already this week. Well, it's good to see you, as always. Thanks for dropping by.
Thanks.
Wei Li there of BlackRock. Equity futures on the S&P turning positive, higher by a little more than 0.1%, with an update on stories elsewhere this morning. With your Bloomberg Brief, here's Yahara. Hey, Yahara.
Hi, John. Not positive. Our shares of American Eagle Outfitters, those are down 12.5% in the pre-market. In a preliminary earnings release, the company said it expects revenue to be down nearly 5% compared to a year ago. The retail clothing chain also pulled its guidance for the full year due to, quote, macro uncertainty. Meanwhile, Jaguar Land Rover has joined other car makers in withholding profit guidance due to the uncertainty caused by President Trump's tariffs. The British auto giant, owned by India's Tata Motors, says it's evaluating the impact of global challenges and will provide an update during next month's Investor Day. And trading and investment platform eToro has raised nearly $620 million in an upsized IPO. According to a statement, the Israel-based company sold nearly 12 million shares at $52 per share. The pricing marks a major rebound after eToro had paused its listing last month amid tariff-related volatility. eToro shares are expected to trade on the Nasdaq under the symbol ETOR. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara later this hour. Up next on the programme, jet fuel for the U.S. economy.
This bill will get to the president's desk, and we hope to do that at least by July 4th, if not sooner. We believe this is going to be jet fuel for the economy. It will also send a very important signal of stability to the bond markets and the stock market.
Up next on the programme, Tobin Marcus of Wolf Research, live from New York City this morning. Good morning.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
The president in yesterday's session, the Fed must lower rates. He won't like what he's hearing. On Wall Street, a lot of banks, Citi, Barclays, JP Morgan, pushing back their call for the first rate cut. Goldman going all the way back to December from the summer for that first rate cut for 2025 from this Federal Reserve. This market, though, not interested in that. This market interested in deals in the Middle East for chip makers. This market interested in a trade truce between the US and China. Equity futures up again this morning on the Nasdaq by 1/3 of 1%, on the S&P by more than 1/10 of 1%. Under surveillance this morning, jet fuel for the US economy.
This bill will get to the president's desk, and we hope to do that at least by July 4th, if not sooner. I think in this bill, what we'll do to extend the Trump-era tax cuts is going to be critical for the economy. We believe this is going to be jet fuel for the economy. It will also send a very important signal of stability to the bond markets and the stock market to let people know that Congress is on the job.
Here's the latest this morning. The House Speaker, Mike Johnson, working to get President Trump's big, beautiful bill over the finish line. Johnson suggesting that Republican lawmakers will likely reach a deal on the SALT cap today. Bloomberg's Tyler Kendall joins us now for more. Tyler, welcome back to the program. Just describe what that compromise might look like.
Yeah, hey, John. Well, it's going to depend on a few things. The current proposal on the table would lift the SALT cap from $10,000 to $30,000, phased out with income limits. But these Republicans from these high tax states like New York, New Jersey, California say that's not enough to ease the tax burden on their constituents. And they're threatening to sink the entire reconciliation package over this one issue. For context, they came into this week looking for that cap to land somewhere closer to about $62,000. So there's a pretty big gap there. But there does appear to be a way out of this, which is that the House tax bill is currently pricing in at about $3.8 trillion. We know that House Republicans were given about $4 trillion to work with here, which would suggest that there's perhaps $200 billion worth of wiggle room. But at the same time, fiscal hawks, of course, have been trying to find savings where they can. There's a few different areas to look out for some other compromises when it comes to SALT. Perhaps we could see a doubling of the cap when it comes to married couples. That's something that would be considered widely popular. And then another thing is expiration dates. So perhaps they will lift that cap higher, but then it just won't stay on for so long. The one thing important to keep in mind here, though, is that these Republicans really do have leverage because House Speaker Mike Johnson has such a slim majority. And, John, these are Republicans that represent battleground districts in blue states, and they say they're really digging in.
They've got to fulfill a promise, that's for sure. Tyler, thank you. Tyler Kendall with the latest down in Washington, D.C. They've got an aggressive timeline as well. Tobin Marcus of Wolf Research writes this: despite a bumpy road ahead, we still expect the final bill will be enacted by July. Tobin joins us now for more. Tobin, welcome back. It's good to see you. Let's get to that aggressive timeline. What gives you the confidence we can get this all done, wrapped up, passed by July?
So there's a very hard deadline at the end of July, which is the twin occurrences of the August recess, when these guys are going to be out of town for an entire month. They tend to be very keen about getting out of town. And even more importantly, the debt ceiling X date, which is likely going to fall sometime in August. That is a quite immovable deadline, as opposed to some of the symbolic or aspirational deadlines around getting it done by this recess or that recess. So July 4th, as Speaker Johnson is alluding to, I think is ambitious, but not totally unrealistic. The end of July, I think, is a harder stop.
So, Tobin, what does this bill look like if they do get it done in your timeline, and how widespreading is it with respect to getting some of the campaign promises implemented?
I think they're going to be able to deliver on some version of most or all of President Trump's main campaign promises. They have in here now short-term versions of no tax on tips, no tax on overtime, something that checks the box on no tax on Social Security, although it's not exactly that. On the business side, we're going to get bonus depreciation, R&D expensing. They have this new structures expensing provision that kind of has supplanted the original idea for a 15% reduction of the corporate rate on U.S. production. So I think they're going to be able to check the box on much of that. The harder questions are on the offset side. Still ongoing debates about Medicaid. They put in quite sweeping, though gradual rollback of IRA that, in line with our views, looks like it's been pretty tolerable for markets. But it does seem like the pieces are falling into place on most of what they set out to do.
Tobin, what have we learned in terms of just how much, as Anne Marie would say if she were here, President Trump is sort of chief whip? He is the one going around and getting people to support and line up behind this bill. Do we have a sense that that clutch is still very much present?
They haven't really needed him yet in that closer role in the House process. I think they probably still will. we are still seeing, simmering concern about Medicaid, for example, from both the moderates and the conservatives. I think that they may need to bring him into lead on one or both of those groups of folks. For example, if they do take the SALT numbers up to appease those blue state members, that's going to make the deficit situation look a little bit worse. There are already concerns about that on the conservative side. So I think if you're trying to get those folks on board, keep them in line as the bill gets a little bit less fiscally responsible. That, I think, is going to be an important role for the president.
Tobin, we know a lot about the SALT lobby. We've talked about them tons over the past few weeks. Who are the hawks in the Senate that we need to focus on in the weeks to come?
So from a spending perspective, Ron Johnson has kind of put himself out there along with Rand Paul, who I think most folks are figuring are not going to end up voting for it, Senator Paul, as saying, we need more spending cuts. This needs to be a more fiscally responsible bill. I think those were points well taken because a lot of the strategy for managing the cost of the bill is to rely on timing gimmicks. So both those individual and corporate tax cuts that I was running through, most of those expire in 2028 or 29. By our reckoning, extending those for the full decade, as we all expect that they will try to do, adds another $1.2 trillion in cost to the bill. So quite substantial. This is not really a bill that tackles the deficit, and it's stimulative in the early years. And then they're also going to be pinched on the moderate side. Senators Collins, Murkowski, Hawley have all raised concerns about the Medicaid reduction. There are various folks, including Senator Capito in West Virginia, who've been concerned about how far some of the IRA rollback provisions go. So, as in the House, I think there are going to be a lot of different vectors of concern and people nibbling on different axes.
Tobin, just before you go, we're getting live pictures of the president disembarking Air Force One. He's just touched down in Doha. Foreign policy has become increasingly a focus of this trip to the Middle East. Tobin, all these promises over foreign policy deals. Can you talk to us about defense spending? Just how big is that push going to be? Where are the cuts?
So, the answer to where are the cuts in general on all of this, I don't think that the deficit is really going to be a focus to the extent that some of the rhetoric would suggest. The president's budget proposal calls for, sort of flat discretionary defense funding, a big tranche of defense funding through this reconciliation bill, and then big cuts in non-defense discretionary spending. I don't think they're going to get non-defense cuts. That needs to be done on a bipartisan basis, and they're not going to have the votes for that. So I think mostly we're looking at, kind of flattish funding along with this big new infusion of defense funding in the reconciliation bill. Deficits are not going down. They're not going to hit Secretary of Essence 3% target. Mostly they're going to deliver on their other policy priorities and let the fiscal picture shake out where it does.
Tobin Marcus of Wolf Research. Tobin, thank you. Those pictures coming live from Doha as the president takes the next leg of his trip in the Middle East. The next leg focusing on potentially foreign policy and more.
Which potentially could be the next leg upward if there are some deals struck, in particular the war with Ukraine and Russia.
Futures right now positive by 0.2%. Up next, we'll get you a read on the U.S. consumer with Holly O'Neill, the president of retail banking at Bank of America. From New York, this is Bloomberg. Nvidia up again in the pre-market, this time by more than 3%. Just adding some weight to this rally, adding some weight to a major rally off the low. The closing low on April 8th, we're up by more than 24% since then on the Nasdaq 100. The Nasdaq 100 this morning positive by 0.4%. The S&P up by 0.25. With 2 hours until the opening bell, with your morning movers, here's Danny Berger. Hey, Danny.
Hey, John, I got to say, it's not just Nvidia. It's really any of these AI companies that have had a whiff of a mention in U.S. and Saudi deals. Supermicro, one of the biggest beneficiaries of that. It's up 16% pre-market. It was also up 16% yesterday. The gains keep on coming. For this company, it specifically struck a deal with a Saudi data center company called DataVolt, saying it would be a multi-year partnership, that Supermicro would help supply some of the servers for it. The company has been struggling, so this is a big turnaround for them. We also had some sell-side action, specifically coming from Morgan Stanley, that seems to be shaking things up this morning. It gave a double downgrade of CBOE, saying that normalized relationships, or at least thawing of the tensions between U.S. and China, happened bigger and sooner than they expected. So defensive stocks that did well during the market turmoil, i.e. an exchange that does better when volatility and options are being traded, now isn't going to do as well. So they have downgraded CBOE. Those shares falling 1.5%. Now, for a very similar reason, those analysts at Morgan Stanley also upgraded KKR. A more normalized capital markets environment means that private capital can do well, that deals will be getting done, one hopes, in a more normalized macro environment. Those shares up 1.8%, also saying that it's an attractive entry point considering that those shares have sold off this year, John.
Hey, Danny, thank you. Appreciate the update. Just an update on our programming tomorrow morning. Jim Zelter of Apollo. Jim Zelter a number of weeks ago talked about so-called macro paralysis. And I wonder about that macro paralysis theme now after the events of the past week.
Is it macro deal making? Is it essentially the paralysis released, cured as people try to get to the playing field and really strike up some deals?
Look out for that interview tomorrow morning around 7 a.m. Eastern Time. On our radar this morning, President Donald Trump landing in Doha for the next leg of his trip to the Middle East. Trump expected to participate in a Qatari state dinner later on today, and that destination is playing a bigger and bigger role. You talked about it in foreign policy.
Yeah, especially given what's going on with Israel and Gaza and what they've done in terms of negotiating some of the release of hostages. On the way there, how much is he going to make a stopover in Turkey at the same time to really discuss what's been happening between Ukraine and Russia and brokering a meeting between the two leaders? Here's a question. How much does this really solidify this region's instrumental role, both on a foreign policy level, but also at an investment policy? And you point to the fact that tech stocks are surging and they're taking another leg higher pretty much across the board, partly because it is clear that there isn't the same kind of discrimination against some of the more friendly nations when it comes to chip sales as there is to, say, China.
I'm pleased you brought up Turkey. I think that's potentially an important meeting tomorrow. As far as I'm aware, we still don't know who's in the Russian delegation. And I think I get the sense, and others do too, that who is in the Russian delegation will dictate whether the president actually goes to Turkey to be a part of these talks or not.
If it's Vladimir Putin, yes. If it's not,
something
no.
like that.
Something
like
very
that.
similar, very simple kind of cheat sheet. That's kind of what people are looking at. It is going to be curious to see how serious these talks actually are about ending that conflict that has killed so many people.
It's been depressing. Awful, that's for sure. Elsewhere, we've got to return to the markets and talk about what's happening here stateside. Equity futures, as Lisa indicated, are near session highs off the back of these moves that we've seen in chips. But one thing that hasn't fully recovered is the US dollar. If you notice, the South Korean won has been climbing. Sources telling us here at Bloomberg that South Korea and the US discussed currency policies early this month in Milan, with an agreement to continue talks on operating their FX markets. Now, this is interesting. We had a conversation just moments ago with Exante Data's Jens Nordvik. And Lisa asked him an important question. He was reflecting on this dollar long that's been built up over the last decade and the potential for a reversal. And the fact is that that move might be welcomed by this administration. And our reporting would, I think, to some extent speak to that.
If you have a weaker dollar, you can increase your exports in a more consumer-friendly manner. It is cheaper for other countries to export from the United States. So there is this theory that maybe this is what this administration wants, especially as news comes that they are discussing currency manipulation as part of the trade discussions. Can I just say, this feels a little bit like a Festivus-style airing of the grievances of, VAT tax and currency manipulation and chickens. I mean, it feels like that pretty much around the world. And when it comes to South Korea, they did intervene in their currency last year, late last year, where the dollar was surging. Here's a question, though. What is the ultimate goal? Is it just to normalize the trade relation? At what point does it get too weak? This is going to become on your dashboard, maybe, of headlines to watch and ranges to look out for.
Yeah, this is part of our reporting, and I'd like to hear them talk about it on the record to see what the ultimate objective actually is. Now, Lisa mentioned this yesterday, that this market has potentially been reduced to just monitoring the social media account of the President of the United States, and Goldman did some research just for Lisa. President Trump likes US oil prices between $40 and $50 a barrel, according to Goldman Sachs. The firm analysed his social media account, finding he has posted nearly 900 times about oil and US energy dominance.
So this is the new model, evidently, the inference about preferences that this president has. And you mentioned earlier, John, I wonder what that inference would be for the Fed policy and what exactly triggers him to start jawboning the Fed. But this highlights two things. Number one, how important oil really is, raising questions yet again about the increase in supply from the Middle East ahead of some of these negotiations. But then there's a second question. Is this the new dashboard? You talk about economic data. Is the new dashboard Truth Social posts that you can then somehow calculate, get a sense of getting into the mind of the president and then getting ahead maybe of some of the headlines that have been jerking around this market?
I'll let others do the psychoanalysis of the president. regarding a social media account. It has been reduced to the entire market. I agree with you. It's been reduced to just tweets and headlines regarding trade. His point on gasoline, though, is real, and he's right. Gasoline prices have been falling, and that helps set the tone for the consumer. So let's turn to the consumer. Retail earnings ramping up with Walmart reporting on Thursday, offering another read on the US consumer. The team at Bank of America writing the following. Spending momentum remains, though it's moderating. Consumers appear to be pulling back, particularly on bigger ticket discretionary services like airline tickets and lodging. Holly O'Neill is the president of retail banking at Bank of America. I'm pleased to say she joins us now. Holly, welcome back to the programme. I want to talk a little bit about the consumer and then we can get to what you're doing operationally. But let's start with the consumer if we can. What are you noticing and how is that different to what we've seen previously over the past few years?
Well, the consumer appears to be continuing to spend. They're very healthy. And you had the headline. They spent in April at a rate of about 1%, and that's our credit and debit data. And that was just slightly cooler than they spent in March at 1.1% growth year over year. So they have momentum, but it's moderating a little bit. And I think the driver of that is that they're supported by continued wage growth. So we saw good wage growth in April, both in higher income and lower income, though it is moderating a little bit. So that theme is still healthy, but moderating.
Holly, I'm pleased you broke up the income groups because we sit on that just for a beat. The low-income group have been squeezed for a while. We've seen that in data repeatedly throughout this cycle coming out of the pandemic. Do you see any stress going up to the upper-income cohorts?
No. So the lower income household wage growth, just to give you the numbers, picked up by about 1.5% in April. And that was stronger than March. So March was 1.4%. So that wage growth in the lower income cohort increased a little bit. And I think that wage growth is continuing to support the consumer and the consumer spending. When you get deeper into the data, some of the credit data as an example, the lower income households are continuing to hold up. Overall, we've seen 30-day delinquencies come down a tad. So I think that consumer still is showing signs of good health.
This really raises a question, Holly, about how much we can really count on some of the soft data, which indicated an incredible amount of nervousness and pessimism among consumers in the United States during the month of April, in particular after April 2nd. Are you saying you're just not seeing it? That, frankly, people can go out and gripe about how concerned they are about the future of the world, but then they go out in a spending spree?
We're not seeing it. And I think we often talk internally about, you have to separate what consumers are saying versus what they're doing, what we're seeing in our data. And that data is telling us that they're continuing to spend, although it is moderating. And so we saw in April, restaurants, good spending there, but we did see a dip down in airline and lodging, leisure travel a little bit. So consumers are adjusting slightly, which leads to that, the momentum is dipping just slightly, but you really do have to separate what consumers are saying in many of the confidence and sentiment numbers versus what they're doing, what we're seeing in our data, whether it's spending data, payment data, or credit data.
Holly, I want to congratulate you. You have basically just received a pretty big promotion. You're running much more of the consumer bank, and you come at a time when there's a real question around how different the scenario is in different parts of the United States, how it's not a monolithic story at all, and how different regions are feeling very different realities depending on what their local economies really depend on. How different is the scenario that you're looking at in the United States right now, depending on which region you're in?
So we obviously have across the country footprint. We have 3,700 financial centers in all of these local communities. So, our goal is to really deliver for our consumer clients, approximately 70 million of them, uniquely to what their situation is, whether that's geographic or that's individual. So, we are there to adjust and course correct based on what our clients are telling us and based on what they need.
Holly, how are the interactions changing between customers? How different are they now? And how does that change what you need out of your physical footprint?
So our strategy is all about physical footprint supported by digital. And it's really the combination of the both that I think lead to the power of how we can deliver for the consumer client. So those 3,700 financial centers in local communities, coupled with world-class digital capabilities. Those digital capabilities continue to grow, they continue to advance, and consumers love them. At the same time, it does not substitute for face-to-face interaction that we get in our financial centers when a consumer client really wants advice and guidance in their financial position. So it's the combination of the two that I think really deliver the power for our consumer clients.
Holly, how much have you been able to expand the physical footprint, in part because of the turmoil that happened? It feels like 10 years ago, but not that long ago, I guess March 2023, in terms of some of the regional banking turmoil. How much of this has just accelerated since then as you look to take market share?
So we continue to expand into new markets. We continue to build new financial centers in communities where we need them. So we will continue to advance that agenda across the country. New markets. Idaho is a recent new market that we've entered, and we've got more coming. So we will continue to expand in new markets. We'll adjust our footprint in existing markets, opening new financial centers. Over the last decade, we've opened roughly more than 200 financial centers. And as we look forward, we expect to continue to open 150 more over the next 2 to 3 years.
Holly, I was dead wrong about all this. I thought as we change these interactions, we'd end up with a smaller footprint, that it would give banks a reason to cut costs and reduce their physical footprint. Holly, why is that not happening? And is there space for that to happen in the future?
Yeah, no, you're not wrong. It has happened. If you look over the last decade, we started with 6,000 financial centers. We are down to 3,700. That may tick down slightly overall as we do things like consolidate, close 2 financial centers in a local community and open 1 new financial center. So you will continue to see at the margins some reductions, but that physical footprint, that engagement with our clients in their local community is incredibly important as a complement to the digital reach that we have with our clients.
Holly, appreciate the clarity. As always, it's good to catch up. Holly, I know there of Bank of America. Whenever we catch up with Bank of America, just a direct read on the consumer. No politics, no bias, nothing. Just this is what's happening, this is what we're seeing. And what they're seeing is still okay. Some resilience.
They didn't see any translation from that soft data into the actual behavior of consumers. This just goes to the angst that people have of what can they rely on as a sense of exactly the real-time response of consumers and of corporations.
If you are just joining us, welcome to the programme. Equity futures here near session highs, up 0.25% on the S&P. Chip makers doing nicely, and Nvidia up in the pre-market by something like 3%. With an update on stories elsewhere, with your Bloomberg Brief, here's Yahara with more. Hey, Yahara.
Hi, John. President Trump says the luxury jet being gifted to him by Qatar's government will be used as a temporary Air Force One. Trump said it would be foolish not to accept the jet, which he says will save the U.S. hundreds of millions of dollars. The offer setting off alarm bells within the U.S. intelligence community, where gifts from foreign powers have long been viewed with suspicion. Meanwhile, Harvard has expanded its lawsuit against the Trump administration for freezing billions of dollars in federal funds. Harvard claims that federal agencies illegally halted funding because the university refused to submit to government control over its academic programs. Yesterday, the Trump administration cut another $450 million in grants to Harvard. And baseball's all-time hits leader Pete Rose has been taken off MLB's ineligible list, qualifying him for Hall of Fame induction. Rose, who died last fall, had been banned since 1989 after he was found to have placed bets on games as a player and as a manager. MLB Commissioner Rob Manfred said he met with President Trump earlier this year where the two discussed Rose's situation. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the programme, appeasing President Trump.
I think the Fed's going to be in a good position to cut a few more times. That could appease Trump, because really what was holding them back, you can't cut when there's 145% tariffs, where no one knows where they're going to go in the globe right now.
Up next on the programme, the former New York Fed President, Bill Dudley. Live from New York, you're watching Bloomberg TV. Neil Shearing, Capital Economics, with this to say. The recent climb down has left the effective US tariff on the rest of the world at around 15% versus 27% previously. Still the highest since the 1930s, unlikely to cause a global or US recession. That's the view from Neil this morning.
This is the ultimate question. Yes, the mood music has changed dramatically, but so too has the landscape versus the end of last year, and it is a vastly different and higher cost tariff regime than we had before.
Equities, off the back of all these headlines, positive for 2025. Equity futures up again this morning by 0.2%. Under surveillance this morning, appeasing President Trump.
I do think reduced tariffs gives Powell a little bit of ammunition if he has to cut rates. I think the Fed's going to be in a good position to cut a few more times. That could appease Trump, because really what was holding them back, you can't cut when there's 145% tariffs where no one knows where they're going to go in the globe right now. It's so hard to tell where we're going to wind up as a steady state.
Here's the latest this morning. President Trump calling for the Fed to cut interest rates once again, saying it's, quote, not fair to America after a soft CPI report out just yesterday. Former New York Fed President Bill Dudley writing the following: the Fed has little choice. When it doesn't know which way the risks skew, it must wait for more information. Right now, any major move would have only a 50-50 chance of a positive outcome. Bill joins us now for more. Bill, welcome to the programme, sir. Why such a negative assessment of the position that they're in right now?
Because they don't know where the tariffs are going to land, number one. And two, they don't know what the effects of the tariffs are going to be on growth versus inflation. So they're uncertain about two dimensions. So they can't really just sort of flip a coin and say, oh, well, we're going to worry about the growth dimension, because that could turn out to be wrong. So they have to sit and wait.
Hey guys, 5:30 होने वाला है. लंदन सेशन के बाद न्यूयॉर्क सेशन is going to open at 5:30. क्रूड ऑयल में हाफ प्रॉफिट बुक करके ट्रेल करना, ठीक है. बुक द हाफ प्रॉफिट एंड देन ट्रेल 5:30 की कैंडल, देखते हैं कैसा मूव करती है. बाकी नेचुरल गैस रेजिस्टेंस पे ही साइडवेज हो चुका है कम्प्लीटली. वो जो ओपन इक्वल टू लो कैंडल बनी थी उसके नीचे जरूर आ गया प्राइस, तो एक थोड़ा पॉजिटिव साइन है. अदरवाइज देखोगे तो कम्प्लीटली साइडवेज. लॉजिकली तो अभी तक आ जाना चाहिए था, नीचे नहीं आ रहा है, तो मोस्ट प्रोबेबली 5:30 के बाद ही कुछ मूव करेगा. तो यहाँ पर भी एसएल कॉस्ट पर रख लेना आप, ठीक है. 5:30 की कैंडल देखते हैं किस तरह से मूव करती है, क्योंकि यार डेटा बहुत है. नेचुरल गैस की इन्वेंट्री भी आने वाली है, तो ऐसा ना हो तब तक साइडवेज जाए और फिर 7 बजे के बाद जब यूएस मार्केट ओपन हो और फिर तब मोमेंटम ज़्यादा आ जाए, समझ रहे हो. तो थोड़ा सा इस चीज़ का ध्यान रखना है. में भी हाफ प्रॉफिट बुक कर लेना. ये थोड़ा टारगेट बड़ा रखा हुआ है, लगभग 60 पॉइंट मिल चुके हैं. और ऊपर जाएगा तो 110 पॉइंट का टारगेट रहेगा. नहीं जाता है तो फिर वापस नीचे आएगा तो देखेंगे. बट फॉर राइट नाउ पुट द एसएल ऑन सिस्टम, बुक हाफ प्रॉफिट. नेचुरल गैस में भी एसएल कॉस्ट पे रख सकते हो. इसमें भी टारगेट देखोगे ओवरऑल तो 7 पॉइंट का है. ओवरऑल मैं ये भी नहीं कह सकता अभी हाफ प्रॉफिट टारगेट हो चुका है, क्योंकि ओवरऑल सपोर्ट वो काफ़ी नीचे है 291 के आसपास. तो इसका भी हाफ करा जाए तो यहीं तक बनता है लगभग. बाकी इन्वेंट्री का फोरकास्ट तो बेरिस ही है, देखते हैं अब, क्योंकि ये रेजिस्टेंस अब डीपली टेस्ट हो चुका है. तो वापस यहाँ पर जाके सेलिंग तो नहीं आने वाली. आना है तो एक बार में फुल सेल ऑफ आ जाना चाहिए प्राइस के लिए. नहीं आता है तो फिर समझ लो कि प्राइस गया, फिर चांसेस काफ़ी कम रहेंगे. बाकी नीचे भी ऐसा कोई सपोर्ट तो है नहीं, ये पता नहीं रुक क्यों रहा है बीच में. एमसीएक्स में तो कोई खास सपोर्ट दिखा नहीं है वहाँ पे. लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को। मिनट रह गए हैं यूएस मार्केट से पहले न्यूयॉर्क सेशन की ओपनिंग में। US considering revision of Japan-US trade agreement in bilateral tariff negotiation. मेजर न्यूज़। अगर ऐसा होता है तो क्योंकि जापान और यूएस के बीच में ऑलरेडी जो एक ट्रेड एग्रीमेंट है वो काफ़ी पुराना ट्रेड एग्रीमेंट है। अगर वहाँ पर रिवीजन होता है तो देखना पड़ेगा किसको बेनिफिट होता है। अब अल्टीमेटली अभी तो जापान को ही बेनिफिट रहता है। ऐसा हुआ तो जापान का यूएस स्टॉक मार्केट और गिर सकता है। इस डेटा भी है 6 PM पे, वो इम्पोर्टेंट एक डेटा है। कोर पीपीआई का डेटा, अनएम्प्लॉयमेंट क्लेम, रिटेल सेल्स, ये सारे डेटा 6 PM पे आएंगे। तो 5:30, 6 PM, 7 PM, 8 PM कोई ना कोई डेटा है जो किसी ना किसी कमोडिटी को इम्पैक्ट करेगा। मार्केट ओपनिंग ऑब्वियसली। नेचुरल गैस भी अगर थोड़ा ब्लू कलर की लाइन के आसपास आ जाए तो इसमें भी हाफ प्रॉफिट बुक कर लेना। वैसे लगता नहीं आएगा, 8 ही मिनट रह गए हैं, देखते हैं 8 मिनट में कितना और फॉल करता है। ओवरऑल टारगेट 7 पॉइंट का है तो ये आप मान सकते हो लगभग 3.5 पॉइंट पहला टारगेट, एंड देन थोड़ा और नीचे आता है तो 7 पॉइंट पूरा टारगेट रहेगा। क्रूड ऑयल में हाफ प्रॉफिट बुक करके ट्रेल करें। वॉइस नहीं आ रही है? रिफ्रेश कर लो एक बार अगर वॉइस नहीं आ रही है तो। कभी वॉइस ना आए, लेट आए तो रिफ्रेश कर लिया करो। यूट्यूब अगर में देख रहे हो स्पेशली मोबाइल फोन्स में तो वो कभी कभी लैग कर जाता है ऑटोमेटिकली। लाइक भी करो गाइस, कम ऑन। देखते हैं एक और ट्रेड अगर बनता है यहाँ पर। मोस्ट प्रॉब्ली नेचुरल गैस के पहले क्रूड ऑयल में बन जाना चाहिए एक ट्रेड और। ठीक है, 5 मिनट रह गए हैं। नेचुरल गैस में भी कुछ खास मूव आया नहीं है। ब्लू कलर की लाइन के आसपास आ जाए, हाफ प्रॉफिट इसमें भी बुक कर लो, देन ट्रेल। बाकी अगर फिर भी मोमेंटम नहीं आया तो फिर 7 PM और या फिर इन्वेंट्री के वक्त ही मूव आएगा मोस्ट प्रॉब्ली। बाकी ऊपर से डीप रेजिस्टेंस लेके आया है प्राइस ऑलरेडी। देखना पड़ेगा कि अब क्या करता है, नीचे आता है एग्जैक्ट सपोर्ट पे या फिर रेजिस्टेंस का ही ब्रेकआउट करता है। इन एमसीएक्स में तो कोई सपोर्ट यहाँ पर है नहीं, इस एरिया पे देयर इज नो सपोर्ट इन एमसीएक्स। आई डोंट नो व्हाई इट इज होल्डिंग। फॉरेक्स में हो सकता है, देखना पड़ेगा फॉरेक्स का चार्ट। कि ओवर ट्रेड मत करना, ठीक है, डोंट डू द ओवर ट्रेडिंग। बीच में भी एंट्री नहीं। वही मैं देख रहा हूँ फॉरेक्स में शायद कुछ होगा यहाँ पर, अदरवाइज मॉर्निंग पर रुकना तो नहीं चाहिए बिकॉज जो ब्रेकडाउन हुआ है वो कल ही हो गया था। देन मार्केट कंप्लीटली गोज साइडवेज, लिक्विडिटी ली, वहाँ से वापस सेल ऑफ में है। $3.6 capital.com ब्रोकर, नो, नो सच सपोर्ट। ठीक है, यहाँ पर देखोगे capital.com ब्रोकर चार्ट में जितना दिख रहा है मुझे 3.66, यहाँ पर एक सपोर्ट है, था मतलब अभी भी है। ये जो रुका है ना यहाँ पर मॉर्निंग पे, ये उसी वजह से रुका है। यहाँ पर सपोर्ट एमसीएक्स में नहीं है, बट वो फॉरेक्स में जो सपोर्ट बना भी है वो ऐसा नहीं इंडियन मार्केट के टाइम के अकॉर्डिंग बना है। वो सपोर्ट आपका फॉरेक्स मार्केट में अर्ली मॉर्निंग 5-6 बजे के आसपास बना है। अर्ली मॉर्निंग तब हमारा मार्केट क्लोज रहता है, तो हमारे मार्केट में वहाँ पर कुछ नहीं है, सीधा गैप अप है। तो यहाँ पर बीच में जो प्राइस एक्शन बिल्डअप हुआ है, दैट एक्ट लाइक एज अ सपोर्ट एक्चुअली, जिस वजह से देखोगे तो काफ़ी देर से रुका था यहाँ पर। लेट्स सी फाइनली ब्रेक करता है या फिर, क्योंकि यहाँ पर एक बार मॉर्निंग पे देखोगे फॉरेक्स वाला 8:30 पे आया था, फिर 12:45 पे आया था, थर्ड टाइम आ रहा है। एटलीस्ट एक कैंडल क्लोज करती है 3.6 के डॉलर के नीचे तो फिर और बड़ा टारगेट मिल सकता है, नहीं तो फिर यहीं से रिटर्न ना कर जाए इस तरह से। तो फॉरेक्स में है सपोर्ट, एमसीएक्स में कुछ नहीं है। बाकी लिक्विडिटी ले तो ली है इसने ऊपर से। 1 मिनट रह गया, लेस देन 1 मिनट लेफ्ट इन न्यूयॉर्क सेशन ओपन। क्रूड ऑयल आप प्रॉफिट बुक करके ट्रेल करना फाइनल टारगेट के लिए। नेचुरल गैस में भी एसएल कॉस्ट पे रख लो अगर हाफ बुक करना चाह रहे हो। यहाँ पर फॉरेक्स में सपोर्ट है, एमसीएक्स में नहीं। क्लोजिंग आती है इस लेवल के नीचे तो मुझे लगता है पूरा टारगेट मिल जाएगा, नहीं तो ये मोस्ट प्रोबेबली इसी लेवल पे रहने वाला है साइडवेज। किसी ना किसी एक साइड के एसएल तो जाने ही पड़ेंगे, या तो बायर के या फिर सेलर के। एमसीएक्स के अकॉर्डिंग इंडिया में लगा हुआ था तो मैंने वही लगाया हुआ है। वन ये कैंडल ओपन 9 ये इसका नहीं इसका ये वाला है दिस लेवल इज आल्सो इंटरेस्टिंग ओके 5:30 न्यूयॉर्क सेशन ओपन न्यूयॉर्क सेशन हो गया ओपन ये 5:30 हो गया है देखते हैं अब क्या मूव करता है प्राइस यहाँ पे थोड़ा बहुत मोमेंटम नेचुरल गैस कंटिन्यू कर रहा है इसमें देखो क्लोजिंग अगर आ जाती है ना बढ़िया रहेगा नीचे बड़ा फॉल इन द सेंस ऑफ एग्जैक्ट सपोर्ट तक आ जाएगा सक्सेसफुली क्लोजिंग आती है तो 15 मिनट की ये तो फॉरेक्स चार्ट है कोशिश कर रहा है फॉरेक्स में ब्रेकडाउन करने का लेट्स सी कर पाता है या नहीं जिनको हो जाए प्रॉफिट नेचुरल गैस में एटलीस्ट हाफ प्रॉफिट अब बुक कर सकते हैं देन ट्रेलिंग वैसे भी लगा ही रखा है एसएल लेट्स सी ब्रेकडाउन सक्सेसफुल होता है या फिर नहीं होता या फिर ये वापस यहाँ पर सपोर्ट ले लेता है बिकॉज मल्टीपल टाइम तो ले चुका है ऑलरेडी वॉल्यूम ना शाम को 5:30 के बाद ही आता है नॉर्मली जो प्राइस एक्शन बिल्डअप दिख रहा है आजकल मॉर्निंग सेशन पे तो वॉल्यूम ही नहीं आ रहा है आता भी है तो बिल्कुल ऐसा आता है लाइक एसल हंटिंग के लिए ट्रेड हो रहा हो। तो फॉरेक्स चार्ट को देख सकते हो, नेचुरल गैस में ब्रेकडाउन करेगा नहीं करेगा, वहीं पर थोड़ा सा क्लैरिटी आएगी। बाकी कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हो, व्हाट्सएप पे मत पूछना, व्हाट्सएप पे मैं देखता नहीं हूँ क्वेश्चन। तो विशाल 108, सर प्लीज़ व्हाट्सएप पे मत पूछा करो, जब तक देखूंगा आपका क्वेश्चन तब तक प्राइस निकल चुका होगा। मार्क कर रखा है चार्ट पे। टाइम में पूछ लिया करो, व्हाट्सएप पे मत पूछा करो। जब तक देखूंगा क्वेश्चन तब तक कोई फायदा नहीं वहाँ पर। व्हाट्सएप पे मैं कोई टाइप करके आंसर थोड़ी ना देता हूँ, व्हाट्सएप पे से बेटर है लाइव में पूछो, क्विक आंसर मिलेगा। यहाँ पर मैं जब देखूंगा तब आंसर दे पाऊंगा, समझ रहे हो? लाइव में पूछ लिया करो, वहाँ ज़्यादा बेटर रहेगा। क्रूड ऑयल भी लगभग 50% लेवल पे रुका है। Likes are done. 100 का टारगेट है, करते रहो। 100 लाइक्स भी पूरे हो जाएंगे। थोड़ा सा ऊपर और आ जाए 5290 के आसपास, देखते नहीं तो वहां से एक सेलिंग और प्लान होगी तो क्रूड में। वन टाइम, ये टू टाइम, दो बार तो सपोर्ट ले चुके ऑलरेडी। लेट्स सी, नेचुरल गैस आता है थोड़ा सा नीचे और ठीक है। यहाँ पर नहीं तो एक बाइंग का प्लान है नेचुरल गैस में वापस से। 292 के 292 के आसपास कहीं मिल जाए ये हमें। इतना नीचे तो नहीं आएगा, यहाँ तक भी मिल जाए काफ़ी है। इसमें ना 290, 293, 292 के आसपास पूरा ही प्रॉफिट बुक कर लेना। अगर ये नीचे आता है तो 292, 293, मतलब यहाँ पर और इसके बीच में, यहाँ पर पूरा ही प्रॉफिट बुक कर लेना। इसको मैं नीचे ही मार्क कर ले रहा हूँ, बेटर रहेगा। छोड़ो हटाओ। यहाँ पर एक बाइंग का प्लान है मुझे लग रहा है अगर ये डायरेक्टली आया तो डायरेक्टली बाइंग हो जानी चाहिए, फिर इन्वेंट्री भी आएगी। इतनी बड़ी लाइन क्या ड्रॉ हो रही है? टू 92। देखिए यहाँ पर पूरा ही प्रॉफिट बुक कर लेना 92 93 के आसपास, यहाँ से बाइंग देखते हैं। बाकी क्रूड भी देखते हैं, अगर आता है ऊपर तक वापस 5300 के अराउंड। हाँ ठीक है। ओवरऑल देखोगे नेचुरल गैस भी लगभग 2% डाउन होने वाला है एमसीएक्स में। एंट्री का फोरकास्ट बेरिश ही है वैसे तो। नेचुरल गैस लास्ट टाइम 104 बुलियन था, इस बार 111 बुलियन ये फोरकास्ट में एक्सपेक्ट कर रहे हैं, इन द सेंस ऑफ लास्ट वीक के कंपैरिजन में ज़्यादा एक्सपेक्ट कर रहे हैं। तो अगर फोरकास्ट के अकॉर्डिंग 111 बुलियन से ज़्यादा डेटा आता है जो कि फोरकास्ट उन्होंने किया हुआ है, तो प्राइस को गिरना चाहिए। अगर कम आ गया तो ऊपर भी जा सकता है, तो बट अभी फिलहाल के लिए फोरकास्ट बुलिस बेरिश ही है प्राइस के लिए ओवरऑल। बाकी नेचुरल गैस में नीचे भी एक सपोर्ट है, वो भी स्ट्रॉन्ग ही है, वहां पर भी प्राइस अभी तक आया नहीं है। दिस इज ऑल्सो सपोर्ट, ये ज़्यादा स्ट्रॉन्ग है वैसे देखा जाए तो। ठीक है, ये थोड़ा सा अच्छा सपोर्ट है, ये थोड़ा सा हाई रिस्क जोन कह सकते हैं, इसको मार्क कर देते हैं यहाँ पर। ये भी है सपोर्ट होने को वैसे, बट काइंड ऑफ अ हाई रिस्क जोन। ठीक है, जैसा वो क्रूड ऑयल का था थोड़ी देर पहले ऊपर यहाँ पर, ऐसा ही कुछ ये भी है। नेचुरल गैस का सपोर्ट है ये, बट थोड़ा सा हाई रिस्क पे रखना है इसको। इसका नीचे वाला नॉर्मल है, 2.2 काफी है। रामेश एनर्जी, हेलो। गोल्ड और सिल्वर को देख लेते हैं, 6 PM पे इसे डेटा आने वाला है पीपीआई का। उसका ही वेट कर सकते हो, बाकी देख लेते हैं एक बार डेटा। यहाँ कब आया है? अच्छा ये कोशिश करी थी, आया नहीं एग्जैक्टली। फेड की स्पीच भी है, हाँ वो भी है, वो तो अभी 6:10 से स्टार्ट होगी। उससे पहले डेटा भी तो है, 7 मिनट में डेटा भी आने वाला है। एक बार गोल्ड और सिल्वर को प्राइस को देख लेता हूँ, क्योंकि इम्पैक्ट तो ये डालेगा, क्रूड ऑयल पे भी थोड़ा बहुत इम्पैक्ट जरूर डालेगा। सो लेट्स सी फर्स्ट गोल्ड का एक बार चार्ट देख लेते हैं। वैसे अभी भी देखोगे तो मार्केट फॉरेक्स में देखोगे तो 4 आवर टाइम फ्रेम के ब्रेकडाउन पे अभी भी नहीं कर पाया है, अभी भी होल्ड करके बैठा हुआ है। मॉर्निंग से सेल ऑफ आया था, रिकवर कर गया फॉरेक्स में। एमसीएक्स में देखोगे तो न्यूट्रल कहेंगे, गैप डाउन ओपन हुआ, रिकवर कर गया, तो कल जहां क्लोजिंग हुई थी वहीं पर चल रहा है, तो फ्लैट है गोल्ड फिलहाल के लिए, तो फ्लैट है। न्यूज़ का वेट हो रहा है, एक बार रेजिस्टेंस और सपोर्ट देख लेते हैं, चार्ट भी लगा लेते हैं एक बार, पहले लेवल देख लेते हैं। 7 मिनट में एक डेटा है, उसका ध्यान रखना थोड़ा सा, वो इम्पैक्ट कर सकता है प्राइस पर। रीटेस्ट वगैरह तो नहीं है यहाँ पर कुछ। डेटा बहुत सारे हैं, बट उसमें से इंपॉर्टेंट कुछ ही है। कोर पीपीआई का डेटा, कोर रिटेल सेल्स का डेटा, पीपीआई का डेटा, रिटेल सेल्स मंथ बेसिस पर है, अनएम्प्लॉयमेंट क्लेम्स, ये ऊपर के 4 डेटा है, नीचे के 2 उतने माइल्ड कह सकते हो। एक सपोर्ट है, ले लिया क्या इसने? बड़ा अच्छा प्राइस एक्शन बिल्डअप किया है। देखो डे लो ऑलरेडी एक सपोर्ट था, मार्केट वहां से सपोर्ट ले गया ऑलरेडी, पहली बार था, दूसरी बार भी यहाँ पर है, तो ये नीचे भी आ गया। मॉर्निंग पे जो लो बना है ना, वो एग्जैक्टली सपोर्ट ही था, 3127 वाला। रेजिस्टेंस देख लेते हैं एक बार। हाँ मिक्स हुआ तो फिर तो कुछ नहीं आएगा, फिर नॉर्मली डोजी बन जाएगी। यहाँ पर रिटेस्ट तो नहीं है कुछ, नहीं। 4 मिनट लेफ्ट। गोल्ड तो ले गया, सिल्वर का पता नहीं मेरे को। सिल्वर का पहले मैं गोल्ड का रेजिस्टेंस देखूं, मुझे रेजिस्टेंस भी दिख रहा है इसमें। इसने यहाँ पर रेजिस्टेंस कैसे ले लिया पता नहीं। ये थोड़ा सा हाई रिस्क सपोर्ट जोन है, ध्यान रखना। नेचुरल गैस में ठीक है तो क्वांटिटी कम रख लेना। इसके जस्ट नीचे एक और सपोर्ट है, वो ज़्यादा स्ट्रांग है। समझ में आ गया? ये वाला ज़्यादा स्ट्रांग है, नीचे वाला 287 286 वाला। ये थोड़ा सा हाई रिस्क वाला है, तो इसमें थोड़ी देर पहले जो क्रूड बना था यहाँ पर, ऐसा ही कुछ बाइंग के लिए। क्वांटिटी कम रखना इस वाले में। आ जाता है ऊपर, वेल एंड गुड, अच्छी बात है। कम रिस्क में अच्छा कम क्वांटिटी में भी अच्छा टारगेट मिल जाएगा। ऐसा जाता है थोड़ा कम में जाए, नीचे आ जाए तो फिर वहां पर वापस ले सकते हैं। बट आई कांट सी द सपोर्ट। ओके, 2 मिनट रह गए डेटा आने में। 2 मिनट लेफ्ट इन डेटा। विदाउट सपोर्ट ही प्राइस ऊपर चला गया, अजीब है। हाँ, ये एक सपोर्ट था, इसका ब्रेकडाउन हुआ है तो ये रीटेस्ट किया था इसने, ठीक है। एक बार यहाँ सपोर्ट लिया है, दूसरी बार इधर पे लिया है, ब्रेकडाउन हो गया तो ये रीटेस्ट कर रहा है, ठीक है। ठीक है, तो एक गोल्ड में देखोगे, मैं गोल्ड का चार्ट लगा दे रहा हूँ यहाँ पे। तो यहाँ पर एक सपोर्ट एरिया हुआ करता था, इसका ब्रेकडाउन हो गया जितना मुझे दिख रहा है। यहाँ रीटेस्ट एक बार कर चुका है, दूसरी बार कर चुका है, तीसरी बार कर रहा है। बाकी नीचे यहाँ पर एक सपोर्ट था ऑलरेडी, यहाँ सपोर्ट लेके जा चुका है प्राइस। ये भी ऐसे सपोर्ट था, पहले ले चुका था पास्ट में। यहाँ पर रुका नहीं इस बार, तो नीचे वाले सपोर्ट पे आ गया। सेम नेचुरल गैस वाली सिचुएशन है। तो अभी फिलहाल के लिए ये कह सकते हो ऊपर एक एज अ रेजिस्टेंस, एक रीटेस्ट, मल्टीपल टाइम टेस्ट हुआ रीटेस्ट है ये। नीचे हमारे पास ये सपोर्ट, बस यही है दोनों। बाकी थोड़ा बहुत यहाँ पर रुक सकता है ये इस एरिया पे। लेट्स सी डेटा क्या आता है, ऑल डिपेंड अपॉन द डेटा नाउ। 20 सेकेंड्स लेफ्ट। किसी ओपन पोजीशन चल रही है तो ऐसा सिस्टम में डाल दो, नेचुरल गैस का टारगेट हो गया है, उसमें बुक भी कर सकते हो पूरा प्रॉफिट। बुक द प्रॉफिट इन नेचुरल गैस सेलर्स, पूरा ही प्रॉफिट बुक कर सकते हो। बाकी डेटा देखते हैं। 1 2 3 4 5 6 7 डेटा है। इसके बाद एक स्पीच भी है फेड के चेयरमैन की, वो 6:10 से स्टार्ट हो जाएगी। वहाँ पर वो क्या बोलते हैं देखेगा, देखा जाएगा। उसका इम्पैक्ट भी हो सकता है, वो स्पीच में क्या बोल रहे हैं डिपेंड करता है उस पर, वो क्योंकि कोई डेटा नहीं है। ओके, डेटा आ गया है। कैंडल ओपन इक्वल टू लो बनी है। ओके, एक डेटा पॉजिटिव डॉलर के लिए, गोल्ड के लिए, गोल्ड और सिल्वर के लिए। एक डेटा नेगेटिव गोल्ड और सिल्वर के लिए, तीसरा डेटा भी नेगेटिव गोल्ड और सिल्वर के लिए। ओके, तीन में से दो डेटा नेगेटिव आ चुके हैं गोल्ड और सिल्वर के लिए, एक पॉजिटिव आया है, चौथा डेटा भी नेगेटिव है। तो चार डेटा, पांचवा डेटा भी आ गया, दो और आने हैं। मोस्टली जितने मुझे दिख रहा है एक अच्छा, एक पॉजिटिव आ गया, ग्रेट। मिक्स ही लग रहा है, अगर ये भी पॉजिटिव आ गया तो मिक्स हो जाएगा पूरा का पूरा। अनएम्प्लॉयमेंट क्लेम्स फ्लैट है, ठीक है। अनएम्प्लॉयमेंट क्लेम्स का डेटा न्यूट्रल है गोल्ड और सिल्वर के लिए। बाकी के मैं मेजर डेटा की बात करूं, उनमें से 3 डेटा पॉजिटिव है गोल्ड और सिल्वर के लिए, एक डेटा नेगेटिव है गोल्ड और सिल्वर के लिए। तो ओवरऑल कहोगे तो मिक्स डेटा है। इंपॉर्टेंट ये अनएम्प्लॉयमेंट क्लेम्स का डेटा था, ये बिल्कुल ही न्यूट्रल आया। 229,000 एक्सपेक्टेड था फोरकास्ट में, एक्चुअल में भी एग्जैक्टली 229,000 अनएम्प्लॉयमेंट क्लेम्स का डेटा है। तो ओवरऑल कह सकते हैं हम तीन में से सॉरी जो चार, एक दो तीन चार पाँच, पांच इंपॉर्टेंट डेटा थे, पांच में से एक न्यूट्रल है गोल्ड और सिल्वर के लिए, एक नेगेटिव है गोल्ड और सिल्वर के लिए, और तीन पॉजिटिव है गोल्ड और सिल्वर के लिए। अब 6:10 पे फेड के चेयरमैन की स्पीच स्टार्ट हो जाएगी एंड देन 7 PM यूएस मार्केट ओपनिंग और 8 PM नेचुरल गैस की इन्वेंट्री आ जाएगी। नॉर्मल प्राइस एक्शन पे ट्रेड कर सकते हो, मुझे नहीं लग रहा कि वो कुछ खास प्राइस एक्शन दिखाएगा आपको। ठीक है, तो डेटा हो गए आज के कंप्लीट में इम्पोर्टेंट जो डेटा थे। बाकी क्रूड ऑयल में भी ध्यान रखना, आज एक्सपायरी भी है ऑप्शन की, तो उस वजह से थोड़ा सा आज ऐसा लग रहा है बिल्कुल ही प्रॉफिट बुकिंग में जा रहा है। ठीक है, क्रूड ऑयल की ऑप्शन की एक्सपायरी भी है, तो जो लोग ऑप्शन में ट्रेड करते हैं, ऑप्शन बाइंग स्पेसिफिकली करते हैं, वो लोग थोड़ा ध्यान रखना। ऐसा ना हो कि आज क्रूड ऑयल ऑप्शन बायर्स को लूट ले बिल्कुल, क्योंकि ऑप्शन ट्रेडिंग है तो मार्केट मोस्ट प्रोबेबली थीटा डीके करने की कोशिश करेगा दोनों साइड से, समझ रहे हो, दोनों साइड से। पीपल आर वाचिंग, एटलीस्ट 50 लाइक्स होने चाहिए, कम ऑन लाइक करो सभी लोग। क्रूड में देखते हैं, अभी एक बीच में तो नहीं बनेगा, थोड़ा कुछ बनता है ट्रेड, यहाँ पर तो कुछ भी नहीं है। क्रूड ऑयल में भी इसके नीचे अगर ये होल्ड नहीं करता है, मान लो नीचे वाला सपोर्ट ब्रेक हुआ कहीं अगर, तो फिर नेक्स्ट सपोर्ट जोन थोड़ा सा नीचे मिल जाएगा वापस 5001, 5100 के आसपास। 'बता दिया डेटा आ चुका है, इम्पोर्टेंट जितने डेटा थे ऑलरेडी शेयर कर चुका हूँ मैं टेलीग्राम पे, लाइव में ही बता दिया है। अब सीधा 7 बजे यूएस मार्केट का ओपनिंग का टाइमिंग है, वहीं पर थोड़ी बहुत हलचल हो सकती है मार्केट में। पर देखो गैप वो एमसीएक्स में है, फॉरेक्स में नहीं है, फॉरेक्स में पूरा प्राइस एक्शन है वहाँ पे। तो अगर थोड़ा सा फॉरेक्स में देखोगे तो वहाँ पर प्राइस दिख जाएगा आपको, इसमें नहीं आने वाला। स्टार्ट बिल्कुल हो गई है, देखते हैं क्या बोलते हैं। एक कल मैंने आप लोगों को सेलिंग वाला ट्रेड बताया था क्रूड ऑयल में, वो फॉरेक्स में पूरा टारगेट ही दे के चला गया था। एमसीएक्स में यहाँ पर क्लोज हुई, फॉरेक्स में फिर आया और फिर से काफ़ी बड़ा फॉल कर गया था एमसीएक्स के अकॉर्डिंग, लगभग 150 पॉइंट से ऊपर। मुझे लगा नहीं था कि बिल्कुल इतना नीचे गिर जाएगा, यहाँ तक तो एक्सपेक्ट था, इसके बाद ये जो सेल ऑफ आया है एडिशनल है बिल्कुल। इसको रिमूव कर दो, जरूरत नहीं है। ठीक है, स्पीच बाकी देखते हैं क्या बोलते हैं फेड के चेयरमैन पवेल। 7 PM पे फिर यूएस मार्केट भी ओपन होने वाला है, एंड देन नेचुरल गैस की इन्वेंट्री शाम को 8 बजे इंडियन टाइम के अकॉर्डिंग। गोल्ड में देखो कुछ खास हुआ नहीं हो, कैंडल नॉर्मली कन्वर्ट हो गई है नॉर्मल कैंडल में। आने का तो बता दूंगा 5280 से, क्योंकि वहां पर ऑलरेडी एक बार सेलिंग ये आ गई है। मैं एक्सपेक्ट कर रहा हूँ कि थोड़ा सा ये और ऊपर चला जाए 5330 के अराउंड, वहां से सेलिंग आ जाए, या फिर 5350 के अराउंड ऊपर जो ब्लू कलर की लाइन है ना उसके आसपास कहीं, वहां से मजा आएगा सेल करने में। देखते हैं, आने दो, अभी तो दूर है, काफी दूर है। बाकी आप प्रॉफिट बुक करके ही ट्रेल करना क्रूड में, थोड़ा सा और ऊपर आता है तो पूरा प्रॉफिट बुक कर सकते हैं। प्राइस लाइक करते रहो। नेचुरल गैस में भी ध्यान रखना स्ट्रेट का, ठीक है, इतना टारगेट है इसका, ये लगभग 296 97 तक। ये छोटा सा एक ट्रेड लगा रखा है यहाँ पर 5 पॉइंट के लिए।
News when you want it with Bloomberg News Now. I'm Karen Moscow. We're going to bring you earnings from Walmart in just a moment. But first, we want to begin with the latest developments to end the war in Ukraine. Top U.S. and European diplomats are gathering in Turkey, but hopes are fading for any major breakthrough. Ukrainian President Volodymyr Zelensky is due to meet with Turkish President Erdogan, but Russian leader Vladimir Putin will not be there. Here's NATO Secretary General Mark Rutte.
Russia is sending only a lower-level delegation now to Turkey, to these peace talks. It is the Ukrainians who have said we are ready to sit down with the Russians, to agree a ceasefire, to immediately go into negotiations about the next steps to bring this terrible war to an end.
NATO Secretary General Mark Rutte. President Trump will also not attend the meeting. He talked about it in Doha this morning.
I was thinking about going, but it's very tough because of what we're doing today and tomorrow. But, if something happened, I'd go on Friday if it was appropriate. But we have people right now negotiating.
President Trump also says the U.S. is close to reaching a nuclear deal with Iran.
And you probably read today the story about Iran has sort of agreed to the terms. They're not going to make, I call it in a friendly way, nuclear dust. We're not going to be making any nuclear dust in Iran.
The president referring there to an NBC News report that Iran would be willing to commit not to have nuclear weapons in exchange for sanctions relief. President Trump says he does not want to have to take a violent step if negotiations don't work. The president also touched on trade negotiations with India. He says the country has made a dramatic offer.
India is one of the highest tariff nations in the world. It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff.
President Trump also said he told Apple CEO Tim Cook not to build in India and that Apple has agreed to expand production in the U.S. Apple had been shifting manufacturing from China to India to supply the U.S. market. U.S. and Chinese officials met for trade talks in South Korea just days after both sides met in Switzerland and agreed to pause some tariffs for 90 days. Here's Treasury Secretary Scott Bessent.
We're going to go into a series of negotiations. They're going to be fulsome and we have a lot to talk about, but I think over the next 90 days, we can accomplish a lot.
Treasury Secretary Scott Bessent speaking earlier this morning in Doha. Bloomberg News has learned Trade Representative Jameson Greer met with China's chief trade representative in South Korea this morning. Now to that breaking earnings news. Walmart delivered another quarter of solid sales and earnings growth, but cautioned that tariffs and increasing economic turbulence means even the world's largest retailer cannot hold off on price increases forever. Sales rose 4.5% at U.S. Walmart stores open at least a year for the quarter that ended April 30th. The results were better than Wall Street analysts were looking for, suggesting a decision to lower prices to win market share is paying off for the retailer. Deere trimmed the lower end of its profit outlook range even as quarterly results beat estimates. This as the company weathers uncertainties from global trade upheaval. Dick's Sporting Goods reached a $2.4 billion deal to acquire Foot Locker, combining two retailers saddled by President Donald Trump's tariff wars. Dick's will pay $24 a share for Foot Locker, which implies an equity value of $2.4 billion and an enterprise value of $2.5 billion. United Health Group under criminal investigation for possible Medicare fraud. That according to the Wall Street Journal, which reports the Justice Department has had a probe into the company's Medicare Advantage business since at least last summer. Cross-examination of R&B singer Cassie expected to begin today in the trial of Sean Diddy Combs. Cassie delivered testimony for a second day yesterday. Combs is accused of exploiting his status as a powerful music executive to coerce women, including Cassie, into drugged-up sexual encounters while he watched. The PGA Championship underway, with the first golfers teeing off this hour from Quail Hollow Club in Charlotte, North Carolina. And futures this morning, they are falling with S&P futures down 0.4%, Dow futures down 0.33%, NASDAQ futures down 0.5%, NYMEX crude oil down 3.6%, and the 10-year Treasury yield at 4.51%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
we have Apple, as you know, it's coming in. And I had a little problem with Tim Cook yesterday. I said to him, Tim, you're my friend. I treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India. You can build in India if you want to take care of India, because India is one of the highest tariff nations in the world. It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff. So we go from the highest tariff, you couldn't do business in India, we're not even a top 30 in India because the tariff is so high, to a point where they have actually told us, I assume you too, Scott, you were working on that also, that there will be no tariff, right? Would you say that's a difference? They're the highest, and now they're saying no tariff. But I said to Tim, Tim, look, we've treated you really good. We put up with all the plants that you built in China for years. Now you got to build us. We're not interested in you building in India. India can take care of themselves. They're doing very well. We want you to build here, and they're going to be upping their production in the United States. Apple. So Apple's already in for $500 billion, but they're going to be upping their production. So it'll be great.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
This has been a very interesting couple of hours. We discussed the world. We discussed Russia and Ukraine, where you've been a tremendous help in so many different ways. We certainly discussed Iran, where it's been really an interesting situation. I have a feeling it's going to work out. I think it's going to work. It's got to work out one way or the other. We know it's going to work out. But you were of great help, and other things. But in particular, trade. The trade is Kelly's telling me from Boeing, it's the largest order of jets in the history of Boeing. That's pretty good, and that's 140. Was that a 140 or 160? Well, yeah, but you're right. It's actually 200, including the 40, so it's over $200 billion. But 160 in terms of the jets. That's fantastic. So that's a record, Kelly, and congratulations to Boeing. Get those planes out there.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for
The Premier League is the pinnacle of club football. The theatre, the tension and the talent are unrivaled in a league which boasts nearly 2 billion followers worldwide. And yet...
Now, I'm not sure what would make you more miserable, being a Manchester United fan over the weekend or holding the stock this morning.
There's loads of losses. If we look at the top 5 leagues of English football, more than half of them are technically insolvent.
Just look at how many clubs in the Premier League lost money in 2023 to 2024. Only a handful of them actually managed to turn a profit.
I've had executives say to me, we're looking like behind the sofa, we're looking everywhere to get, a few pounds, dollars or whatever.
They're also looking overseas.
One of the things that English football clubs have started to realize on the backs of what's been learned here in America is that people are willing to pay for experience.
But some fans are worried they're being left behind.
To the corporates who are running our clubs and making the decisions, we are just customers and we can only be thought of in that way.
As clubs explore new opportunities to keep the money flowing in, does English football need greater American influence to keep it afloat? And if so, what might that mean for the future of the beautiful game? Beating inside any English stadium's chest is something tribal, fueled by pints. But these days, match day means different things to different people. From this, and this, to this, and increasingly this, thanks to all the money being lost.
It's certainly something we've seen in the United States over the past 20, 30, even 40 years. When an old stadium is demolished and a new stadium is built, there's a huge premium placed on premium seating. That's because you can charge more for it.
They're also able to utilize the facilities better, so they get more sales of food and beverage at half time and all those kind of things. That isn't really possible with really old stadiums.
As new stadiums are built across the Premiership, there's a premium placed on proximity to the pitch.
This has led to the rise of tunnel clubs at Premier League venues. Here, fans are able to wine and dine just metres away from top stars as they enter the arena. Kind of like an aquarium for footballers.
Getting you closer and closer to the action, that's an idea that's been long embraced in American sports, especially in the NFL.
While the concept was shaped in the US, Manchester City were the first to bring it to the Premier League. And now they're looking to the next stage of the club's expansion.
A lot is happening. You see that the music arena, 23,000 music arena, they have 120 events a year. The football club has 40 events a year. We feel that there is more demand for more capacity. So now we
guys, crude oil में पूरा profit book कर सकते हैं. Book the full profit in crude oil. Crude oil में पूरा profit book कर लेना यहाँ पे and exit कर सकते हैं buyers complete profit लेके. एक और ट्रेड देखते हैं यहाँ पर. ठीक है, बायर निकल जाना. बायर का हो गया टारगेट डन. बाकी नेचुरल गैस में भी सडन स्पाइक तो नहीं है, नॉर्मली कैंडल है वैसे तो. इफ यू लुक एट द कैंडल बिहेवियर, दैट इज अ नॉर्मल कैंडल. बायर एग्जिट कर लेना, बायर का हो गया टारगेट क्रूड में, वहां पर एक छोटा सा। हाँ वो भी ठीक है, कोई इशू नहीं है। फॉरेक्स फॉरेक्स का देखा नहीं सर, एमसीएक्स में तो नॉर्मली कैंडल है। फॉरेक्स में भी नॉर्मली कैंडल बनी है। बाकी आज एक्सपायरी है तो थोड़ा वॉलेटाइल तो रहेगा ही रहेगा। ऑप्शन की एक्सपायरी है, ऑप्शन बायर को लूटना भी तो है इन लोगों ने। इतने ऑप्शन सेलर हैं, वो देखो वहाँ पर 5300 का ओवाई देखो, लुक एट द 5300 ओवाई। Is natural gas also done? Natural gas target done. Book the profit in natural gas as well. Natural gas में book कर लो profit. ठीक है, natural gas में भी exit कर लेना, हो गया target done. 5 पॉइंट का टारगेट था, मिल गया टारगेट. बुक द प्रॉफिट इन नेचुरल गैस. 300 के ब्रेक होने के चांसेस हैं. 300 ब्रेक हो भी गया तो ऊपर एक और रेजिस्टेंस है 5350 पे. बाकी फिलहाल के लिए छोटा सा रेजिस्टेंस जहां से थोड़ी बहुत सेलिंग आ रही है. नीचे क्रूड ऑयल का टारगेट सेलर्स भी 5237 तक रख सकते हैं. ज़्यादा बड़ा नहीं है, 50 पॉइंट काफ़ी होंगे. ठीक है, 5237 तक रख लो सेलर्स. लाइक भी करते रहो गाइस. नेचुरल गैस में एग्जिट कर लेना. नेचुरल गैस का हो गया टारगेट डन इन नेचुरल गैस. क्रूड ऑयल में जिन लोगों ने सेल किया उनका टारगेट इतना ही है नीचे. बाकी अब दोबारा सेल मत करना, ठीक है. ऑलरेडी 2 बार सेलिंग आ गई है. लोअर लो नहीं बना तो फिर ब्रेकआउट कर जाएगा ऑटोमेटिकली. छोटा सा टारगेट ये लगभग 50 पॉइंट का है, यहाँ तक रख लो. इतना ही रखेंगे, फिर देखते हैं ब्रेक करके जाता है तो. क्रूड ऑयल में क्या करें, सेलिंग ही रेजिस्टेंस है छोटा सा. बस यहाँ से थोड़ा बहुत सेलिंग आएगी, फिर ऊपर जाना है, इसको ऊपर ही है. तो ये छोटा सा एक सेलिंग का ट्रेड है बस, वेरी स्मॉल. बाकी थोड़ा ऊपर और आ जाएगा तो यहाँ मुझे लग रहा है ज़्यादा बेटर ट्रेड बनेगा इसमें. अप्रॉक्सीमेटली कितना लेवल है ये, 5000 360 के अराउंड. 360 इस एरिया के अराउंड मिल जाएगा ना. यहाँ एक अच्छी सेलिंग होगी. दैट इज़ अ गुड एरिया फॉर सेलिंग. अगेन यहाँ पर टारगेट थोड़ा बड़ा रख सकते हैं. ठीक है, तो इतना छोटा सा ही टारगेट है ये, ज़्यादा बड़ा नहीं रखा हुआ है. बाकी अब यूएस मार्केट ओपन होने वाला है, उसका भी ध्यान रखना. 7 PM पे यूएस मार्केट ओपन हो जाएगा, वहाँ पर थोड़ा अलग वॉलेटिलिटी स्टार्ट हो जाएगी. जी, कैन वी सेल ऑफ क्रूड ऑयल ऑफ नेक्स्ट कैंडल इज नॉर्मल. नेक्स्ट कैंडल कौन सी? प्रीवियस कैंडल भी नॉर्मल ही है वो, कोई ओपन इक्वल टू लो नहीं है. फॉरेक्स में भी नहीं है, एमसीएक्स में भी नहीं है, और ये कैंडल भी नॉर्मल ही है. बाकी बार बार सेल मत करना इसमें. यहाँ पर ये दूसरी बार सेलिंग आ रही है, यहाँ पर तक ही जाएगा मोस्ट प्रॉब्ली. इसके नीचे जाएगा तब अलग हो सकता है, अदरवाइज यहाँ से वापस रिटर्न करना चाहिए इसको. देखते हैं. 7 PM कैंडल यूएस मार्केट इंपॉर्टेंट रह जाएगा उस समय. फेड के चेयरमैन की स्पीच थी, वो भी एंड हो गई है, थोड़ा चल रही है, बट जो उन्होंने मेन पॉइंट बोले हैं, लुकआउट एक तरह से निकल चुका है. तो मेनली उन्होंने यही कहा है कि जो इंटरेस्ट रेट हायर ही रहेंगे लॉन्गर टर्म के लिए, तो आने वाले समय में कोई रेट कट होने के चांसेस तो मुझे कम ही लग रहे हैं. ये एक मेन क्रक्स है फिलहाल के लिए। तो फेड की ओर से मुझे लगता नहीं अभी नियर टर्म्स में कोई रेट कट होने के चांसेस हैं मार्केट की वॉलेटिलिटी को देखते हुए। US is getting close to possible nuclear deal with Iran, which could lead to a lifting of sanction on Iranian oil. Also digest, अरे वाह, क्रूड ऑयल के लिए भी एक अच्छी न्यूज आई है थोड़ी देर पहले। यूएस की ओर से ये साइन मिला है, या फिर मैं कह सकता हूँ जो वहाँ के प्रेसिडेंट है उन्होंने ये बोला है कि जो ईरान के साथ एक न्यूक्लियर डील चल रही है वो बहुत जल्दी शायद कंप्लीट हो जाए, और वो ईरान पे लगे हुए जो यूएस के सैंक्शन है उनको रिमूव कर दें। ऐसा होता है तो ग्रेट न्यूज़। मुझे लगता है यूएस मार्केट ओपन होगा तो उस पर भी इम्पैक्ट पड़ेगा इसका। मेजर न्यूज़ है ये ईरान वाली। अगर एक देखना पड़ेगा इस पे इजराइल कैसे रिएक्शन देता है। के लिए तो अच्छी न्यूज़ है। अगर सैंक्शन हटते हैं तो ईरान से हम और ऑयल चीप प्राइस में बाई कर सकते हैं। लेट्स सी ये न्यूक्लियर डील होती है नहीं होती है। डेवलपमेंट राइट नाउ इन मिडिल ईस्ट। के 3 मिनट रह गए। ये क्रूड ऑयल में जिन लोगों ने सेलिंग किया हुआ है अपना एसएल ट्रेल कर लेना। यूएस मार्केट इज गोइंग टू ओपन इन 3 मिनट। यूएस मार्केट ओपन होने वाला है। छोटा सा एक सेलिंग का ट्रेड अगर किसी ने लिया है यहाँ पर, नहीं लिया तो बीच में एंट्री मत करना आप, ठीक है, लेट इट गो। नया ट्रेड बनेगा तो वो देख लेंगे। एक छोटा सा ट्रेड किसी ने अगर ये लिया है एसएल कॉस्ट पे रख लो। अब यूएस मार्केट के बाद देखते हैं। बाकी नेचुरल गैस का भी हो गया टारगेट डन। लेट्स सी कोई नया ट्रेड बनता है फिर से यहाँ पे। क्रूड में ही बनेगा नेक्स्ट ट्रेड भी, मुझे ऐसा लग रहा है। मिनट लेफ्ट। न्यूज़ देखो, न्यूज़ पॉजिटिव या नेगेटिव फॉर क्रूड ऑयल प्राइस, वैसे देखा जाए ओवरऑल तो पॉजिटिव ही है। जो इस ईरान के साथ न्यूक्लियर डील वाली जो न्यूज़ है, ओवरऑल पॉजिटिव ही कहेंगे। क्रूड ऑयल पे ओवरऑल तो पॉजिटिव ही इम्पैक्ट पड़ना चाहिए उसका। और भी फैक्टर हैं, उनको भी देखना पड़ेगा। बट ये सोलो न्यूज़ अगर मैं देखूं, दैट इज़ अ गुड न्यूज़। इंडिया के लिए तो अच्छी है, बाकी का कह नहीं सकते। कंट्री टू कंट्री डिपेंड करता है। ओपेक अगर देखोगे, ओवरऑल जो ओपेक कंट्रीज़ हैं उनके लिए अच्छी न्यूज़ नहीं है, क्योंकि फ़िलहाल ईरान पे लगा रखे हैं सैंक्शन। ओपेक कंट्री की वजह से वो ज़्यादा ऑयल प्रोड्यूस कर नहीं रहे, ओपेक कंट्रीज़, जिस वजह से प्राइस ऑलरेडी डाउन जा रहा है एंड दे कैन सस्टेन इट। तो अगर ईरान ओपेक कंट्रीज़ का कहना ना मान के अगर प्रोडक्शन बढ़ा दे और ज़्यादा इंटरनेशनल मार्केट में, और ज़्यादा प्राइस इंक्रीज कर दे, उस केस में हो सकता है क्रूड ऑयल के प्राइस और डाउन चले जाएं। सो इट डिपेंड अपॉन द कंट्री टू कंट्री। नहीं, मैंने बताया ना, इट डिपेंड अपॉन द कंट्री टू कंट्री। लास्ट मंथ जो ओपेक ने डिसीजन लिया था, उन्होंने यही बोला था कि हम प्रोडक्शन और ज़्यादा कम करेंगे, समझ रहे हो? तो ये कॉन्ट्राडिक्ट हो जाता है कि ओपेक की जितनी कंट्रीज़ हैं वो प्रोडक्शन कम कर रही हैं। प्रोडक्शन कम करेंगी तो प्राइस, आपको पता ही है प्राइस पे क्या इम्पैक्ट पड़ेगा ओवरऑल। बट अगर ईरान पे सैंक्शन हटते हैं, वो और ऑयल प्रोडक्शन करने लग गया, तो उस वजह से नेगेटिव हो सकता है। बट ओवरऑल ओपेक कंट्रीज़ का भी हमको देखना पड़ेगा, तो उसके वजह से वो थोड़ा सा एक पॉजिटिव साइन है। सो मल्टीपल फैक्टर्स अलाइन। यूएस मार्केट ओपन नाउ। यूएस मार्केट ओपन हो चुका है गाइस, यूएस मार्केट इज ओपन। नेचुरल गैस क्या करता है, मैं एक्सपेक्ट कर रहा हूँ नेचुरल गैस एक और कैंडल बना के ना ब्रेकआउट ही कर दे। सबसे बढ़िया वही रहेगा ट्रेड करने के लिए। बाकी यहाँ पर निकल जाना, वैसे बायर बायर का हो तो गया टारगेट। कोई नया ट्रेड बनेगा तो देखते हैं अभी। ये कैंडल क्लोज कहाँ होती है उस पर डिपेंड करता है सब। क्रूड ऑयल के लिए पॉजिटिव है या नेगेटिव है क्या, वो न्यूज़ कह रहे हो? क्रूड ऑयल के लिए तो वैसे पॉजिटिव ही है, बट जैसा मैंने बताया सिर्फ एक ही फैक्टर मत देखना, और ही बहुत सारे फैक्टर हैं। एक जगह हम कह रहे हैं कि अगर ईरान के साथ न्यूक्लियर डील हो जाती है यूएस की तो सैंक्शन हटा देंगे तो वो प्रोडक्शन बढ़ा देगा, तो उस वजह से तो प्राइस गिरना चाहिए। बट लास्ट मंथ ही ओपेक कंट्रीज ने बोल दिया कि वो प्रोडक्शन ऑलरेडी बहुत कम करेंगे समझ रहे हो, तो उस वजह से प्राइस और ऊपर जा सकता है, तो दोनों में कॉन्ट्राडिक्ट ना हो जाए। बाकी ओवरऑल देखोगे तो पॉजिटिव ही है। बाकी न्यूज़ थोड़ी देर पहले आई थी, ऐसा नहीं है कि अभी डील हो गई है, ठीक है। ऐसा बोला है ट्रम्प ने कि ईरान और यूएस के बीच जो न्यूक्लियर टॉक है, न्यूक्लियर डील है, वो पॉसिबल है, हो गई है नहीं बोला है। उस पर एक फैक्टर इसराइल का भी आ जाता है कि इसराइल क्या करेगा, ऐसा ना हो कि इसराइल वापस बॉम्ब कर दे ईरान को, क्योंकि इसराइल तो नहीं चाहेगा कि ईरान के साथ न्यूक्लियर डील हो। बाकी यूएस मार्केट हो गया है ओपन, अब सीधा इन्वेंट्री है, मुझे लग तो नहीं रहा वैसे अब नेचुरल गैस मूव करने के मूड में है यहाँ पर ज़्यादा। ऊपर रेजिस्टेंस है, नीचे सपोर्ट लेके आ गया, अब कितना ही मूव करेगा, इन्वेंट्री भी आने वाली है 8 बजे। मुझे लग रहा है शायद ये 8 बजे इन्वेंट्री के बाद ही मूव करेगा नेचुरल गैस मोस्ट प्रॉब्ली। उससे पहले कोई प्राइस एक्शन बना दे तो बेटर है, सो दैट 9 बजे के बाद 8 बजे के बाद ट्रेड हो जाए। ट्रम्प पागल है, कुछ भी बोलता है, ये भी हो सकता है। अभी एक और स्टेटमेंट आया उनका कि लाइक रसिया और यूक्रेन के बीच जो पीस डील है, जब तक मैं नहीं कहूँगा तब तक नहीं होगी। ये भी स्टेटमेंट दिया, अच्छा नहीं, जब तक मैं और पुतिन नहीं मिलेंगे तब तक नहीं होगी, ऐसा उनका स्टेटमेंट है। अभी आई थिंक वो टर्की जाने वाले हैं, वहाँ पर एक पीस डील होने वाली है रसिया यूक्रेन के बीच, उसमें यूक्रेन के प्रेसिडेंट हैं जो भी हैं वो जेलेंस्की, वो भी जाने वाले हैं। तो उन्होंने कहा है ट्रंप ने कि वो पीस डील तब तक नहीं होगी जब तक मैं पुतिन से नहीं मिलूंगा पर्सनली। सो देयर इज लॉट्स ऑफ थिंग्स गोइंग ऑन अराउंड द कॉर्नर। थोड़ी देर पहले एक और स्टेटमेंट आया, उन्होंने एप्पल को कहा है कि इंडिया में अपना प्रोडक्शन इंक्रीज ना करें, बेटर है कि आप यूएस में ही अपना प्रोडक्शन इंक्रीज कर दें। कैंडल देखते हैं क्या कैसे मूव करती है, अभी इंपॉर्टेंट कैंडल है। एक ट्रेड मुझे लग रहा है और बन जाएगा क्रूड ऑयल में। नेचुरल गैस का मैं इन्वेंट्री से पहले अब कुछ कह नहीं सकता, यहाँ पर नया कुछ ट्रेड होगा। लाइक कर दो गाइस, 65 पीपल आर वाचिंग, ओनली 37 लाइक्स, आधे लोगों ने लाइक ही नहीं किया होता। लाइक कर दो सभी लोग। गोल्ड को भी देखोगे तो वो रेजिस्टेंस पे जा चुका है, रेजिस्टेंस पे हिट कर चुका है, वहां से थोड़ा बहुत सेलिंग आ रही है। तो रेजिस्टेंस नहीं, वो रिटेस्ट जोन है, 2 बार हो चुका है, तीसरी बार कर रहा है रिटेस्ट। 1000 एयर ऑफ कश्मीर मैटर सॉल्व कर देंगे। पागल आदमी कब क्या बोलेगा कह नहीं सकते। नहीं, पागल आदमी जरूर है, बट मार्केट को हिला देता है ना। इतनी पावर तो है कि मार्केट मूव करा दे। पुट का ध्यान रखना है, सेलिंग वाला ट्रेड जो लगा रखा है, ठीक है, छोटा सा ही। यूएस मार्केट ही कैंडल है, अगर एसएल जाता है कॉस्ट टू कॉस्ट का तो निकल जाना, कोई इशू नहीं है। नीचे आ जाता है तो ये ब्लू कलर की लाइन के आसपास देखते हैं, या फिर ऊपर जाएगा तो 5360 के आसपास वापस सेलिंग के लिए। रेजिस्टेंस फिर यहीं से मिलेगा, इस जोन के आसपास कहीं। 10 मिनट और है। ट्रम्प का मुंह ही बंद नहीं होता। बाइडेन सही था। देख लेते हैं बोला क्या है एक्चुअली में, एग्जैक्टली exactly.
Can President Trump just end birthright?
News when you want it with Bloomberg News Now. I'm Nathan Hager. Thursday morning trading is officially underway on Wall Street, and after 3 straight winning sessions, investors are pointing to losses at the open. That is the sound of the opening bell from the floor of the New York Stock Exchange, and the S&P 500 is lower by 0.4%, down about 24 points at the open. The Dow Jones Industrial Average opens lower by 0.5%, down more than 200 points. And the NASDAQ Composite also in the red by 0.6%, a drop of more than 120 points. Treasuries are rising, the 10-year yield falling 5 basis points to 4.48% on a morning with a lot of economic data. Retail sales barely budged in April. It suggests consumers pulled back spending on concerns about tariffs. Producer prices, meanwhile, unexpectedly dropped 0.5%, in a sign companies are absorbing some of the hit to their margins. Neela Richardson is chief economist at ADP and a Bloomberg contributor.
If you're looking really for some good news on inflation, you found it today. And that is the through line. And also, if you're looking for good news on the labor market, you see it continue. So those initial jobless claims still at historical lows, that is helpful for an economy built on consumption.
Neela Richardson at ADP, and weekly jobless claims did come in unchanged from the week before at 229,000. Still, the head of America's biggest bank says tariffs are creating uncertainty.
I think all these things are probably inflationary a little bit more and slowing down the economy. If there's a recession, I don't know how big it'll be or how long it'll last. Hopefully we'll avoid it, but I wouldn't take it off the table at this point.
J.P. Morgan Chase CEO Jamie Dimon with his latest thoughts to Bloomberg's Francine Lacroix at the bank's Global Markets Conference in Paris. Still, the data today are reinforcing bets in the markets that the Federal Reserve could be on track to cut interest rates twice this year. There is still major uncertainty around the war in Ukraine. European leaders have been accusing Russia of undermining peace talks by sending a low-level delegation to Istanbul. Ukrainian President Volodymyr Zelensky had said he would fly to that Turkish city to meet with Vladimir Putin. But for President Trump,
nothing's going to happen until Putin and I get together, okay? And obviously he wasn't going to go. He was going to go, but he thought I was going to go. He wasn't going if I wasn't there.
President Trump spoke to reporters on his way to Abu Dhabi after starting his day with business leaders in Qatar. Bloomberg's Jumana Bersecci reports the president said the U.S. may be close to a nuclear deal with Iran.
That is the first time we hear that the two sides may actually be closing in on a deal. There have been 4 rounds of discussions. On the back of that, you've seen a notable price action in the price of oil because of the expectation that some of those sanctions may be removed and it will be easier for Iranian oil to find its way to the market.
Bloomberg's Jumana Bersecci in Abu Dhabi, and checking oil prices right now. West Texas Intermediate's down 2.4%, trading above $61 per barrel. Brent, the international benchmark, is about $64.50 a barrel. President Trump also told business leaders that India has offered to drop tariffs on U.S. goods. India hasn't commented on that, but the country's external affairs minister has said any judgment on trade talks would be premature. President Trump also says he urged Apple CEO Tim Cook not to build in India. He says the iPhone maker is going to boost U.S. production. Following that conversation, Apple has been pivoting to India from China for iPhones bound for the U.S. Back in Washington, House Republicans have been making progress on President Trump's massive tax cut bill. We get a progress report from Bloomberg Government's Maeve Sheehy in Washington.
They had a bunch of markups this week on the most controversial parts of it, including Medicaid cuts. And the key committee has actually advanced those kind of late last night and the night before. So that's a step forward, although there are still major issues between House Republicans on this, not even to mention how the Senate might change the bill.
Bloomberg Government's Maeve Sheehy reports the official estimate on the cost of the bill is $3.8 trillion over 10 years, but a centrist watchdog says the Medicaid cuts could bring that down to $3.3 trillion. Back on Wall Street, we got earnings this morning from the world's biggest retailer. Walmart posted strong sales and earnings growth once again, but warned that tariffs are going to bring higher prices starting this month. Joe Feldman covers Walmart at Telsey Advisory Group.
It's not surprising in this environment. I mean, tariffs are creating a lot of uncertainty and causing retailers to need to take price increases, which, Walmart is going to be one of them doing that as well.
Joe Feldman at Telsey Advisory, and at the open, Walmart shares are lower by 4%. We also heard from Deere & Company. It cut the lower end of its profit outlook on trade uncertainty, but still posted strong earnings in the quarter. Deere shares are up 5%. United Health is down 13%. The Wall Street Journal is reporting the health insurer is under criminal Medicare fraud investigation. And look at Foot Locker, surging 83% at the open. Dick's Sporting Goods is buying that company for $2.4 billion. Dick's shares at the open are down 12%. Round 1 of the PGA Championship is underway at Quail Hollow Club. At last check, Ryan Fox and Tommy Fleetwood were tied atop the leaderboard at 3 under par. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
ओके क्रूड ऑयल में प्रॉफिट बुक कर सकते हैं। ये छोटा सा सेलिंग का ट्रेड था, इसका हो गया टारगेट। प्रॉफिट बुक कर लो यहाँ पे। इसमें प्रॉफिट बुक कर लो, अब सेल मत करना, वापस आएगा तो बुक द प्रॉफिट, फुल प्रॉफिट। यहाँ पर एक कैंडल भी गैप डाउन हुई है। एक बाइंग का प्लान करें यहाँ पर। अब यूएस मार्केट भी ओपन हो गया, देखो अब कोई न्यूज़ वगैरह आ गई तभी कुछ होगा अच्छा खासा, अदरवाइज तो मुझे कुछ खास लगता नहीं है कि प्राइस मोमेंटम होने वाला है कुछ। अब सेलिंग का एग्जिट कर लेना, सेलिंग का ट्रेड डन हो गया। लेट्स सी अभी ब्रेकआउट करता है तो। ऊपर अभी भी रेजिस्टेंस है, ब्रेक नहीं हुआ है। लेट्स सी, एक्सपेक्ट कर रहा हूँ कि मैं ब्रेकआउट कर दे। और ब्रेकआउट करके थोड़ा ऊपर आ जाए, वहां से वापस सेलिंग करे। देखते हैं ब्रेक कर पाता है नहीं कर पाता है हाई के अराउंड, थोड़ा सा इस लेवल के आसपास, नहीं तो ये टारगेट फिर यहाँ से वापस सेलिंग ज़्यादा बेटर रहेगी। एक रेंज अलग कर देगा मार्केट उस केस में। नेचुरल गैस मुझे लगता नहीं कुछ ट्रेड बनेगा, अब इन्वेंट्री आने वाली है, उसी का वेट कर लो इन नेचुरल गैस। तनिक जी हेलो।
Right citizenship with an executive order? That will eventually be up to the Supreme Court, but clearly there's a really big obstacle, the 14th Amendment to the Constitution, which says that all persons born or naturalized in the United States and subject to the jurisdiction thereof are citizens of the United States. I recently read through the 1866 congressional debates on the amendment to figure out why it says that. The Civil War had just ended, and the 13th Amendment had ended slavery. But its author, Senator Lyman Trumbull, and many of his fellow Republicans worried that black Southerners would continue to be treated like slaves. So Trumbull proposed the Civil Rights Act of 1866 to protect them. One complication was the 1857 Dred Scott decision, in which the Supreme Court had ruled that former slaves and their descendants could not be U.S. citizens and thus weren't guaranteed rights by the Constitution. As part of his Civil Rights Bill, Trumbull set out to address that, first with language stating that all persons of African descent born in the United States were citizens. A day later, he reconsidered and went with more expansive wording. All persons born in the United States and not subject to any foreign power were citizens. Birthright citizenship had been the norm in the U.S. since its founding, and the Dred Scott decision an error, Trumbull argued. He was simply writing the guarantee into law. But just to be sure, Republicans in Congress then decided to put similar protections into the Constitution with the 14th Amendment. They wanted to prevent future attempts to restrict citizenship on the basis of race or ancestry. A few members of Congress and President Andrew Johnson objected that this would make citizens of the children of Chinese workers in the West. Undoubtedly, said Trumbull, he and the majority of his colleagues were fine with this. After that, hostility to non-European immigrants continued to grow, but birthright citizenship held up. In 1898, the Supreme Court ruled that the San Francisco-born son of Chinese immigrants, who themselves weren't eligible for citizenship, was a U.S. citizen entitled to equal protection under the law. In 1982, the court ruled that the U.S.-born children of illegal immigrants were also covered by birthright citizenship. Soon, the Supreme Court will be called on to make its first preliminary ruling on Trump's executive order. It's uncertain how that will play out, but I'm pretty sure what Lyman Trumbull and the majority of his colleagues in 1866 would have to say.
अब नेचुरल गैस में इन्वेंट्री का ही वेट करते हैं, और तो मुझे कुछ ट्रेड लग नहीं रहा है इसमें। बाइंग वाले निकल गए होंगे, उनका टारगेट तो अच्छा हो गया था। बाकी जिनको हो चुका है प्रॉफिट, अब अवॉइड करना अननेसेसरी रिस्क लेने से, ठीक है। क्रूड ऑयल में ये डे हाई ब्रेक करता है, थोड़ा सा अच्छा टारगेट मिल जाएगा ऊपर का। ऊपर आता है तो वहाँ वापस सेलिंग का प्लान देखेंगे। ये छोटा सा बाइंग का ट्रेड है, मतलब छोटा तो नहीं है, 100 पॉइंट का है, बट उसके लिए मार्केट को ये ब्रेक करना ज़रूरी है। ब्रेक कर देता है तो आ जाएगा इजीली, नहीं कर पाया है तो थोड़ा साइडवे जैसा भी जा सकता है, बट मेरे अकॉर्डिंग ब्रेक होना चाहिए, क्योंकि लो लो बना नहीं है लास्ट लेवल पे। लेट्स सी 5299 के ऊपर क्लोजिंग आती नहीं आती 15 मिनट की कैंडल की, आ गई तो बढ़िया रहेगा। टारगेट बड़ा मिल जाएगा, लगभग 110 पॉइंट के आसपास। इसको टू पार्ट्स में डिवाइड भी कर सकते हो, थोड़ा टारगेट और बड़ा रख लें क्या इसको, 123 तक कैसा रहेगा। 103 ठीक है, यहाँ तक कर लो इसको। ये लगभग 120 पॉइंट हो गया, तो 60 के 2 टारगेट हो सकते हैं, ठीक है। ये जो लास्ट रेजिस्टेंस जो है ना, ये पहला टारगेट, इसके ऊपर निकलेगा तो ये सेकंड टारगेट निकलता है, तो यहाँ पर क्लोजिंग आनी चाहिए तभी जाएगा ऊपर। तो इसको 2 पार्ट में डिवाइड कर लेना टारगेट को। फर्स्ट, ये पर्पल कलर की लाइन इसके ऊपर निकल क्लोजिंग आती है तो फिर ये 5360 के अराउंड वहाँ सेलिंग का प्लान रहेगा। ये फर्स्ट टारगेट है। क्लोजिंग इंपॉर्टेंट है, विक वगैरह बना दे उससे फर्क नहीं पड़ेगा, क्लोजिंग आ जानी चाहिए बस। लाइक भी करते रहो गाइस। इन्वेंट्री का बाकी वेट करते हैं नेचुरल गैस में। लेट्स सी इन्वेंट्री में कैसे मूव करता है प्राइस। तो पहला टारगेट हो गया है, हाफ प्रॉफिट बुक करो, रिमेनिंग क्वांटिटी ट्रेल करो। कैंडल क्लोज होती है तो ये सेकंड टारगेट क्रूड में, नहीं होती है तो कॉस्ट टू कॉस्ट ट्रेलिंग एसएल रिमेनिंग क्वांटिटी का हाफ बुक कर लेना। थोड़ा बड़ा टारगेट लगाया है 120 पॉइंट का, छोटा टारगेट नहीं है। बाकी यूएस मार्केट ओपन हो गया, थोड़ा मार्केट मोमेंटम अच्छा होना चाहिए, इतना मैं एक्सपेक्ट कर सकता हूँ। साइडवेज तो नहीं जाएगा।
Andy, we have seen some changes in U.S. Medicare systems. Where are you expecting growth to come for this drug?
Yes. Xtandi is still growing in every region all over the world, but the U.S. We have the Medicare Part D redesign impact, which started at the January 1st this year. So the FY 2020 fiscal year 2024 we had only 1 quarter effect, but we have to have the full year effect for the next fiscal year. But we believe that Xtandi still grow in other countries outside of the U.S. So overall, it's in the stable situation.
The problem right now is other countries around the world, given how complicated the trade situation is,
Exactly.
right?
Mm-hmm.
How is Astellas preparing for these potential tariffs on the pharma sector?
Yes. So, it is too premature, and it is rapidly changing day by day. So we are running some scenario planning type of models, but it is too premature to speculate what exactly the impact of the tariff.
Where do you produce the most?
All over the world.
All over the world,
Yes.
okay, because we are also thinking about currency effects as well, right?
Yes.
With the weakening of the US dollar. How does that affect your business?
Of course, our reporting currency is Japanese yen. So, weaker Japanese yen, actually increases our revenue as well as the profit, the vice versa. So, if the yen continues to, appreciate it, that has the negative impact on our revenue as well as the profit.
Naoki, it's Paul Allen here in Sydney. You're also dealing with an activist investor in the shape of Forellan Capital. Seems to have built quite a large position in your company. Can you tell us about the sorts of discussions you're having with them at the moment?
Yes, we continue to engage with our stockholders as well as the investors. And we don't make any comments about the specific dialogue with one of our investors. But we are pleased that one of the most prominent investors like Farallon really sees the potential value in Astellas. So we have been we have the dialogue with any investors as well as the shareholders on a regular basis.
I understand that you wouldn't want to share details of any conversations you're having with them on global television, but do you have any sense of some sort of shareholder proposals that you might be receiving at the next annual general meeting?
We haven't received any shareholder proposal for this year's annual shareholders meeting. I don't know what's coming, but so far we haven't received any shareholder proposal.
We have seen Farallon, when they engaged with Toshiba, for example, that it involved the election of directors to the board and some big changes over there. Are those some of the things that Astellas could entertain as sort of the things that they want to change?
I think based on our dialogue, of course we take any advice into our management plan. So if it really increases the company value, we would be happy to listen to their opinion.
Are you talking to them more because they've been engaged since 2020, right?
Yes, and no, actually the frequency is on a regular basis. Most of the time, after the earnings calls and any significant announcement that we made.
Let's talk a little bit more about your products, because we know that last time you were here, we were talking about the non-hormonal drug for hot flashes, menopausal drug, Veoza, I think. How is that drug doing so far? And we've also seen that the FDA now wants a big warning when it comes to potential liver damage on the packaging. How much could that affect your business?
Yeah. Veoza, we unfortunately downgraded our, long-term forecast for Veoza, but, after that, the product is, running on track. And even after the, black box warning, we still see, increase in the prescription for the, women with the, vasomotor symptoms for menopausal women.
So that's in the U.S. Are you thinking of development here in Japan, and would that work?
Yes, we are running clinical studies in Japan.
Are the regulations different in Japan?
Yes, a little bit.
When it comes to potential warnings that could go into place?
That's a different story, actually.
What about the cultural mindset that we talked about last time, right? I mean, menopause is a big deal that is not talked about as much. Do you think the cultural atmosphere in Japan will continue to change?
I think so, because, compared to, say, 30, 50 years ago, because the women are in the social situation a lot. So when it comes to working life balance and how women can contribute to society, probably the situation will dramatically change in the future.
Yes, this is something that we should be talking about a lot, menopause. What about other drugs in the pipeline that you're optimistic about? Where do you see future growth?
Yes. So, we are facing the loss of exclusivity for Xtandi in a couple of years. And we have been preparing for replacing the Xtandi revenue with the 5 strategic brands. One is Veoza. Another one is Padcev for bladder cancer. Number 3 is Izervay for geographic atrophy for age-related macular degeneration. We have a long-standing Zospata, which is the acute myeloid leukemia drug. And last year, we launched Vyloy for gastric cancer in Japan, US, and Europe.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
There are no winners in tariff wars or trade wars. Bullying or hegemonism only leads to self-isolation.
Our next guest has just written a book titled Should the World Fear China? That's a collection of essays unpacking China's own view of its role in the world today. Let's get insights from Joe Bo, a retired senior colonel in the People's Liberation Army and now senior fellow in the Center for International Security and Strategy at Tsinghua University. Bo, good to have you with us. We heard Xi Jinping saying no winners in the trade war and the tariff war, but in the first round of negotiations, it does seem that China did win. This is a massive win for China.
Well, I do agree with you, Linda. Well, because Trump actually has backed down, so therefore, I believe China has really won this tariff war for the first round. Yeah, the point is that China has made it quite clear that it will fight to the end. So therefore, China is the only country that has actually responded most aggressively to Trump's war over tariff. Actually, it's not the only area in the economic field. Militarily speaking, China is also the only country that would challenge America's freedom of navigation operations, yeah, for example.
Well, you got to wonder how much leverage China can get from the first round of negotiations. How will it position itself in future rounds of negotiation?
Well, it's very simple. You see, Haslinda, if a big power tries to bully a small power, most probably it will succeed. But given that China's economy is so close to that of the United States, and in terms of PPP, China actually is the largest economy. So therefore, this kind of strategy of exerting maximum pressure on China would not work. This is just a common sense, right? If you just want to bully a small country, like you know what has happened, Vietnam, well, Vietnam could just give in, go quickly. But on China, a country of this massive size with so many leverages, yeah, be it mineral or EV cars or so on, all these kind of things. So it's a common sense that Trump will not get to where he wants to. So he talked about a reset the relationship, but I believe he actually reset himself.
Talk to us about the reset. What's your understanding of that reset in relationship between the two countries? How might China play that?
Well, I think reset actually starts from the American side. Yeah, it has a reset. It's a narcissism. It's a mentality. Yeah, it's a strategy. And China is responding. But I also believe, of course, with the door open for negotiation, the two sides definitely will continue to talk about it. And I'm very, very happy to know that they're going to have a different working group for talks, so on and so forth. This reminds me of what happened during Obama administration, the so-called strategic and economic dialogues, where there are so many baskets. Of course, this won't be the case, right? But this is the beginning, maybe of a new era between China and the United States. The significance is not only economic field. You see, I think compared with Trump first, I mean his first term, China actually this time is becoming more confident, and this will actually invite a lot of ramification and significance to our relationship in the future. Briefly speaking, China will be more brave to face any challenges posed by the United States, wherever they are, whenever they are.
Bo, I'm trying to understand if anything has changed fundamentally, especially in the way China thinks and, its role in this U.S.-China dynamic. I mean, we heard from Trump that, China has agreed to open up the country, its economy to U.S. businesses. Has anything changed at all?
Of course, a lot of things have changed fundamentally. First of all, Chinese leader would say that this is changes are in a century. But what does that mean? The changes, of course, are not seen in last century. But you can argue that in every century there are so many changes. In this century, however, the biggest change is that China is getting stronger, and that is the most important part. And then the question is the United States declining or not? The U.S. would not be happy if you describe it as in decline, but if you say they're in relative decline, they have to admit. But to think that American economy is half of the whole world after the Second World War, now it's only a quarter. And who is the declinist? Actually, the largest declinist is Donald Trump himself. Because during his first term, before his first term, he described the United States in a carnage, and he's the man to lead America great again. So he actually is making use of this kind of decline mentality, and he became American president. So I think the strength actually has shifted. Globally speaking, the world is moving towards the Asia-Pacific or Indo-Pacific, whatever you call it, because the conclusion, even by the West, to Munich Security Conference, is that not only the world is becoming less Western, but the West itself is becoming less Western. And the theme of this year's Munich Security Conference is multipolarization.
But Bo, I think there are lots of people out there as well who hold a different view that the U.S. is not in decline. And if you take a look at the markets, for instance, the concept of U.S. exceptionalism continues to be a theme. And they say that the U.S. economy remains pretty strong. Indicators suggest that as well. I just want to take a look at what you can expect in the next 90 days. We talk about how, there's been a suspension of those tariffs for 90 days. What do you see happening? Because when it comes to the issues that need to be ironed out, like semiconductors, like technology, these are really complicated issues.
Well, I hope that Donald Trump can honor his words. So that means he will just call President Xi. Yeah, it is he who would call President Xi, and rather the other way around. And then, of course, there's a working group that will start to work. And I believe 90 days are long enough, so they can really work out a lot of deals. By and large, I believe this kind of deal eventually would like a balanced deal, because neither side can afford to lose face. So eventually we come to the starting point, more or less. But on the new ground.
As it stands now, can you see both the U.S. and China coexisting on an equal level?
I think so, because this has to be the case. You see, the best point probably is for the United States to give up this kind of notion that the U.S. is indispensable, is a city up on the hill, because this would actually create a kind of narcissism. But when this narcissism is found nowhere, they start to panic. They start worrying, and they start to look for enemies. But if you believe that, Western civilization, like Chinese civilization or Asian civilization, is but only one civilization, then you just would remind yourself, how could I just coexist with the people of other civilizations? And this is the basis of coexistence.
Talk to us about how you're assessing what's at stake for both sides, bearing in mind the compounding implications of this relationship.
Well, this is really a big question, yeah, because I believe what will make China-U.S. relationship different from the U.S.-Soviet relationship during Cold War is that we have to establish a kind of a new equilibrium. This equilibrium would not be, parity of nuclear weapons as found during Cold War. It must introduce some new areas such as AI, cyber, and outer space. In these areas, the difference between the two sides is not very big. And the good thing is China and the United States are not enemies. Yeah, we may not be friends, but we are described as by the United States as competitors. But competitors are not enemies. So actually, we have a better ground for coexistence. I think this is what we will have to manage. People say, well, whether we have entered into a new Cold War or not. Right. Well, we don't know. Why we don't know? Because we're looking into the future. We don't know in the future it will be a hot war or Cold War. Why did we have the so-called Cold War? During the Cold War, actually, every day people were preparing for hot war. And when finally they signed with Leaf, okay, what happened was about a Cold War. So that means when they look back, they concluded it's a Cold War. So we don't know what lies in front, whether it's hot war or Cold War.
as my birthday signals another milestone in my life. I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to
This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Heidi Stroud-Watts in Sydney. The top stories this hour. Signs of buyer fatigue in stock markets as investors evaluate risks, including tariff tensions and sticky US inflation. Oil is in focus on reports that Iran is willing to commit to not pursuing nuclear weapons. Tencent's US traded shares jump after quarterly sales grow 13%, the most in more than 3 years. And Boeing seals a record deal to deliver hundreds of planes to Qatar Airways as President Trump continues his Middle East investment push.
Certainly, Heidi, as we look at markets, geopolitics continues to be in the mix. I mean, we've seen much of this week. They've been rallying hard on this U.S.-China trade truce. So we're going to be watching very closely any signs of a further cooling when it comes to APEC ministers, trade ministers in particular, meeting in Jeju. Does that kind of enhance the odds of any forms of trade deals for these Asia-Pacific countries? In the meantime, to your point about this buyer fatigue really settling into U.S. markets, we are watching whether it's going to feed in through the Asia session. Certainly, we've already been seeing that in Japan just a day ago in terms of stocks there kind of pulling back after a relatively long winning streak. Today, looking at some of these Nikkei futures also looking quite soft there, Heidi.
Yeah, take a look in particular when it comes to the commodities and space when it comes to energy, because we're seeing that pretty steep reaction across oil prices, WTI at the moment, at these developments over Iran. We're seeing already, of course, some of these prices falling for a second day after a 4-day rally for oil. But at the moment, we're hearing that Iran would commit to nuclear weapons, to no nuclear weapons, I should say, in a deal being reported. And that would be the deal with the US in exchange for sanctions relief. So we're seeing that reaction across New York crude at the moment. When it comes to the futures trading session, as you said, that fatigue kind of settling in there, both when it comes to NASDAQ 100 futures and S&P futures at the moment looking pretty lackluster. Watching treasuries as well, as sort of these expectations continue to be repriced as to what these inflation prints that we've had this week and the implications for the Fed timing going forward. But let's get back to our top story. And Bloomberg has learned that US officials negotiating trade deals are not working to include currency policy pledges in these agreements. Let's get the details now from our Bloomberg News editor, John Harney. So, this is a pretty interesting aspect that could have significant implications for the deals that we end up getting.
Yes, the dollar has fallen about 8% since Donald Trump's inauguration, and currency markets, along with other markets, of course, with all the turmoil regarding tariffs and trades, have gotten rather jittery, fearing, perhaps, that the United States might prefer a weaker dollar as it pursues new trade accords. Scott Bessent, the Treasury Secretary, has tried to disabuse trading partners as well as, no doubt, traders and markets that this is not the case, and he's at two high-profile forums, including at the IMF meetings here in Washington recently. He said that the United States remains the premier destination for the world's capital.
John, as we also hear about Iran being in the mix in terms of, committing potentially to no nuclear weapons, certainly, there's that specter of what this could mean for oil supply globally. But what are you hearing in terms of the US and Iran, and what might be ironed out?
Well, clearly, Donald Trump seems to, even as he tours the Middle East, seems to have taken a great interest in a possible accord with Iran, a longtime adversary of the United States, going back, of course, to the fall of the Shah and the hostage crisis of 1980, late in the Carter administration. Of course, this is something that Israel, under Benjamin Netanyahu, does not want. And it should be noted that Israel is not on the itinerary of President Trump's trip to the Middle East. But, again, nothing seems to be forthcoming at the moment. This is all somewhat speculation, but it certainly bears watching in the days and weeks ahead.
John, you mentioned Israel, which has been such an interesting dynamic or non-dynamic, right, in terms of what President Trump is not doing on this trip. What do we think is going on here in terms of this lack of engagement with Netanyahu, when we know that certainly previous and historically U.S. administrations have been consistently very supportive, particularly when it comes to the conflict in Gaza?
Not only has the United States been very supportive of Israel, and I should not say that there's any less support now, but Donald Trump and Mr. Netanyahu have been very close since before the first Trump administration, and they're allies and seem quite friendly. So again, there's much that perhaps is going on behind the scenes. We really don't know. And another thing that happened recently was the release of the American hostage who has dual citizenship, but who also has Israeli citizenship. That was done being free from Gaza by Hamas. That was done without the involvement of the Israelis.
John, while Trump is in the Middle East, we've seen, him really working to get these investment pledges a day ago from the Saudis, now the Qataris, but there does seem to be a bit of a gap between what Trump is looking for and what some of these Middle Eastern countries are able to provide. What is considered a win for him at this point?
Well, of course, we talked about diplomacy regarding Israel and Iran just now. But Donald Trump is clearly reveling in his role as, if you will, businessman, statesman during this trip to Saudi Arabia, Qatar, and the UAE. That said, I mean, you can say that perhaps there were some exaggerations over these investments, over the amounts, but they're substantial. He announced, or the White House announced, some, I believe it was $243 billion in Qatar today. That would include a substantial $96 billion of planes provided by Boeing and drones that were being purchased by Raytheon and other defense contractors. So certainly this trip has been good for American companies, even if maybe the numbers aren't quite what was presented at first, but they're not insignificant.
Bloomberg News editor John Harney, as really the news flow when it comes to Trump's Middle East trip continues. We do have some breaking news when it comes to Treasury One estates in terms of the management team. Sam Fisher being named as CEO, taking effect from October 27th. And of course, Treasury One has been historically one of these stocks, one of these companies in Australia that has been pretty badly impacted by previous bouts of trade tensions, particularly between Australia and China. But we've seen that sort of a recovery when it comes to the improvement of that relationship, and also pretty minimal, I should say, impact being seen from the impact of US tariffs as well on Australia and on its US portfolio.
Yeah, Heidi, I think it's really this tariff story that we are continuing to track. And indeed, we're hearing how Japan's top trade officials are skipping an APEC meeting beginning today in South Korea, potentially missing a chance to advance talks with the U.S. on a tariff deal. Our chief North Asia correspondent, Stephen Angle, joins us from the meeting venue in Jeju. So, Steve, kind of set the scene for us here. What are some of these trade ministers looking to achieve out of these meetings?
Yeah, well, it's first light here on the resort island of Jeju, south of the main peninsula of South Korea, where the 21-member economies, their trade representatives and trade ministers will be gathering. We're trying to figure out exactly who will be here, who flew in last night. We do know the Vice Minister of Commerce, Mr. Li from China, did come in from Beijing late last night. We saw him personally, but also Jameson Greer, the U.S. trade representative, fresh off those talks with the likes of Li and He Lifeng in Geneva. He is going to be here, and that could sort of dominate the attention of the other member nations of APEC as they try to get some face time with Jameson Greer. Now that they realize, okay, a truce can happen with China, perhaps we can get further on into the queue to meet with the U.S. officials, including Jameson Greer, and eventually, of course, the U.S. Treasury Secretary Scott Bessent, who is sort of leading the charge in talks with China. Can other nations, like Vietnam, obviously the host nation, South Korea, they have other issues to contend with right now as they approach a very critical presidential election on June 3rd, and officials here have already said it would be theoretically impossible to come up with some sort of trade deal with the United States ahead of that election. But nevertheless, the trade minister will be here of South Korea as the host nation and we're hearing from local media that he will, on Friday, tomorrow, meet with Jameson Greer. So it's going to be a real, how would you describe it? Just a crush to get some face time with Jameson Greer to see, A, what is the parameters that were not reported on that truce with China, and B, how does it affect what kind of negotiations could potentially be had between them and the United States as other nations try to mitigate those reciprocal tariffs that were imposed on April 2nd and then, of course, paused for 90 days.
Steve, even as we look for sort of more of the contours, the details of this détente, we're still getting more overtures from each side, right? Particularly from China at the moment. They've put a pause when it comes to these rare earth export curbs for military entities in the US. How significant is this, given that, you know, China's hoard of rare earths and other critical minerals has long been kind of used as potential leverage?
Well, you know, we're out in the middle of the ocean here, so obviously I'm not hearing what you just said, but I'm anticipating you are asking me about the pause by Beijing, their steps following the truce that was had over the weekend in Geneva. Essentially, what China is doing is following through on the verbal pledges that they made to Scott Bessent and Jamieson Greer to kind of lower the temperature, A, but also B, to kind of suspend those moves that they made to put those export bans on critical minerals, including those industrial magnets, which are critical to the U.S. supply chain in technology, but also essentially for the military supply chain for the United States as well. So China is going to put that 90-day, actually it was effective yesterday, a 90-day pause on the export of those rare earths and metals that are critical to the supply chain, something that Donald Trump has talked explicitly about, that would be a main goal of those talks over the weekend. So now going forward, we'll have to see how much dialogue, again, China and the United States can have to kind of hammer out a longer trade peace beyond those 90 days, and then we'll go from there. But again, here in Jeju, the emphasis is going to be getting FaceTime with Jamieson Greer and seeing what those other nations, as I mentioned, including South Korea, the host nation, and then countries like Vietnam, Canada, Mexico, Australia. These are all member nations of APEC. We're also going to try to figure out who's coming and who's not.
And I'm sure you'll be keeping tabs on all that for our Stephen Engel for us there out of Jeju. Now, we also have breaking news for you when it comes to this journal reporting that United Health is under a criminal probe for possible fraud. It's said to have been a probe that's been active since at least last summer, and this is something that is centered around, I think, Medicare's Advantage practices. Again, United Health under a DOJ probe for possible criminal fraud, and we're already seeing that reaction in the after hours, the share price dropping about 6% there. Heidi?
Yeah, we're also watching the reaction that we're seeing to the downside when it comes to oil at the moment, right? We heard, of course, reporting that Iran would be committing to a deal that says no nuclear weapons development in exchange for sanctions relief, according to some reporting that we've seen. We are hearing that Shamkhani is saying that Iran is ready to sign a deal under certain conditions. So this is also why we're seeing that sort of extended sell-off when it comes to oil. It was already declining for a second day. We did have that pretty strong 4-day rally. We had the biggest weekly build in US crude inventory since March. So the sort of government data side, the supply side is not helping the situation either. But that sort of futures rally was almost a 10% element there. So we are seeing downside now. The sort of geopolitical expectations, the rhetoric on Iranian supply, Avril, is coming into play now.
Certainly something we're going to be keeping a close watch on. Coming up on the Asia Trade, Zero CEO joins us to discuss their latest earnings and business strategy, while Oaktree tells us why some traders are shifting away from equities towards bonds. Plus, we'll unpack Alibaba's fourth quarter performance with CLSA. This is Bloomberg.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
take a look at the reaction in oil. We're seeing WTI trending to the downside, a second day of declines there. A couple of elements at play. We had that sort of inventory build from the latest government data when it comes to stockpiles, but also these reports that perhaps we're getting closer to a deal with Iran. There around willingness there to sign a deal in exchange for lessened sanctions or removal of sanctions and no nuclear weapons. So we're watching that story very closely, but of course coming off the back of almost a 10% pop in that 4-day rally for oil futures. Let's take a look at how all of this plays out when it comes to the market open here in Asia. Wall Street, of course, also seeing a bit of fatigue when it comes to this trade detente rebound that we've seen. Garfield Reynolds, who leads our Markets Live Asia coverage, joins us now. So there's been a lot that's come from the Middle East trip, and at the moment we're watching how energy markets are going to potentially react.
Yeah, one of the things that Donald Trump and Scott Bessent, for that matter, were very big on before the beginning of this administration was the desire to get oil prices down. Now, while that was premised on a drill baby drill approach to U.S. production, ultimately what's proved.
गाइस नेचुरल गैस इन्वेंट्री थी आ चुकी है. नेचुरल गैस इन्वेंट्री देखोगे तो पॉजिटिव है नेचुरल गैस के लिए, बट इम्पैक्ट बिल्कुल ही अपोजिट हुआ है. ठीक है, नेचुरल गैस की इन्वेंट्री लास्ट ट्रेड सेशन था फोरकास्ट किया था 111 बिलियन, आया है 110 बिलियन. तो जितना फोरकास्ट किया उससे कम आया है, तो लॉजिकली तो पॉजिटिव ही है, बहुत ही माइल्डली पॉजिटिव कह सकते हो. बट यहाँ पर देखोगे कैंडल सीधा ओपन इक्वल टू हाई बना के नीचे ही आ गया. तो इन्वेंट्री पॉजिटिव ही कहेंगे, स्लाइटली पॉजिटिव, बहुत ज़्यादा डिफरेंस नहीं है. ठीक है, डिफरेंस बहुत ज़्यादा नहीं है, तो इट इज़ स्लाइटली पॉजिटिव फॉर नेचुरल गैस, बट कुछ पॉजिटिव इम्पैक्ट बिल्कुल भी नहीं लग रहा है. ऊपर रेजिस्टेंस था उसी को वापस होल्ड कर दिया. क्रूड ऑयल को भी देखोगे तो वही फर्स्ट टारगेट ही दिया बस, एंड सेकंड टारगेट तक पहुंचा ही नहीं, ब्रेकआउट ही नहीं कर पाया. ब्रेकआउट होता तो बेटर था, ब्रेकआउट ही नहीं हुआ. ये ये ब्लैक कलर की जो लाइन है, इसके ऊपर अगर क्लोज नहीं हुआ तो ब्रेकआउट होगा नहीं, इट मींस, और ब्रेकआउट होगा नहीं तो ये ऊपर जाएगा नहीं. ब्रेकआउट होता तो एक थोड़ा और अच्छा टारगेट मिल जाता, अदरवाइज ये फर्स्ट टारगेट ही कह सकते हैं 60 पॉइंट का. ठीक है, ब्लैक कलर की लाइन के ऊपर याद रखना, नहीं क्लोजिंग आई तो फिर ये साइडवेज इस रेंज में, फिर आप मान सकते हो किसी ना किसी एक साइड का एसएल जाएगा, तभी कुछ मूव हो सकता है. तो यहाँ पर सेलर का एसएल चला जाए या फिर यहाँ पर बायर का बाद ही मूव होगा. ठीक है, अगेन ये फर्स्ट टारगेट ही है, जैसा मैंने बताया. अब ये साइडवेज हो चुका है इस रेंज के अंदर. एक्सपेक्ट करो कि किसी एक साइड पे एसएल उड़ा दे बायर या सेलर, तभी मूव होगा, नहीं तो नहीं होने वाला. फर्स्ट टारगेट ये ब्लैक कलर की लाइन, इसके ऊपर सस्टेन करेगा तभी सेकंड टारगेट, नहीं तो साइडवेज या फिर एज आई सेड किसी एक साइड का मोमेंटम में एसएल जाना जरूरी है. इतना स्ट्रॉन्ग भी नहीं था सपोर्ट है, बट ब्रेकआउट भी नहीं हो रहा इसका. लेट्स सी अब किस साइड ब्रेक करता है. बाकी नेचुरल गैस को देखोगे तो इन्वेंट्री स्लाइटली पॉजिटिव थी, बट कैंडल ओपन इक्वल टू हाई बना के वापस नीचे ही आ गया है. लेट्स सी अगर थोड़ा नीचे ही आ जाए अब एग्जैक्टली. ब्लू कलर की लाइन को रिमूव कर दो, जरूरत नहीं है. थोड़ा और ऊपर आता है इस लेवल तक, यहाँ से एक सेलिंग का प्लान था, वापस वहाँ तक भी नहीं आया. इन्वेंट्री पॉजिटिव जरूर है, बट मोमेंटम नहीं है, देख पा रहे होगे. वापस नेचुरल गैस अगर आता है 303.7 यहाँ कहीं, यहाँ एक सेलिंग या फिर नीचे आ जाए अब इस एरिया पे. क्रूड ऑयल में ध्यान रखना, बाकी ऑप्शन की एक्सपायरी है तो अगर मोमेंटम ज़्यादा नहीं आया तो साइडवेज ही चला जाएगा प्राइस कंप्लीटली। बाकी इन्वेंट्री आ गई है तो नेचुरल गैस लेट्स होप फटाफट से किसी एक पर्टिकुलर लेवल पे और आए। एक कैंडल और इस कैंडल की क्लोजिंग के बाद एक कैंडल और बन जाए यहाँ पर कहीं ऐसे, फिर नीचे यहाँ से बाइंग या फिर यहीं से वापस सेलिंग कर देंगे उस केस में, डिपेंड ऑन द कैंडल क्लोजिंग कहाँ हो रही है। बाकी अब और कोई डेटा नहीं है आज। इन्वेंट्री थी लास्ट नेचुरल गैस की डन। कल लास्ट ट्रेडिंग सेशन है वीक का 16th ऑफ मई। कल देखोगे तो 12:30 लंदन सेशन, 5:30 न्यूयॉर्क सेशन, 7 PM यूएस मार्केट और 7:30 कंज्यूमर सेंटिमेंट और इन्फ्लेशन एक्सपेक्टेशन का डेटा रहेगा। ये यूएस का, ये भी गोल्ड और सिल्वर को इम्पैक्ट करेगा। इन्वेंट्री पॉजिटिव जरूर आई थी बट कैंडल ही नीचे आ गई है, और पॉजिटिव भी इतना ज़्यादा नहीं है, न्यूट्रल भी कह सकते हो वैसे तो। देखो ये कैंडल अगर क्लोज कर जाती है ना नेचुरल गैस में, 6 मिनट है अभी वैसे, क्या है यहाँ वैसे ही बाइंग हो जाएगी, वापस सेल कर देंगे इस एरिया पे। रखना है अगर ये नहीं ब्रेक करता है तो फिर ये या तो साइडवेज हो जाएगा या फिर किसी ना किसी एक साइड का ऐसा जरूर निकाल देगा, क्योंकि ऊपर अभी भी रेजिस्टेंस ब्रेक नहीं हो पाया है, नीचे सपोर्ट यहाँ पर होल्ड कर गया, तो ये रेंज है, किसी एक साइड के एसएल जाने जरूरी हैं, या तो बायर के या सेलर के, तभी मोमेंटम आएगा, नहीं तो 50 पॉइंट की रेंज में घूमता रह जाएगा, एक्सपायरी भी है। ब्रेक हो जाना चाहिए था एक ना एक साइड। देखिए ये नेचुरल गैस में भी एक कैंडल मुझे लग रहा है यहीं कहीं क्लोज होगी, 4 मिनट रह गए हैं, बहुत बड़ा सेल ऑफ या ऊपर तो नहीं जाएगा, दोनों ही ऑप्शन ओपन है, अब नीचे आ जाए अगर यहाँ बाइंग, पुल बैक देता है अगर तो वापस सेल यहीं से कर देंगे। बाकी क्रूड ऑयल में तो मुझे लग रहा है किसी एक साइड के एसएल निकलने दो, ऊपर या नीचे, तभी मूव आएगा। नीचे अगर ये कॉस्ट टू कॉस्ट फिर से उड़ाता है तो फिर ये इतना ही टारगेट होगा, क्योंकि ऊपर जाने के लिए भी ब्रेकआउट तो करना ही पड़ेगा। बाकी नीचे आता है ब्रेक डाउन करके तो उस केस में भी नीचे 5100 का एक लेवल है, ये भी अच्छा है, काफ़ी अच्छा सपोर्ट है। ये ऑप्शन बायर ध्यान रखना एक्सपायरी है, थीटा डीके बहुत हो रहा है क्रूड ऑयल में, जो लोग ऑप्शन में ट्रेड करते हैं। भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया, डोंट फॉरगेट टू लाइक द स्ट्रीम। नेचुरल गैस ज़्यादा बेटर लग रहा है ट्रेड करने के लिए, अब किसी भी साइड आता है नीचे या फिर ऊपर, इन दोनों पे ही ट्रेड कर लेना वापस। में भी अब या तो ऊपर ब्रेक या नीचे ब्रेक, ऊपर अगर ब्रेक करता है तो फिर यहाँ पर एक सेलिंग बन जाएगी, नीचे आया तो फिर हमारे पास ये लेवल है 5100 वाला। Norwegian krone appreciation potential is become exhausted. Oil trade lower in terms of US is near nuclear deal with Iran, while it says demand is slowing. आने वाली है, नीचे ही आएगी शायद नेचुरल गैस में। ठीक है, ठीक है, यहाँ पर अगर ये पुल बैक देगा वापस सेल कर देना 297 98 के अराउंड। नीचे आता है तो फिर 287 ये सपोर्ट होगा, यहाँ से वापस बाइंग कर सकते हैं। फ्रेश ट्रेड की बात कर रहा हूँ। आउट रिटेस्ट ट्रेड बन ही नहीं रहा आजकल। ब्रेकआउट रिटेस्ट ट्रेड ही मत करो मेरे अकॉर्डिंग, तो सीधा सपोर्ट पे बाई करो, रेजिस्टेंस पे सेल करो। रिटेस्ट के चक्कर में पड़ना ही नहीं है। बेस्ट रहता है सपोर्ट पे बाई, रेजिस्टेंस पे सेल। फॉरगेट द ऑल रीटेस्ट WM, वो सेकेंडरी ऑप्शन रखो। अगर सपोर्ट रेजिस्टेंस है ही नहीं, बन ही नहीं रहे, तब जाके ट्राई कर सकते हो। ठीक है, क्रूड में भी जो अभी बचे हुए हैं, अगर कॉस्ट टू कॉस्ट जाए एसएल रिमेनिंग क्वांटिटी का निकल जाना, उस केस में कंसिडर करना कि ये नीचे ब्रेक कर रहा है। ऊपर जाने के लिए ऊपर ये ब्लैक कलर की लाइन का ब्रेकआउट जरूरी है, नहीं आएगा तो और ऊपर नहीं जाएगा। साइडवेज हो चुका है 5295 से 5235 के बीच में, छोटी सी रेंज है। किसी एक साइड ब्रेक हो जाने दो अब। कभी कभी इतने पास में बन जाते हैं ना सपोर्ट रेजिस्टेंस भी कि ठीक है, किसी एक साइड अब निकल जाने दो लेवल को, फिर देखते हैं। बाकी अगर ये ऊपर ब्रेकआउट कर गया 5295 के ऊपर, तो नेक्स्ट टारगेट 5360 के अराउंड रखा जाएगा। कर गया तो वहाँ से फिर अच्छी सेलिंग हो सकती है। बाकी एक्सपायरी है, ऐसा ना हो साइडवेज ही चला जाए कम्प्लीटली। सिल्वर का टारगेट, सिल्वर में क्या ट्रेड लिया है? बाई किया है, सेल किया है? अगर फॉरेक्स में देख रहे हो तो ऊपर 32.73 के अराउंड एक रेजिस्टेंस है, थोड़ा दूर है। उससे पहले मार्केट में एक रीटेस्ट, एक सपोर्ट था, इसका ब्रेकडाउन हो गया है, तो मार्केट वहाँ पर एक छोटा सा रीटेस्ट कर सकता है। तो इस रीटेस्ट का पहला रेजिस्टेंस मान लो, अगर इसके ऊपर निकला तो वो मेजर रेजिस्टेंस हो गया। तो 32.50 एज अ रीटेस्ट, और बाकी मेजर रेजिस्टेंस 32.80 राउंड नंबर। ठीक है, 32.50 तक रख सकते हो टारगेट, वहाँ पर रीटेस्ट है, हो सकता है रुके थोड़ा बहुत। 32.80 वो रेजिस्टेंस है, वो मेजर रेजिस्टेंस है। उससे पहले एक रीटेस्ट भी है, हो सकता है रीटेस्ट पे रुक जाए। तो 32.50 टारगेट रख लो। अगर रीटेस्ट के आसपास रुक गया तो यहीं से सेलिंग आ जाएगी। अगर इसको ब्रेक करके सस्टेन कर जाता है ऊपर 15 मिनट में, तब फिर ऊपर 32.80 का रेजिस्टेंस जोन है। बाकी ये रीटेस्ट हुआ नहीं है अभी तक, तो मेरे अकॉर्डिंग एक बार तो रुकेगा जरूर 32.50 के अराउंड। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक
Proved to be the most important part of that is of getting oil prices lower has been what's gone on with Saudi Arabia in particular, acting to discipline those who were pumping too much by threatening to flood the market, and in fact you're bringing more online. Now we've got the potential for Iran to be able to pump more in return for making some agreements on the nuclear front. All of that means that the supply out of the Middle East, that is what is in the driver's seat, sending oil prices down, so that even when you have the tariff relief, the apparent tariff relief, improving the demand outlook, you still have a lot of supply, and that's pushing crude back down to that $60 a barrel level. Looks fairly likely it goes back under 60, but not much further under 60. One of the things that comes into play, if it does go that far down, maybe even where it is now, is that creates a concern that US production would slow, because you're getting close to the possible break even for fracking projects, and with the potential that tariffs plus that weaker US dollar that we've been noticing, that boosts the cost profile a little bit. So it becomes not necessarily all that viable to boost US output further via fracking, which is the main method of boosting it. So somewhere like where we are now, maybe a little bit lower, is probably a medium-term floor.
Garth, you mentioned the dollar. I mean, we're hearing sources saying that they're not really, the Trump administration, going to include the dollar in any of these trade negotiations. In spite of that, do you think the trend for dollar is still intact for a lower trend?
Yeah, I think the medium to long-term downtrend for the dollar is going to remain in place. Part of that is that the denials that came out, and so far it's reported denials, and there's sort of a non-denial denial, if you like, as in it's not necessarily the case that there were no discussions that happened to touch on the currency. Korea originally said that the discussions did touch on the currency, but what came out from the person familiar that Bloomberg spoke to was that there wasn't any actual effort for currency policy pledges, because if there was anything like that, then Scott Bessent is the one who would be involved with that, which sort of China in particular, a lot of FX traders in China who are fairly sensitive to this idea, that might revive some speculation that a stronger yuan gradually, if the PBOC has anything to do about it, but that is part of the price that China is going to need to pay to really push through with peace. So there is an overall understanding that the US wants a weaker dollar. The US dollar is very overvalued relative to its long-term averages, and a lot of currencies, including the yuan, are very undervalued on that basis. So you have the setup for the dollar to come down anyway based on fundamentals and positioning, and you have the overall messaging being that the US would not be averse to a weaker dollar, because that would improve the export competitiveness for US companies, which is very much what Donald Trump wants to achieve.
Garth, I wanted a final word on why we're seeing so many bearish elements for bonds at the moment. Like the 30-year's got, what, an 18-year high?
Yeah, close to it, yes. Yeah. So, well, there's a couple of these going on there. One is the trade truce is getting people to fade their bets on Fed easing. On Fed easing coming anytime soon. Secondly, there is the lingering concern about what the tariffs that are in place are going to do to the inflation outlook. Thirdly, the budget bill that's coming through, the big beautiful bill, has a lot of big beautiful deficits involved. That's a concern. And I think the final thing that's working is, again, you've got the attitude from the US administration. They don't like a too strong dollar. Big FX reserves are part of that reason. So there's a little bit of squeamishness about how welcome are we in treasuries. And you add in the extraordinary meltdown that we had about a month ago in the treasuries market. There's plenty of reasons for investors to lose some of their instinctive appetite for treasuries, and when you have those other factors going on, that helps to add to the upside for yields.
You've got 4 or 5 really good reasons, and then plenty more if you want to dig a little deeper. Garth Reynolds from our M Live Asia coverage there. More ahead on the Asia Trade. This is Bloomberg.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
The story really today is about the dollar, with the U.S. set to not be considering policies to weaken the greenback in tariff talks. But this could be unsustainable. This bump up we're seeing in the Bloomberg Dollar Index, certainly seeing a bit of softness already. It's about the fundamentals. More ahead on the Asia trade. This is Bloomberg.
We're watching Tencent very closely in the China session, and of course, as the thick of China tech earnings come in, we're looking at Baba as well. But take a look at Tencent. These numbers are so encouraging, particularly if you kind of look at this company as a broader proxy for the domestic economic recovery, right, which has had so many challenges. The fastest growth since 2021. It's a great start to what is a very, very volatile year. We saw revenue for Tencent up 13% to just over 180 billion yuan in the March quarter. A lot of this being driven by its gaming and social media businesses. It's also, of course, investing heavily across AI, R&D and initiatives. But, of course, there's no expectation that that's going to be a positive contributor to the bottom line anytime soon. In fact, it is expected to kind of weigh on profit growth. But that longer-term revenue implications for AI integration across its products is still really positive. In terms of the share price, we've seen a gain of about 25% so far this year. This sort of ability to weather a potential Chinese and global downturn, I should say, has really been key to the Tencent narrative for investors.
Certainly, Heidi, and we're also watching for Baba's earnings set for later today, and the extent in which they are sort of a bit more resilient when it comes to tariffs, because they also can lean in to their domestic businesses. And similar to Tencent, we've also seen the shares of Baba. It's been fairly solid rally so far this year, but pulled away from the peaks that we saw in March. Bloomberg Intelligence is expecting, when it comes to local services, when it comes to its cloud business, that we overall still see pretty solid profit growth for Alibaba. Now, for more on the outlook for China's big tech, we're joined now by CLSA's Eleanor Leong in the next hour. And we'll be, having more analysis on really these Chinese tech names and the extent in which that fuels the momentum for Chinese tech stocks' continued climb, Heidi.
Take a look at some of the other stories we're following on the corporate front. Honghai has cut its guidance for full-year revenue growth to reflect the potential fallout from the trade war. The main manufacturer of iPhones and NVIDIA-powered AI services sales will expand at a slower pace than its prior projection in March. The company's net income rose to nearly $1.5 billion in the first quarter, beating analyst estimates. CATL set to raise at least $4 billion in its Hong Kong share listing, set to be priced at the top end of the indicated range. Sources say the Chinese EV battery maker is telling investors it plans to price its shares at 263 Hong Kong dollars apiece. The total raise could rise even further if a 15% upsize option is exercised. Shares are expected to begin trading on May 20th. Bloomberg has learned that autonomous driving company Pony AI has confidentially filed for a Hong Kong listing. Sources say the offering may happen this year. Pony AI has announced expansion plans, including a partnership with Uber to launch robo-taxi services in the Middle East this year, and has gained a permit for autonomous vehicle testing in Luxembourg. Boeing has landed its biggest ever aircraft order, with Qatar Airways agreeing to buy up to 210 wide-body aircraft in a deal worth $96 billion. The deal was also provided a record order for GE Aerospace, as the pact includes 400 engines. The agreements are a big win for Trump, who's hoping to showcase his deal-making chops during this trip to the Middle East.
Kelly's telling me from Boeing it's the largest order of jets in the history of Boeing. That's pretty good. That's fantastic. So that's a record, Kelly. And congratulations to Boeing. Get those planes out there. Get them out there.
Meantime, Japan's top banks are seen raking in record profits for the fiscal year, seemingly shrugging off the uncertainty caused by the Trump administration's tariff policies. But the country's second-largest lender, Sumitomo Mitsui, kicking things off, saying it's still shoring up its buffers to prepare for a trade war. And for more, Asia investing editor Russell Ward joins us from Tokyo. So, Russell, it looks like these Japanese banks might be preparing for the trade war a bit more than anticipated?
Yeah, I mean, these are pretty positive results as expected. Record profit, capping off a record profit for last year and forecasting profit to rise 10% to another record this year. But there was definitely quite a hefty dose of caution thrown in there as well. The bank said it was booking forward-looking provisions last quarter of 90 billion yen for recession risks. So this is provisions for potential bad debts if the economy does fall into a recession stemming from these tariff tensions. And also the bank said that 100 billion yen of profit that it would have earned otherwise will not emanate because of this tariff war. So really, yes, they're forecasting record profits, but things would have been a whole lot better if this tariff war hadn't emerged.
What are we expecting from some of the others that we're looking to get numbers from? Mizuho, MUFG are also due.
That's right. Mizuho and MUFG are reporting later today, expecting more of the same, basically, capping off a record year of profits. Analysts estimate that they'll forecast for profit increases this year as well. They're also forecasting buybacks, which is what Sumitomo Mitsui did as well. They're continuing the theme of buybacks here with the earnings in Tokyo. But what we'd be looking out for really is whether the executives and the banks exercise the caution that we saw with Sumitomo Mitsui. I think we'll probably see a bit of that. Japanese banks do tend to be very conservative at the start of the fiscal year, even at the best of times. And really now with this uncertainty, we'll expect to see sort of that caution emerging through the results when they're reported this afternoon.
And Russell, what are we seeing in terms of what assumptions they're making on future rate hikes from the BOJ?
Yeah, actually, Sumitomo Mitsui kept its forecast, its official forecast for rates to stay at 0.5%. But I think, that generally speaking, that, because of all this uncertainty, because of the risk of a recession, expectations for rate hikes are diminishing. There's the sense that they won't be able to hike rates as quickly and as high as previously expected, and of course that's a bit of a negative for the Japanese banks, who have been really counting on just that extra margin in their lending. So that's another sort of downside risk for the banks.
Asia Investing editor Russell Ward there. We will be live at JP Morgan's annual Global Markets Conference in Paris later today, speaking exclusively with CEO Jamie Dimon for his outlook on markets and politics. That's at 8 p.m. Thursday, Hong Kong time, 8 a.m. if you're watching in New York.
Now, former New York Fed President Bill Dudley says while the U.S. and China have dialed down some of the tensions on tariffs, many unknowns still remain. The Bloomberg opinion columnist told us the U.S. Central Bank has no choice but to wait and watch, despite pressure from President Trump to cut rates now.
They don't know where the tariffs are going to land, number one. And two, they don't know what the effects of the tariffs are going to be on growth versus inflation. So they're uncertain about two dimensions. So they can't really just sort of flip a coin and say, oh, we're going to worry about the growth dimension, because that could turn out to be wrong. So they have to sit and wait for more information. I mean, if you were driving a car in a thunderstorm, you wouldn't just put the car on autopilot and hope that you would get through it safely. So you pull to the side of the road until the weather cleared up, and that's what the Fed has to do. The Fed is going to be criticized for waiting. They have to wait, and because they're waiting, they're probably ultimately going to be late. But it's not the Fed's fault. I would behave exactly the same way in this set of circumstances.
Bill, what's their definition of late, and what's your definition of late? Because he reflected on the move last summer, and he said, in some ways, we were a little late, and other people thought he was being preemptive. What's late to you?
Well, I think late is responding only after you've seen a sizable increase in the unemployment rate, because at that point, it's really hard to avert a recession. When I evaluate the risks to inflation versus the risks to growth here, I guess I worry more about the downside risks to growth. But the Fed can't put all their marbles on that side of the equation, because inflation's been running above the Fed's target for 5 years, and if they're wrong, and inflation expectations get unanchored, then it's a really difficult problem getting inflation back down. So I think they have to wait. Because they wait, because they'll be forced to wait, they'll probably be late. Trump will blame the Fed for being late, but the reality is Trump created the conditions that forces the Fed to have to wait.
Bill, I'm just curious, going forward, how much you see the Fed unwilling to move, even if the unemployment rate rises by 0.5 percentage point, which is sort of the trigger that a lot of people are looking at, if you do see those inflationary pressures coming back?
Well, I think if the unemployment rate rose by, above 4.5%, that would change the Fed's calculus. They would be much more worried about the self-reinforcing deterioration in the labor market leading to a full-blown recession. So I think the unemployment rate is really the single most important indicator. If it stays around where it is today, Fed's going to just sit and wait. If the unemployment rate starts rising quickly, then the Federal Reserve will start to respond. But I think it's going to take some time. I mean, the hard data on the economy shows that the economy is still just fine. I mean, the first quarter GDP report was very misleading, because it was mainly the fact that that they couldn't count inventories properly to match up with the big surge in imports.
Bloomberg opinion columnist and former New York Fed President Bill Dudley there. Still ahead on the Asia trade, the CEO of enterprise software provider Xero joining us to discuss their latest earnings and the business outlook. This is Bloomberg. Online accounting software company Xero has just posted results for the full year, operating revenue meeting estimates. The firm provides financial tools to more than 4 million small businesses in over 180 countries. Joining us now is CEO Sukhinder Singh Cassidy. Sukhinder, always great to have you with us. So talk us through these results, what it kind of says about the macroeconomic environment, and of course, some of the broader policy and trade-induced volatility that we've seen for businesses in a number of markets, but particularly in that core market of the United States.
Sure. Well, first of all, we're very pleased with the results. Overall, 23% top-line growth, $641 million in free cash flow, Rule of 44 on Rule of 40. So really strong, both top-line growth and free profit and cash generation. So overall, really pleased with the results. Now, speaking to that macro-resilient kind of business that we have, we really believe that our software is helpful to SMBs in times of certainty, but also uncertainty. We help them manage their cash flows, get paid sooner. Of course, that is critical, and perhaps even more so in this environment. So, the prospects for our business, we think we are there to help small businesses across the world, US, UK, Australia, New Zealand, navigate this uncertainty.
What is the data telling you in terms of what that uncertainty looks like and how these businesses are faring?
Well, as you know, and you've seen the data yourself, interestingly, U.S. indicators are pretty mixed on whether or not there has yet been an effect. But I think what we can say is, of course, it has been a time of extreme volatility. It seems to be settling somewhat as Trump starts to announce deals, and that is good for the market overall. For our SMBs, the things they are managing right now is there going to be supply chain disruption? Is their cost of goods going up? So I think it is fear of what's ahead. I don't think you're seeing much in the indicators yet. But as I said, our number one job is to help them manage their cash flow as everyone awaits, Trump's further deal making.
Sukhinder, just wondering as well, how much optimism do you see out there among these small businesses about more favorable rate environment?
Interestingly, our small businesses don't tell us a lot about their expectations of the rate environment. What we see more from them, obviously, is really their concerns about managing cash, things like late payments. Of course, one can hypothesize on the rate environment. I am not a macroeconomist. I'm sure you have many on this show. Mostly what our small businesses speak to us about is the need to manage cash.
Sukhinder, you said, this was a pretty good set of results. Are you also happy with the growth in your U.S. market?
We are. I think the U.S. market for us showed strong underlying growth. We reported our North America results, so we saw nice increases in subscribers and ARPU, and I think those are both indications that U.S. business, as you know, for us is small and growing. I think the key thing for us in the U.S. that we see is higher product market fit. We've made multiple investments in just, I would say, better product velocity for that core U.S. market, which for us has a lot of white space in our global portfolio.
I think towards the end of last year, there were some concerns about subscriptions starting to slow down, which is perhaps unsurprising in some of the more mature cloud markets like Australia, like New Zealand, right? What are you seeing in terms of subscriptions at the moment? Are you optimistic, or are you sort of happy with the sort of steady as you goes approach?
Well, first of all, we had another year where we posted double-digit subscriber growth, so 10% subscriber growth overall, and 15% ARPU expansion. So what we see from that is there is still a tremendous amount of white space. In Australia, we still generate a lot of new subscribers to the cloud. Of course, New Zealand, which is our oldest and home market, has slower growth. But across the rest of the portfolio, I would say we still see a lot of opportunity. I will remind you that one of our key markets is the UK. This year, the UK, we think, will experience tailwinds with the introduction of making tax digital, a regulatory requirement for small businesses to file digital taxes. So we see lots of reasons to be optimistic about the opportunity for continued subscriber growth.
I wanted to get your view in terms of the sort of innovation and tech ecosystem in Australia. Obviously, we've come off a very strong election result. There's more of a mandate for the government here. But Australia has kind of broadly lagged the likes of the US when it comes to coming up with companies like Xero. What's your, I guess, input in terms of how that can change, public policy-wise, investment-wise?
Yes. Well, look, first and foremost, let's not forget you have tremendous Australian-founded companies like Atlassian and Canva that do enjoy a good amount of global success. Of course, there are peers like WiseTech. So I think that we do see a lot of great activity. But I think like any government and any economy, one of the reasons that U.S. has been so successful and can be modeled after is the incentives for entrepreneurs to start companies, whether that's carried interest, whether that's the fostering of the venture capital environment. I think these are the things that are, in the U.S. you have QSBO, which is really the qualified small business opportunity for entrepreneurs to have 10% tax rather than more on capital gains from starting a company. So I think my advice is probably not Australia specific, but it's specific to all the markets in which we operate. If you want to see small businesses flourish and tech businesses flourish, you need to have, I'd say, incentives that really drive the flow of capital into these businesses and for entrepreneurs to want to create wealth in those countries.
When you look at longevity for this business and what kind of the next steps will be, where do you see growth and also cost containment coming from? Do you still look at organic growth going forward and looking at these individual markets, or are you open to potentially deals and inorganic options as well?
Sure. Well, I would point you, first of all, to our core strategy. We've talked about growing, our big three markets, Australia, the US, and the UK, as being strategic focus areas in this strategic period. We've talked about payroll, payments, and accounting being the big three jobs. And we've also been very clear that we will use organic and inorganic opportunities in order to meet and create that strategic fit for our customers. This past period, we acquired Sift, a leader in analytics for both small businesses and accountants and bookkeepers. We're already well on our way to rolling out access to Sift within Xero across the U.S. and coming soon to other markets. So I think we certainly look at M&A as a part of that strategy and feel like we also have a strong organic base of operations in which to invest capital.
Sukhinder, always great to chat with you. Sukhinder Singh, City, who's a CEO at Xero. Still ahead on the Asia trade, South Korea poised to become one of the biggest exporters of nuclear technology over the next decade. We'll take a closer look next. This is Bloomberg. Take a look at some of the stories we're following this hour. And Indian officials say trade talks with the US remain on track despite their tougher approach in negotiations. The Modi government this week threatened to impose retaliatory tariffs on the US in response to higher duties on steel and aluminium. We're told a first stage deal is still expected within a month, I should say. Russian President Vladimir Putin has named a group of low-level officials to join peace talks with Ukraine in Turkey, giving no indication that he plans to join these talks. President Zelensky has challenged Putin to meet him for talks in Istanbul after the Russian leader offered to resume direct talks to end the conflict. Earlier, President Trump downplayed the chances of visiting Turkey, citing a packed schedule. Iran is reportedly willing to commit to not pursuing nuclear weapons in a deal with the US. A top advisor to Iran's supreme leader has told NBC News that Tehran is ready to sign an agreement with Washington in exchange for the lifting of economic sanctions. Iran is also reportedly prepared to get rid of its stockpiles of highly enriched uranium. We'll take a look at the implications, particularly as we see those losses being sustained across crude prices. Oil, of course, had already been on the downward trajectory after that 4-day rally, but this is really being exacerbated further by the speculation over implications for Iranian supply. There are also supply elements there when it comes to stockpiling levels in the latest data out of the US as well. So some domestic factors at play here as we see New York traded crude down by just about 1.7%. Iron ore also sitting a little bit lower today. But gold at the moment, after a few sort of back and forth moves when it comes to this session, at the moment actually seeing a little bit of upside, but this comes after it slipped to the lowest in more than a month on the back of these easing tensions in the global trade war. Investors disincentivized from that haven demand that has played out so well for gold this year, April.
Yeah, we are seeing, I think, a bit of a reversion to the trends in trading from the past week or so, indeed the past month, that haven demand. I see gold picking up a little bit, but in terms of the stocks that we are watching when trade opens in Australia, Korea and Japan shortly as well, certainly one we'll be keeping an eye on is the Japanese lender Sumitomo Mitsui. We're seeing that climb a day ago, and something that was pretty much across the board among the Japanese lenders. The lender is forecasting full-year net income will climb about 10% to $8.8 billion. That's after the bank's fourth quarter net income fell 75%. Also be keeping an eye on Sony, where the full-year operating income forecast missed the mark, coming in at $10 billion. Also watching how markets react to Treasury Wine Estates naming Sam Fisher as its new CEO. And in terms of the benchmarks, take a look at how futures are shaping up, with the downtrend, I think, tracking from what we saw on Wall Street overnight. Suddenly that sense of a buyer fatigue after the optimism surrounding the easing in geopolitical tensions after the US and China trade truce. Now the concern seems to be that the rally had gone too far, too fast. Nikkei futures also pointing to declines of about 1% at the open. S&P 500, maybe that also indicates further declines in US stocks. Of course, Heidi, certainly something that we've been keeping watch on is the dollar amid what seems to be the US not seeking a weaker dollar when it comes to a trade deal. So a bit of a weakness, interestingly, on the Bloomberg Dollar Index, Heidi.
Yeah, let's take another look at oil as we continue to watch this story very, very closely. We're still awaiting for sort of further details and confirmation as to what we're really expecting from Iran. Of course, they have urged the US to show a more realistic approach when it comes to these nuclear talks. Iran, though, we are hearing, willing to commit to no nuclear weapons in a deal for the lifting of sanctions. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And certainly, Heidi, it's really the sense of maybe market fatigue, buyer fatigue in particular, as we saw earlier in the week, that sharp rally in U.S. stocks kind of petering out, and what the next leg or the drivers are going to be. And certainly, trade tensions, those are in focus amid this cooling. The focus going to be on what APEC trade ministers can ultimately achieve in their meetings in Jeju. Some signs of further de-escalation, especially when it comes to China. Heidi.
Yeah, plenty of signs, though, to watch out for when it comes to corporate earnings. Particularly, we're watching to see the Tencent effect, right, as Greater China comes online a little bit later. But also watching the commodities space with this reporting that Iran may be ready to sign a deal committing to no nuclear weapons. So seeing that big move in oil.
Yeah, and amid some of these uncertainties still, I think investors are doubling down on that something to chew on, which is the earnings, right? And we certainly be seeing some reaction when it comes to Japanese stocks following Sumitomo. It more or less met when it came to its results. But going forward, I think the guidance is what missed the mark. So whether this trickles through into some of the other big Japanese lenders that are reporting later today, Sumitomo and Mizuho as well. Certainly that downdraft from the U.S. reflected in Japan as well. The dollar has been, of course, a key focus for today amid signs that, the U.S. might not be seeking a weaker greenback. We are seeing a bit of a tick up in the Japanese yen, really not by much. Yields in Japan also rising today. Flip the board and take a look at how South Korea is faring at the start of trade. Certainly part of that softer stocks narrative as far as things go, but not by much. Seeing some declines on the Kosdaq as well. The Korean won seems to be giving up some of the gains from earlier in the week, potentially part of that narrative when it comes to the dollar story, Heidi.
Take a look at how we're setting up when it comes to the start of the cash trading session here in Sydney. Watching those energy producers as we see the second day of declines there in oil, largely on account of the story when it comes to Iran, hearing that potentially the country is getting ready to be able to sign a commitment to no nuclear weapons in exchange for lifting of U.S. sanctions, but also some supply side issues at play here as well, given that we had some pretty big stockpiles data in the U.S. as well. But we are seeing, just a couple of minutes into trade, a bit of flat trading there for the ASX 200. The Aussie dollar also quite flat, trading at about 64 US cents at the moment. Lots of reasons, those we were discussing earlier, though, for treasuries to continue to trend towards that bearish direction. Let's get some more from Garfield Reynolds, who leads our Markets Live Asia coverage and joins us now. So there's a lot at play here. There's the oil story, the sort of geopolitics story for one. It's interesting. I was reading about these, lottery ticket bets, despite almost every assumption being that we're going to see lower prices.
Yeah, well, you're always going to have stuff like that in oil because you have to remember it's to some extent manipulated market. All that it's going to need is for one of the major players to decide to pull back from the market, or for something to happen that will cause them to pull back from the market. So we've got headlines that the US and Iran are close to agreeing on a nuclear deal. That deal could still not take place, or it could take place, and the market looks at it and says, "Well, this isn't going to work," or there aren't the sort of details that we want. Or alternatively, at any stage, Saudi Arabia could decide that it's happy with the progress that's been made elsewhere, and so it's going to back away from the push that it has been making to boost supplies, the whole aim of that was to bring prices down, partly to discipline other OPEC plus producers so that they would meet their quotas. So if that works, then you have the potential for OPEC to decide, well, it doesn't like $60 oil, it would prefer $70 oil, and away you go. So that's part of what's going on. There's, there's a reason for that gambling, especially when the price probably for those options was pretty low. Overall, however, as I was saying before, it's fairly clear that there's a lot of reasons to expect the downside for oil to continue, even if it probably reaches a natural limit somewhere around the $55 a barrel mark, because, as I said, it's a manipulated market in a lot of ways, and the people who are manipulating it probably don't want it to go too much further to the downside than where it is, and certainly not as far as the 50s, low 50s.
Garth, what about downside for the dollar? I mean, you were highlighting how traders have really kind of made up their minds to focus on the fundamentals in spite of some of these headlines. How much further downside are you then seeing?
Well, there's plenty of downside looming for the dollar, I think, especially against some emerging market currencies. A key determinant, at least in the short term, is going to be how the PBOC behaves. It's sort of switched from restraining declines in the yuan to restraining gains, but it has been leaning towards moderate gains at least. So if that remains the case, that's very much going to see emerging currencies in particular benefit from the idea that a weaker dollar is what they're heading towards. And when you read into it, it was fairly nuanced, the denials or reported denials from the US that they were deliberately seeking a lower currency, a lower dollar in trade talks. It was more that if they were going to seek that, it was going to come from the very top. There is still that attitude that's being expressed by the US administration that overall there are concerns about the dollar being too strong for too long. It is very overvalued on a lot of measures, and a lot of currencies out there are undervalued against the dollar on a lot of measures. So with that being the case, markets are going to be pushing to see a weaker dollar and anticipating potentially some really strong moves in a range of currencies.
And interesting to see all this coming against the backdrop of elevated U.S. yields. Garfield Reynolds, who leads our Markets Live Asia coverage for us there. Thanks so much. Now let's check in on oil prices as well. That decline that we're seeing, as Heidi and Garth were just chatting about, certainly coming from partly what we're seeing in U.S. stockpiles, but also the geopolitics in the mix, right? And how we're hearing that Iran will commit to no nuclear weapons in a deal, perhaps for some sanctions relief. Let's get the details with our Bloomberg News editor, Jill Deesis. So, Jill, what are we hearing ultimately about, what Iran might be willing to give up in exchange for sanctions relief?
Well, at this point, again, these are still lines that really have only just started crossing the terminal in the last couple of hours. And this is based on an NBC report saying that Iran would be willing to commit to not having nuclear weapons in exchange for sanctions relief. So again, I think Garfield just made this point a bit earlier. This is not a done deal by any means. There's obviously a lot that can change. And we've certainly seen some, sort of shifting things happen as Donald Trump has been on his trip to the Middle East right now. So, those are the lines that are here now, but certainly I think that's obviously why that's getting quite a bit of attention this morning.
Quite a bit of attention, but of course this has been quite the trip for the president, right? He really wants to show off his deal-making abilities here. What else are we seeing being achieved, both in terms of geopolitics, some of the commercial agreements that we've seen as he continues on his itinerary?
Right. Well, look, I mean, we all know that President Trump certainly likes to mix deal-making in with a lot of his diplomatic efforts. So we certainly saw that at play in Saudi Arabia just the other day when, he was meeting with Mohammed bin Salman, the Crown Prince, announcing, some $600 million in various types of deals. The latest that we're hearing is out of Qatar, where the U.S. has announced something to the tune of about $243 billion in deals. A lot of this kind of comes down to defense contracts. So what you see is the United States, vis-a-vis Donald Trump, really trying to develop stronger defense partnerships in region. Obviously what Donald Trump would really want here in terms of a bigger geopolitical play is some kind of way to broker a Mideast peace deal between Israel and Hamas. Qatar sits in a very advantageous position here. And so you do see, Donald Trump trying to sort of tout some of his attempts to, reach out through these diplomatic efforts. Of course, all of this coming on the back of this plane, that Donald Trump has said that he would accept from Qatar as sort of a new Air Force One. So I think that, against the backdrop of the United States kind of coming in and trying to broker some of these these types of investment deals, I think all kind of shows you how much interest Donald Trump has really taken in the Middle East. This is again his first official trip abroad during his presidency since he took office in January. So we'll have to see what else happens. But I think you're seeing very classic Donald Trump trying to be the deal maker here.
Certainly, and he's been very busy, to your point about him being there. Bloomberg News editor Jill Deesis for us. Now, meantime, Japan's top trade officials are skipping an APEC meeting beginning today in South Korea, potentially missing a chance to advance talks with the U.S. on a tariff deal. Our chief North Asia correspondent Stephen Angle joins us from the meeting venue in Jeju. So, Steve, just talk us through what you're going to be keeping a close watch on.
Yeah, we're going to be keeping an eye on who's actually going to be here. You mentioned the Japanese. We're hearing some other rumblings that top trade ministers from other of the 21 nation economies will not attend. But we do know that the U.S. Trade Representative Jamieson Greer is here for these 2 days of APEC trade ministerial level talks on Jeju Island, of course, south of the main peninsula of South Korea. We know that because Jamieson Greer, just in the last half hour, there you can see it. It's a picture from our producer, Sabrina Mao, took that as he arrived. He also told our BN colleague, Bloomberg News colleague, James Mager, we are not doing media now. He is going to be a man in great demand here in Jeju because of the other trade ministers and delegations will want some face time with him. Coming off the heels of the meetings with the Chinese delegation in Geneva, finding that 90-day truce, common ground with the Chinese. We do know that his counterpart of China, who was in Geneva, Li Changgang, is also here. He's the Vice Minister of Commerce of China. He arrived on the same plane as our producer last night from Beijing. He will be leading the Chinese delegation. He is essentially the trade representative of China, so the counterpart to Jamieson Greer. The big question is, will they be meeting again here in the halls of the International Convention Center on Jeju Island sometime today or tomorrow? No doubt Greer will likely be meeting with the trade minister of South Korea, the host nation. There have, of course, begun talks. The delegation from South Korea was in Washington, D.C. last month, I believe in about April 24th, trying to start the talks about the framework for some sort of trade truce and agreement with the South Koreans. We're hearing from local media that the South Koreans are proposing cooperation in shipbuilding as well as energy. Local media is also reporting this morning that perhaps Greer is going to be meeting with Hanwha Ocean, a big shipbuilding company conglomerate here in South Korea. So that there could be something in the works there. But again, because of the South Korean presidential election is coming up on June 3rd, Seoul has already indicated it would be theoretically impossible to get some sort of deal done with the United States, trade deal to mitigate those reciprocal tariffs, which, of course, like other nations, have been paused for 90 days, but almost theoretically impossible to get a deal done before that June 3rd presidential election. They are still trying to find some common ground and reach a deal by July, before those 90 days expire. So again, it's all about getting face time with Greer and to get more meat on the bone from that truce with China. And what does that mean for the other member nations like Vietnam, which has already started to engage with the United States and other member nations? Keep in mind, 21 economies. We're talking Canada, Mexico, Australia, New Zealand, Vietnam, Singapore. They're all, well, most of them are here trying to get a good idea of where things stand right now following that U.S.-China truce.
And while we wait for those details, we are seeing more sort of concessions, right? China putting a pause on these curbs on rare earth exports to military entities in the US.
Yeah, that's essentially China following through on what they pledged to Donald Trump's team, Scott Bessent and Jameson Greer, over the weekend in Geneva. So that's a positive sign that, again, these export controls that China, let's be frank about this, put in place following Liberation Day on April 2nd. They put essentially bans on critical rare earths, including those that lead to industrial magnets, which are critical to the U.S. technology supply chain. They put restrictions on some 28 U.S. entities as well. Those have been lifted, as well as, trade ban that they put in place as well on 17 U.S. companies. That has been lifted. But again, it's just a reprieve. Just like the United States and China announced the truce, that lasts 90 days. This suspension of those export curbs to the U.S. entities on rare earths is only going to last 90 days. So there's extra impetus, obviously, and that's why we're going to be watching whether Greer and the Vice Commerce Minister of China, Li, do indeed follow through on their talks here in Jeju sometime today or tomorrow. We do know that there are other high-level officials here. The WTO Director General, Ngozi, just walked through these doors and passed us just a few minutes ago. She is here. We're going to try to, of course, get some comments from her as well throughout the course of this day to see her perspective from the WTO on the multilateral front, the implications to global trade following the truce settled between China and the United States in Geneva.
Bloomberg Stephen Angle there for us, and we are watching one stock that is in focus and on the move, Kyocera. This is on account of Seth Fisher's Oasis management calling on the company to divest its non-core businesses. They're calling for other measures there as well, including the exiting of organic packages, as well as the urging to buy back 1 trillion yen of shares over 4 years. So 7 key changes being urged by Oasis management there. More ahead on the Asia trade. This is Bloomberg.
Welcome back. You're watching the Asia trade, keeping an eye on yields in the U.S. Only seeing them looking pretty elevated on the 10-year, now above the 4.5 level as traders trim their bets on Fed rate cuts. Keeping an eye on what's happening in Asia as well. Similarly, seeing some of that come off in APEC bonds. Now, it's also interesting amid all this that we've been seeing the yields for stocks kind of on parity with what we can get from treasuries, particularly if you're looking at the 10-year. So really that dichotomy or dynamic, I guess, on the increased attractiveness when it comes to credit, particularly part of the equation. David Rosenberg is here. He's co-portfolio manager and head of liquid performing credit at Oaktree. So, David, I think you're of the view that we're seeing that rotation out of stocks into bonds. Why?
So, yeah, we're seeing it quite a bit if you think about it. Right now, with below investment grade credit, you can get call around 8%. And I think a lot of people are starting to do the math to say, do you really think from here going forward you're going to get an 8% annualized return out of equities? And I think the reality is to get that, you need quite a bit of growth. And if rates stay roughly where they are, it's going to be more expensive to finance that growth and much more difficult to achieve. And so credit allows you to lock in today an equity-like return without having to take equity-like risk, and that's quite attractive.
Part of that de-risking that's underway. What about when it comes to sort of non-U.S. investors and how they are perceiving the space?
Yeah, so I get this question a lot, which is, are we seeing money coming out of the U.S. from non-U.S. investors? What I find interesting is you are hearing about this and seeing it in equities. You are seeing it in higher quality investment grade treasuries, things that are very liquid. The interesting thing about below investment grade credit is the U.S., quite honestly, is the largest, the deepest, the most liquid below investment grade market, and so it's very difficult to replace it. And so actually what we're seeing is still money coming in to the U.S. from non-U.S. investors. Some of it may be rotating, de-risking, as you said, from equities down to debt, but still seeing good strong demand.
What about in the opposite direction? Do you like the diversity in private credit in Asia, and is there sort of strategies to be able to get more growth in some of these markets?
I do like the diversity in credit in general. I think it's always a good idea to diversify, and I do think that there are some opportunities, especially right now when you look at the private credit market. What gets me most excited is as you kind of think through this potential higher for longer environment, there's going to be more and more of these LBOs that were done 2018, 2019, essentially with free money, and now that money is expensive, and if that money stays expensive and does not go back down to near zero on the base rate, you're going to see companies that need liquidity. And we kind of refer to this as rescue financing. And I do think those opportunities globally, Asia and the U.S., you're going to see opportunities to provide rescue financing. I believe that's going to be one of the best risk-adjusted returns we've seen in a decade. And most of that's going to be done on the private side. It's easier to structure there. And so I do think that's a great opportunity to add to the portfolio.
There's always a sort of the eternal question, the evergreen question of systemic risk when it comes to private credit, right? Do you think that's sort of overplayed if you take a look at the relative premium that you're getting at this point?
I do think there's risk in the market, but I think that you have to be careful painting a market with one brush. Right? Private credit is a big market. It means a lot of different things to a lot of different people. So I think in general, when you look at the private credit market, you've seen a market that's grown quite dramatically. It wasn't that long ago. This was a $500 billion market. Now it's a $1.7 trillion market. One of the many things I've learned from Howard Marks, our chairman, is when markets grow that fast, you end up buying what you can, not what you want to. So deploying capital becomes the chore. And when deploying capital is the chore, you end up lowering your standards, and that's just kind of the reality of markets that grow that fast. So there is definitely risk, and you do need to be careful who you go to invest in the private credit market. But again, there are pockets of private credit as far as non-sponsor. There's niche areas of private credit like life sciences. There's rescue financing. There's areas where you can kind of make your niche where you don't have the same competition, and those are very attractive. If you take the general private credit market, I do believe it's gotten a lot riskier.
Just taking a step back overall, I think you're also of the view that this is a credit pickers sort of market. How are you selecting? What is the strategy here?
So, to me, it really goes bottoms up, one credit at a time. And so you really have to sit down, underwrite each credit to say, if the world doesn't go back to an accommodative, stance, if you will, there's quite a lot of things that can add volatility in the market, tariffs being one, rates being another. And so it really comes down to being good at assessing credit and assessing the downside and the cushion for downside. And if you can do that appropriately, quite frankly, for a number of years, if you were a good credit picker, it didn't really matter because everyone had the Fed put, as they like to call it. And so whether you bought a risky deal or not, the central banks would come to bail you out. I think we're in a period now where it's going to be difficult to rely on that. And in that case, that means if you're good at picking credit, that's going to allow you to shine relative to those who are not.
And really interesting amid all this, how the market has yet for another year had to kind of pull back their expectations of Fed rate cuts,
yes,
right?
That's right. It
David, really good
going,
to chat with you. Thank you so much for coming in and sharing your time with us. David Rosenberg, co-portfolio manager at Oaktree. More ahead on the Asia trade. This is Bloomberg. We're in the midst of earnings reporting in Japan. Certainly one of the companies we're keeping an eye on, Rakuten, and its shares falling almost 9% as much as after reporting a first quarter operating loss that was worse than analysts' expectations. And of course, part of this disappointment was what we saw in the domestic GMV's gross merchandise volumes. Some analysts also pointing out, though, that maybe not all is lost. Tariff impacts from the likes of Jefferies expected to be kind of limited, or at least that is the analysis that we're hearing, Heidi.
Take a look at how we're shaping up, April, when it comes to the session opening up in Europe at the moment in terms of futures, looking a little bit lackluster at the moment. We're watching for some of the sort of defence-related rallies. We're hearing that NATO allies are working on a deal to significantly boost defence spending. 5% of GDP is the proposed aim on defence and defence-related spending by 2032. So that is certainly one sector that's going to be back in the spotlight today. This is Bloomberg.
We have Apple, as you know, it's coming in. And I had a little problem with Tim Cook yesterday. I said to him, Tim, you're my friend. I treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India. You can build in India if you want to take care of India, because India is the highest, one of the highest tariff nations in the world. It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff. So we go from couldn't do business in India. We're not even a top 30 in India because the tariff is so high, to a point where they have actually told us, I assume you too, Scott, you were working on that also, that there will be no tariff, right? Would you say that's a difference? They're the highest, and now they're saying no tariff. But I said to Tim, Tim, look, we've treated you really good. We put up with all the plants that you built in China for years. Now you got to build us. We're not interested in you building in India. India can take care of themselves. They're doing very well. We want you to build here, and they're going to be upping their production in the United States. Apple. So Apple's already in for $500 billion, but they're going to be upping their production. So it'll be great. Going, but it's very tough because of what we're doing today and tomorrow. But you know, if something happened, I'd go on Friday if it was appropriate. But we have people right now negotiating, and I think that I just hope that Russia and Ukraine are able to do something, because it has to stop. Not only the money, we spent $350 billion there, just handed. Nobody even knows where the money is. They just send them a check. There's no accounting. There's no one. Just give him money. Every time he came, I have to hand it to him. I think he's the greatest salesman maybe in history. Every time he came to the United States, he'd walk away with $100 billion. You know, that's a good salesman, right? Even by your standards, this is a big standard right here. But that's a pretty good standard. No, he'd walk in, leave with $100 billion. Last time he didn't do as well. He only got $60 billion. And it was so easy. It was like taking candy from a baby. That was the last administration. This administration's been a little bit tougher. But we'd like to see it end, and I think we're going to have a chance at doing it.
Trump and Crown Prince Mohammed bin Salman are meeting with business leaders in Saudi Arabia. The U.S. says Trump has secured $600 billion in investment commitments, with agreements to boost defense and technology ties. Trump will be speaking shortly from that investment forum, and we're going to head to Riyadh, where we are joined by Bloomberg's Jomana Bersecci. $600 billion. This is on top of money or in addition to money that has already been put aside. How do you think about this in the context of the alliance between the new nations, especially after the Stargate announcement earlier on in the administration?
Well, we always knew that this trip was going to be about deal making, and now just in the last half an hour, we're getting a little bit of a contours around some of the numbers that are coming through. So that 600 billion figure is a headline figure, but I should also just note that that is the same number that was discussed when President Trump had that phone call with Crown Prince MBS back in January, shortly after his inauguration. At the time, President Trump did say that the Saudis had committed to investing $600 billion into the U.S. over the next 4 years. That seems to be the figure that they've agreed to today as well. They will be arriving in this very hall, we hear, in the next 10 to 15 minutes after that signing ceremony, where the White House afterwards said that the Saudis had agreed to that figure. But we're also getting more detail on some of the other MOUs that have been signed. Let me just run you through them. Quite significant MOUs on energy, mineral resources. Also, Saudi Arabia have committed to buy a total amount of $4.8 billion of Boeing 737-8 aircraft. That's from an airline leasing company in Saudi Arabia. And then they've also agreed to some partnerships in the healthcare space, about $5.8 billion of commitments coming through there. And then also Aramco, the state-owned oil company, earlier in a panel said that they were looking to spend $3.4 billion to expand their refinery in the U.S. as well. So we're piecing together all of the deals and investments that are coming through. But that headline figure, $600 billion, is the one that the White House released a short while ago. And in a moment, when the Crown Prince and President Trump show up, they will be giving some remarks, and we should be hearing a little bit more about what the contents of these investment commitments might entail. One other factor as well that we should also take into consideration is artificial intelligence and cooperation on that front, because in the run-up to this visit, we had talked about the Trump administration repealing some of those diffusion rules put in place by the Biden administration that would allow for GCC countries, and not just Saudi Arabia, to get access to some of those high-tech chips that they've been looking to get access to expand their own AI ambition.
Well, and those high-tech chips, obviously they can be used for AI. They can also be used for military purposes. The Saudis want more access to weaponry as well, and I believe they've had a defense agreement. How does the U.S. square that circle, giving access to the Saudis these things, when the Saudis themselves have a fairly close relationship with China?
Yeah. So right now, we don't have a lot of details about what exactly the agreement entails. But I think it was interesting because earlier, right here in this plenary, we heard from David Sachs, who you know is AI and crypto czar, and he was saying that their reason to abandon the diffusion rules is because they sensed that they were too bureaucratic, but that you can still maintain control over chip access, but do it in a less bureaucratic manner so that the U.S. don't lose the AI dominance that they currently have. And so that's where the decision-making came from. I think when it comes to the details, they'll probably have to institute some guardrails around how many chips can be sold, or possibly one idea that's being discussed is for the U.S. to maintain some access to the data centers that will be operated in Saudi Arabia using some of those high-tech chips that will be bought under these new conditions. But on the back of that, and you were talking about it earlier in the show, there has been a boost to some of those chip makers, NVIDIA, AMD. I should also just say on the defense front, since you brought it up, the White House also just spoke about the largest defense deal that I think has been signed in history, those lines just coming through in the last 15 minutes, whereby Saudi Arabia have pledged to buy up to $140 billion worth of arms and weaponry from the U.S. as well. So significant defense deal coming through. And that is something that Saudi Arabia, the Crown Prince, has been pushing for as well.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations.
In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue in the largest structural issues. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States, and they're already starting to come back now based on tariffs because they don't want to pay 25, 50, or 100% tariffs, so they're moving them back to the United States. I spoke to Tim Cook this morning, and he's going to, I think, even up his numbers, $500 billion. He's going to be building a lot of plants in the United States for Apple, and we look forward to that. I really do look forward to that, because if you think about it, we opened up our country to China. They come, we don't, I mean, they have very few restrictions, and they didn't open their country to us. Never made sense to me. It's not fair. And they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us. And I think it's going to be great for unification and peace. China will also suspend and remove all of its non-monetary barriers. They've agreed to do that. Well, they're very numerous. But again, to me, the biggest thing that came out of that meeting is they've agreed. Now we have to get it papered, but they've agreed to open up China. It's going to be great for everybody.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Finn.
And I'm Alex. We're kicking you off to the closing bell right here in the U.S. And what a non-momentous day it is for the S&P. We're pretty much going absolutely nowhere. We flipped into positive territory for the whole year for the S&P yesterday, and not a ton of follow-through at the end of the day. We are basically flat when it comes to U.S. equities. Volatility also flat. We are seeing some moves, though, within the bond market, the back and the front end. You have the 2-year yield up by about 5 basis points. That's the highest level since February. And talking about going nowhere, that's the Bloomberg Dollar Index. Did not even make its way back to the end of to the beginning of last year level yesterday, like the S&P did, and going nowhere fast.
Yeah, that's a lot of unchanged on the screen there. So the question is FOMO back, or is it time for caution? Wall Street's rebound from the meltdown in April does show signs of sputtering, even as big tech stocks continue to melt up. A truce in the trade war with China, along with cooler inflation data, has removed the threat of stagflation for now, but buying the dip may be more appealing than chasing rallies at this point. Now, it is day 2 of the president's Middle East tour, and Trump is doing what he likes best, making deals that, in fact, he is currently touting in Doha. The bounty includes Saudi oil giant Aramco signing about $90 billion of agreements with major U.S. companies, including Exxon, Amazon, and NVIDIA, while Qatar commits $243 billion of investments, including Qatar Airways buying up to 210 Boeing planes. Meantime, back at home, House Republicans are scrambling to resolve their differences in the largest tax bill in U.S. history. Still to be determined is a cap on state and local tax deductions, but we do already know some of the winners: multimillionaires, private equity, and tipped workers, while renewable energy, EV makers, and private universities stand to lose out. But Alex, it's all about the markets right now, and earnings have come in pretty good in the first quarter, but we don't know what the outlook is.
Exactly. Maybe Cisco will help us provide some clarity when it reports after the closing bell. We get NVIDIA next Wednesday. Maybe the momentum will wind up helping the clarity for their outlook. All right, let's take a look at this. It's Citigroup's U.S. earnings revision index, right? So as it goes lower, earnings revise down. What we've seen is that for the first time in, over a year, we finally see earnings revisions in positive territory. Barely, but still positive. The reason why that's important is you take a look at the S&P, and it's not a perfect correlation, but when you wind up seeing earnings revisions to the negative, the S&P seems to decline. When you wind up seeing, say, positive earnings, it seems like the S&P can get into higher territory. And just look at this correlation here, what we saw in April with earnings revisions and the S&P. All of this to say, Scarlett, that this could point to the fact that we might see more gains for the S&P.
All right, so let's bring our next guest into the picture here and welcome Amy Wu Silverman, equity derivative strategist at RBC Capital Markets. So, Amy, there's a lot of things to consider here as we look at an S&P 500 that's largely flat on the day and largely flat on the year as well. It feels very much like we are range-bound. The VIX has declined appreciably, and because of that, traders are positioning around smaller moves, which kind of reinforces this range-bound trading that we're in.
I think that's true, but I think to some degree it's been a very tumultuous round trip back to flat, Scarlett. And so the markets do have a little bit of memory. I think what is interesting right now is you're actually seeing more of a chase to the right tail than concern about the left tail.
What does that mean?
So essentially there's more concern about being left behind when you see this momentum up than we saw on the way down. And I think that a little bit plays to the COVID playbook. Post-COVID, there's been much more of a risk that you get the benchmark FOMO, that AI rips, that mega cap tech rips, and you as an investor who has to post those benchmarks get left behind.
So are options cheap to help navigate that kind of a setup?
So it's interesting. What I would tell you is a week ago, Alex, I would have told you that the option prices downside were still relatively elevated, even though, to be fair, from an S&P perspective, we had gotten back a lot of those gains. Now, post this weekend, a lot of people felt like that left tail, that 145% was completely off the table. We've actually seen that left tail, so that demand for cost protection has come in pretty dramatically. So if you do have any lingering concerns, I mean, market hedges are relatively inexpensive right now.
Interesting. Is it the same for, say, tech? Is it the same for, say, the smaller cap companies? I feel like we've seen a divergence, right? The small caps haven't necessarily caught up, and many strategists are saying, well, hey, you could see some short covering.
This is like so sad, but essentially because the small caps never really made it all that much, there is less to protect. So in that sense, you're not seeing as much of that cost differentiation. But I would say specifically in NASDAQ and Qs and AI, there's been, again, much more of that right tail becoming more pricey right now. We've seen that in this last post-weekend rally where those calls are getting relatively pricey. And so call spreads or anything that ratios you but still gives you that upside is starting to become more palatable.
How keyed into earnings and specifically guidance are investors and traders right now, given that first quarter results are backwards looking, they don't really matter, and we don't know what the outlook is, even though we have this 90-day pause on the tariffs on China?
So I think right now, when you think about like the July quarter that's coming up, I think investors are hanging on like every word of management with bated breath, because anything they say about what they did in this period, did they put the stuff on the ship? Is it not on the ship? Did it leave the port? Anything that gives you a little bit more insight into that hard data that we've all been waiting for to trickle down, I think becomes very important. You just had one quarter where those implied moves and options going in were very, very pricey. Not surprising. I think that only becomes more important because we're at this weird lag fundamentally between what we know and what we're going to find out.
And then also what we know has changed in the last, say, couple weeks, right? Have you guys changed your growth, your inflation, your earnings forecast based on the 90-day reprieve with China and that lower rate from 145%?
Yeah, I would say the one major change that's been made, and I would say every risk person has repriced on the buy side, is just this idea that you can lop off that little bit of tail on the left side where that 145% was essentially unsustainable, but we had to kind of take people at their word because that was the official price. Now that we know that's not there, it's like, does it go down from 30%? Perhaps, but at least we're negotiating in a world where that normalized distribution of probabilities has like shifted a little bit more into palatable territory.
When you try to figure out what's going on in the macro environment and which asset classes is the first to react, what are you seeing in terms of what's leading equities?
So it's interesting because what post-Liberation Day, the price action to me was equities led, then equity vol, then rates fall, then credit. I would say like this time around with this big rally, it's actually been more in the credit rate space first and then equity vol because it had been declining. I mean, the VIX did uninvert, right? So we did finally get back to kind of a normalized VIX curve environment, but still I would say we didn't end up leading this time around, whereas post-Liberation Day, all that concern was equity vol.
What are we doing with the dollar? Where are the options there? Is there anyone bullish on the dollar?
You know what I would say is when I speak to investors who they're either kind of like European base and they're looking at the dollar, it's more we had this talk about this tectonic shift of maybe the US dollar not being the reserve currency, maybe there being problems. I feel like a lot of that conversation is dissipated, Alex. So we're back to just, is the dollar pricey because fundamentally it's pricey versus is there some existential risk that we have to price into our models and options that I feel like is no longer on the table?
Or is there an active campaign to weaken the dollar? I mean, there's a lot of speculation in the FX market that Trump's trade officials were perhaps seeking a weaker dollar and pushing other countries to strengthen their currency as a condition for any kind of trade deal.
You know, I've learned that I cannot get into the mind of this man. So I guess what I would say about that is the interesting cross current there when it relates back to companies and options is to some degree that's helped ameliorate some of the earnings. And so I think these cross currents are going to come back up in July when you see, okay, perhaps we got something on the weaker dollar being good, but then on the tariffs being bad. How does that like end up canceling out in terms of both volatility and implied moves?
So wrapping this all together, would you guys understand good news as being good news now? Or is good news for the economy is going to be bad news now for the markets because of where the Fed kind of fits into all of this?
It's such an interesting question because I think right now good news is still good news, but I think we're getting to the
it seems like
good news is not going to be good news soon. So for instance, like in 2 weeks when Nvidia reports, if that's a good earnings, I think that's something that we are going to rally on because, again, I think that benchmark FOMO right now, that risk of that right tail chase is really what's driving that market. But we get a little bit more there and then it's like, oh, we're taking like July off the table, then we're going to have a little bit of a temper tantrum.
Right. The balance has been tipped ever so slightly.
Yeah.
Amy Wu Silverman, always a pleasure. Thank you so much for joining us today. Amy Wu Silverman is equity derivative strategist at RBC Capital Markets. Now, coming up on the close, President Trump still making his way across the Middle East today as U.S. tariff policy continues its historic shift. Michael Froman, head of the Council on Foreign Relations, will be joining us to discuss.
All right, plus trading platform eToro making its big NASDAQ debut today after raising nearly $620 million in upsized IPO. We're going to take you through the moves in its first day of trading.
And the Fed still bracing itself for the economic impact from a teetering White House trade policy. We've got Jeremy Siegel, professor emeritus of finance at Penn's Wharton School, weighing in. That's all coming up in the next 2 hours. This is The Close.
Earnings season is here.
It's going to be a lot of fireworks.
Pretty astonishing moment in time in the earnings context.
Bloomberg is first to break the numbers.
Goldman Sachs, JP Morgan, Morgan Stanley.
Booking, Airbnb,
Meta, Microsoft, Qualcomm.
There's a lot to talk about here.
With the smartest insights.
We're not seeing dramatic weakness.
It has been an incredible period of time from a trading perspective.
We feel really good about the market share trajectory.
Continuing coverage on Bloomberg. Context changes everything.
There is some wiggle room. How much wiggle room, that's what we need to determine. But at the end of the day, I think both sides will come together to get this done for the American people. Because what we'll see if we don't get this tax bill done will be gravely worse than what we're experiencing now with the SALT cap for all Americans.
That was Representative Lisa McClain, a chair of the House GOP conference on balance of power, addressing the ongoing negotiations over the SALT deductions. For the latest in D.C., let's bring in Laura Davison, a Washington Deputy Bureau Chief. All right, Laura, where do we stand on the GOP tax bill?
So right now, the bill, the main parts of the bill have passed the Ways and Means Committee, but the key issue that is not yet resolved is the state and local tax deduction. Lawmakers are meeting last night. They're meeting again today. There is still no deal moving forward. In the bill that passed the committee, they say a $30,000 cap, but that has income limits for people, individuals earning $200,000 a year or couples earning $400,000 a year. A select group of members, about 5 or 6 from New York, New Jersey, California, have said that's not good enough. They've previously thrown out a number closer to $62,000, up from $30,000. It's, there's a bunch of numbers being traded back and forth, including, maybe somewhere about $40,000 for individuals, $80,000 for couples. But they realize that they need to come to an agreement here within the next couple of days if they're going to advance this bill on the timeline they've set out. Yeah, and I'm glad you pointed out it's 5 or 6 lawmakers, because the GOP can really only afford to lose 3 votes before they kind of have to, renegotiate everything or start from scratch in some ways. There were some proposals that did not make it into this draft bill, and I'm wondering what parts of the bill are likely to therefore be vulnerable to lobbying when it gets to the Senate. So there anything that raises money. So things like a top bracket tax on millionaires, but also these Medicaid cuts that are in another portion of this bill. Both of those are issues that are going to come to the fore. Essentially, the problem is Republicans have more ideas to cut taxes than they have ways to pay for them. So anything that brings more money in, so cutting the carried interest tax benefit, raising the tax rate on top Americans, some other business tax increases that weren't included in this version could pop up later when lawmakers realize that they want to do less cutting to Medicaid, or they have other tax cuts. If Trump were to come up with a new no taxes on something else, then they'd have to make more wiggle room to build that into the bill.
So what happens now on the Democratic side?
Democrats largely have a little role to play other than on messaging. With Trump's first-term tax bill back in 2017, they were very successful at branding it and messaging it as a bill for corporations and the wealthy. The polling on the bill was actually quite weak, and they ended up picking up a bunch of seats in the midterm. Other than that, Republicans have the votes, and they have the ability to move this bill through as long as the party stays united. Right. So they're powerless, essentially, and are just kind of passively watching. Laura, in terms of timeline here, I know that Speaker Johnson has talked about wanting to get this out of the House by the end of the month, which sounds pretty aggressive. What is the drop-dead deadline here? So the drop-dead deadline is whatever ends up being the X date for the debt ceiling. We've gotten several estimates from the Treasury and the Congressional Budget Office. They're suggesting sometime as soon as early August, we could hit that borrowing limit. And that because the increase to the debt ceiling is baked into the tax bill, that's essentially the real deadline that lawmakers have to get this bill done. All right, good stuff. Bloomberg's Laura Davison, our Deputy Washington Bureau Chief, joining us from D.C. Thank you so much. Alex, this is the big, beautiful bill, or at least draft of the bill that the president has been promising for so long. And it does incorporate a lot of the things that he had been campaigning on, right? Like eliminating taxes on tips and on overtime. But still, there are a lot of things that he also floated, like a millionaire's tax that didn't get anywhere.
It didn't get anywhere. What's also interesting in my world is how it affects energy companies. Oh, yeah. So on the one hand, you have solar companies, for example, that the changes weren't as dramatic as one thought, which is why you saw First Solar rally so much. On the flip side, hydrogen is in a really tough place. It's in a really rough place that I don't know how companies are going to wind up navigating that. Also for solar installations, that tax credit, you have to get a solar for your house before the end of this year. So that's going to hurt. So it's a lot of nuanced, but could have been worse. Right. I guess. EV makers also lose out here because of that elimination of the consumer credit. So. Yeah. So there's that as well. We knew that was kind of happening because Tesla was pushing for that, in fact, because they have the advantage. All right, coming up, we're going to take a look at shares of Rivian. Oh, I see what you did there.
Yeah, look at that. Yeah. After Jefferies shifted their call on the EV maker to hold from buy. This is The Close on Bloomberg. Time now for our top calls, a look at some of the big movers on the back of analyst recommendations. And we're going to start with SIBO Global Markets. Morgan Stanley double downgrading the stock to underweight from overweight and cutting its price target by roughly $40 to a total of $215, or for a total of $215. Whoa.
The firm is recommending lower defensive exposure after the tariff de-escalation between the U.S. and China was better than expected. You could see the stock moving down almost 3%.
All right, coming up, and next is AMD. You got Bank of America maintaining its buy rating, but upping their price target by $10 to $130. BofA sees AMD along with Nvidia as the main beneficiaries of President Trump's agreement with Saudi Arabia and the UAE to grant them wider access to AI chips from the two chip heavyweights. And the Nvidia has actually performed really well, turning positive on the year and back to up over $3 trillion. Scar.
And finally, let's take a look at Rivian. Jefferies hitting the brakes on the EV maker, shifting his rating to hold from buy and maintaining a price target of $16. The analyst says there is cause for concern when it comes to Rivian's downbeat demand outlook for this year. The shares not responding all that much. It's up marginally by 0.25% to $14.91. And those are some of our top calls. All right, joining us now to discuss that Rivian call and the outlook for Rivian overall is Bloomberg's David Welch, joining us from Detroit. So, David, talk to us a little bit about Rivian and whether its outlook kind of matches some of the other companies in the sector.
Yeah, it does. I think there's overall, when it comes to EV sales looking ahead, it's looking pretty dour. Demand was already softening as we kind of hit this flat part of EV growth. A lot of those who want EVs already have them, and winning over the mass part of the vehicle market's been a lot tougher due to charging, due to the prices. But they've got Trump policies, right? So when Rivian lowered their sales target for the year last week, they said they talked about tariffs being an issue, and that is. So that's going to cause them profit problems. Maybe they have to raise prices. We'll see. Everybody is wrestling with that. But then Monday, you have Republicans saying that they want to gut the EV tax credits. So those go $100 for consumers who want to buy an EV. Some of Rivian's are too expensive for that, but some aren't. I think generally there's just in the market kind of a downbeat look at people wanting to buy EVs. Trump doesn't exactly talk about them lovingly. The Republicans don't either. So you don't have this enthusiasm behind them like you did a couple of years ago. Tax credits going away. This is what Rivian does. And so I think investors are really taking a wait-and-see attitude, trying to figure out what this is going to mean for a company that does nothing but sell EVs. And by the way, they need sales growth to get scale. They are joined at the hip with Volkswagen, who took a stake in the company. But that doesn't mean their sales are going to be great, and it doesn't mean that their profits are going to get better this year. So I think between the tariffs and between a gutting of EV tax credits, there's just a shadow over that whole business right now, whether you're General Motors and Ford and you sell mostly internal combustion vehicles and some EVs, or whether you're a pure play EV company like Rivian.
Well, I guess also the question is, Trump did buy Tesla, so he did buy an EV. How much of this is macro specific and how much of this is Rivian specific?
Some of it is Rivian specific. So you're talking about a company that's looking at selling, under 50,000 vehicles. That's not a lot. They have other vehicles they want to build that are cheaper, can get higher volume. But at this point, and even with a company like General Motors, which has been growing its EV business, you have to get sales up. That's what gets your battery costs down. You just have to get scale and cover the huge fixed costs that everybody's been investing in this. And Rivian's made some real investments here, but there's still, at this point, a niche car company selling a small volume of vehicles that are pretty expensive in a market that is not so hot on electric vehicles right now. So part of that is very specific to a pretty small startup company that doesn't have this other big business. General Motors and Ford can struggle with their EVs, and they're making billions of dollars selling large SUVs and pickup trucks. They don't have that. Tesla's different. Tesla makes money selling EVs. And so even though Rivian has said they might make a small gross profit this year, Tesla makes pretty good money doing it, and they sell EV credits. So Rivian's kind of neither here nor there, right? They don't have truck profits. They're not Tesla where they're selling EV credits and making money on the EVs they sell. They've really just got to make what they do work, and that's very tough to do in this environment.
Yeah, so in comparison to, say, a Tesla, it feels like they're very much a one-trick pony here. So, David, you mentioned General Motors and EVs. What's notable, and I know you wrote a story about this not so long ago, is that General Motors has hired Sterling Anderson. He was the former director of Tesla's autopilot program. He also was a co-founder of the autonomous vehicle startup Aurora, and he's going to serve as the chief product officer for all of GM, so overseeing EVs as well as gas-fueled cars. How significant is this for GM to kind of go to someone like Sterling Anderson?
Look, I think this is a very big hire, and I think the market kind of didn't really give it.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Fair.
And I'm Alex. We're kicking you off to the closing bell right here in the U.S. And what a non-momentous day it is for the S&P.
Good way of describing it.
We're pretty much going absolutely nowhere. We flipped into positive territory for the whole year for the S&P yesterday, and not a ton of follow-through at the end of the day. We are basically flat when it comes to U.S. equities. Volatility also flat. We are seeing some moves, though, within the bond market, the back and the front end. You have the 2-year yield up by about 5 basis points. That's the highest level since February. And talking about going nowhere, that's the Bloomberg Dollar Index. Did not even make its way back to the end of to the beginning of last year level yesterday, like the S&P did, and going nowhere fast.
Yeah, that's a lot of unchanged on the screen there. So the question is FOMO back or is it time for caution? Wall Street's rebound from the meltdown in April does show signs of sputtering, even as big tech stocks continue to melt up. A truce in the trade war with China, along with cooler inflation data, has removed the threat of stagflation for now, but buying the dip may be more appealing than chasing rallies at this point. Now, it is day 2 of the president's Middle East tour, and Trump is doing what he likes best, making deals that, in fact, he is currently touting in Doha. The bounty includes Saudi oil giant Aramco signing about $90 billion of agreements with major U.S. companies, including Exxon, Amazon, and NVIDIA, while Qatar commits $243 billion of investments, including Qatar Airways buying up to 210 Boeing planes. Meantime, back at home, House Republicans are scrambling to resolve their differences in the largest tax bill in U.S. history. Still to be determined is a cap on state and local tax deductions, but we do already know some of the winners: multimillionaires, private equity, and tipped workers, while renewable energy, EV makers, and private universities stand to lose out. But Alex, it's all about the markets right now, and earnings have come in pretty good in the first quarter, but we don't know what the outlook is.
Exactly. Maybe Cisco will help us provide some clarity when it reports after the closing bell. We get NVIDIA next Wednesday. Maybe the momentum will wind up helping the clarity for their outlook. All right, let's take a look at this. It's Citigroup's U.S. earnings revision index, right? So as it goes lower, earnings revise down. What we've seen is that for the first time in, over a year, we finally see earnings revisions in positive territory. Barely, but still positive. The reason why that's important is you take a look at the S&P, and it's not a perfect correlation, but when you wind up seeing earnings revisions to the negative, the S&P seems to decline. When you wind up seeing, say, positive earnings, it seems like the S&P can get into higher territory. And just look at this correlation here, what we saw in April with earnings revisions and the S&P. All of this to say, Scarlett, that this could point to the fact that we might see more gains for the S&P.
All right, so let's bring our next guest into the picture here and welcome Amy Wu Silverman, equity derivative strategist at RBC Capital Markets. So, Amy, there's a lot of things to consider here as we look at an S&P 500 that's largely flat on the day and largely flat on the year as well. It feels very much like we are range-bound. The VIX has declined appreciably, and because of that, traders are positioning around smaller moves, which kind of reinforces this range-bound trading that we're in.
I think that's true, but I think to some degree it's been a very tumultuous round trip back to flat, Scarlett. And so the markets do have a little bit of memory. I think what is interesting right now is you're actually seeing more of a chase to the right tail than concern about the left tail.
What does that mean?
So essentially there's more concern about being left behind when you see this momentum up than we saw on the way down. And I think that a little bit plays to the COVID playbook. Post-COVID, there's been much more of a risk that you get the benchmark FOMO, that AI rips, that mega cap tech rips, and you as an investor who has to post those benchmarks get left behind.
So are options cheap to help navigate that kind of a setup?
So it's interesting. What I would tell you is a week ago, Alex, I would have told you that the option prices downside were still relatively elevated, even though, to be fair, from an S&P perspective, we had gotten back a lot of those gains. Now, post this weekend, a lot of people felt like that left tail, that 145% was completely off the table. We've actually seen that left tail, so that demand for cost protection has come in pretty dramatically. So if you do have any lingering concerns, market hedges are relatively inexpensive right now.
Interesting. Is it the same for, say, tech? Is it the same for, say, the smaller cap companies? I feel like we've seen a divergence, right? The small caps haven't necessarily caught up, and many strategists are saying, well, hey, you could see some short covering.
This is like so sad, but essentially because the small caps never really made it all that much, there is less to protect. So in that sense, you're not seeing as much of that cost differentiation. But I would say specifically in NASDAQ and Qs and AI, there's been, again, much more of that right tail becoming more pricey right now. We've seen that in this last post-weekend rally where those calls are getting relatively pricey. And so call spreads or anything that ratios you but still gives you that upside is starting to become more palatable.
How keyed into earnings and specifically guidance are investors and traders right now, given that first quarter results are backwards looking, they don't really matter, and we don't know what the outlook is, even though we have this 90-day pause on the tariffs on China?
So I think right now, when you think about like the July quarter that's coming up, I think investors are hanging on like every word of management with bated breath, because anything they say about what they did in this period, did they put the stuff on the ship? Is it not on the ship? Did it leave the port? Anything that gives you a little bit more insight into that hard data that we've all been waiting for to trickle down, I think becomes very important. You just had one quarter where those implied moves and options going in were very, very pricey. Not surprising. I think that only becomes more important because we're at this weird lag fundamentally between what we know and what we're going to find out.
Yeah. And then also what we know has changed in the last, say, couple weeks, right? Have you guys changed your growth, your inflation, your earnings forecast based on the 90-day reprieve with China and that lower rate from 145%?
Yeah, I would say the one major change that's been made, and I would say every risk person has repriced on the buy side, is just this idea that you can lop off that little bit of tail on the left side where that 145% was essentially unsustainable, but we had to kind of take people at their word because that was the official price. Now that we know that's not there, it's like, does it go down from 30%? Perhaps, but at least we're negotiating in a world where that normalized distribution of probabilities has like shifted a little bit more into palatable territory.
When you try to figure out what's going on in the macro environment and which asset classes is the first to react, what are you seeing in terms of what's leading equities?
So it's interesting because what post-Liberation Day, the price action to me was equities led, then equity vol, then rates fall, then credit. I would say like this time around with this big rally, it's actually been more in the credit rate space first and then equity vol because it had been declining. I mean, the VIX did uninvert, right? So we did finally get back to kind of a normalized VIX curve environment, but still I would say we didn't end up leading this time around, whereas post-Liberation Day, all that concern was equity vol.
What are we doing with the dollar? Where are the options there? Is there anyone bullish on the dollar?
You know what I would say is when I speak to investors who they're either kind of like European base and they're looking at the dollar, it's more we had this talk about this tectonic shift of maybe the US dollar not being the reserve currency, maybe there being problems. I feel like a lot of that conversation is dissipated, Alex. So we're back to just, is the dollar pricey because fundamentally it's pricey versus is there some existential risk that we have to price into our models and options that I feel like is no longer on the table?
Or is there an active campaign to weaken the dollar? I mean, there's a lot of speculation in the FX market that Trump's trade officials were perhaps seeking a weaker dollar and pushing other countries to strengthen their currency as a condition for any kind of trade deal.
You know, I've learned that I cannot get into the mind of this man. So I guess what I would say about that is the interesting cross current there when it relates back to companies and options is to some degree that's helped ameliorate some of the earnings. And so I think these cross currents are going to come back up in July when you see, OK, perhaps we got something on the weaker dollar being good, but then on the tariffs being bad. How does that like end up canceling out in terms of both volatility and implied moves?
So wrapping this all together, would you guys understand good news as being good news now? Or is good news for the economy is going to be bad news now for the markets because of where the Fed kind of fits into all of this?
It's such an interesting question because I think right now good news is still good news, but I think we're getting to the...
It seems like.
Good news is not going to be good news soon. So, for instance, like in 2 weeks when NVIDIA reports, if that's a good earnings, I think that's something that we are going to rally on because, again, I think that benchmark FOMO right now, that risk of that right tail chase is really what's driving that market. But we get a little bit more there and then it's like, oh, we're taking like July off the table, then we're going to have a little bit of a temper tantrum.
Right. The balance has been tipped ever so slightly.
Yeah.
Amy Wu Silverman, always a pleasure. Thank you so much for joining us today. Amy Wu Silverman is equity derivative strategist at RBC Capital Markets. Now, coming up on the close, President Trump still making his way across the Middle East today as U.S. tariff policy continues its historic shift. Michael Froman, head of the Council on Foreign Relations, will be joining us to discuss.
All right, plus trading platform eToro making its big NASDAQ debut today after raising nearly $620 million in upsized IPO. We're going to take you through the moves in its first day of trading.
And the Fed still bracing itself for the economic impact from a teetering White House trade policy. We've got Jeremy Siegel, Professor Emeritus of Finance at Penn's Wharton School, weighing in. That's all coming up in the next 2 hours. This is The Close.
Earnings season is here.
Earnings, the hot topic of conversation. It's going to be a lot of fireworks.
Pretty astonishing moment in time in the earnings context.
Bloomberg is first to break the numbers.
Goldman Sachs, JP Morgan, Morgan Stanley.
Booking, Airbnb.
Meta, Microsoft, Qualcomm.
There's a lot to talk about here.
With the smartest insights.
We're not seeing dramatic weakness.
It has been an incredible period of time from a trading perspective.
We feel really good about the market share trajectory.
Continuing coverage on Bloomberg. Context changes everything.
There is some wiggle room. How much wiggle room, that's what we need to determine. But at the end of the day, I think both sides will come together to get this done for the American people. Because what we'll see if we don't get this tax bill done will be gravely worse than what we're experiencing now with the SALT cap for all Americans.
That was Representative Lisa McClain, chair of the House GOP conference on balance of power, addressing the ongoing negotiations over the SALT deductions. For the latest in D.C., let's bring in Laura Davison, a Washington Deputy Bureau Chief. All right, Laura, where do we stand on the GOP tax bill?
So right now, the main parts of the bill have passed the Ways and Means Committee, but the key issue that is not yet resolved is the state and local tax deduction. Lawmakers are meeting last night. They're meeting again today. There is still no deal moving forward. In the bill that passed the committee, they say a $30,000 cap, but that has income limits for people, individuals earning $200,000 a year or couples earning $400,000 a year. A select group of members, about 5 or 6 from New York, New Jersey, California, have said that's not good enough. They've previously thrown out a number closer to $62,000, up from $30,000. There's a bunch of numbers being traded back and forth, including, maybe somewhere about $40,000 for individuals, $80,000 for couples. But they realize that they need to come to an agreement here within the next couple of days if they're going to advance this bill on the timeline they've set out.
Yeah, and I'm glad you pointed out it's 5 or 6 lawmakers because the GOP can really only afford to lose 3 votes before they kind of have to, renegotiate everything or start from scratch in some ways. There were some proposals that did not make it into this draft bill, and I'm wondering what parts of the bill are likely to therefore be vulnerable to lobbying when it gets to the Senate.
So there anything that raises money. So things like a top tax on millionaires, but also these Medicaid cuts that are in another portion of this bill. Both of those are issues that are going to come to the fore. Essentially, the problem is Republicans have more ideas to cut taxes than they have ways to pay for them. So anything that brings more money in, so cutting the carried interest tax benefit, raising the tax rate on top Americans, some other business tax increases that weren't included in this version could pop up later when lawmakers realize that they want to do less cutting to Medicaid or they have other tax cuts. If Trump were to come up with a new no taxes on something else, then they'd have to make more wiggle room to build that into the bill.
So what happens now on the Democratic side?
Democrats largely have a little role to play other than on messaging. With Trump's first-term tax bill back in 2017, they were very successful at branding it and messaging it as a bill for corporations and the wealthy. The polling on the bill was actually quite weak, and they ended up picking up a bunch of seats in the midterm. Other than that, Republicans have the votes, and they have the ability to move this bill through as long as the party stays united.
Right. So they're powerless, essentially, and are just kind of passively watching. Laura, in terms of timeline here. I know that Speaker Johnson has talked about wanting to get this out of the House by the end of the month, which sounds pretty aggressive. What is the drop-dead deadline here?
So the drop-dead deadline is whatever ends up being the X date for the debt ceiling. We've gotten several estimates from the Treasury and the Congressional Budget Office. They're suggesting sometime as soon as early August, we could hit that borrowing limit. And that because the increase to the debt ceiling is baked into the tax bill, that's essentially the real deadline that lawmakers have to get this bill done.
All right, good stuff. Bloomberg's Laura Davison, our Deputy Washington Bureau Chief, joining us from D.C. Thank you so much. Alex, this is the big, beautiful bill, or at least draft of the bill that the president has been promising for so long. And it does incorporate a lot of the things that he had been campaigning on, right? Like eliminating taxes on tips and on overtime. But still, there are a lot of things that he also floated, like a millionaire's tax that didn't get anywhere.
It didn't get anywhere. What's also interesting in my world is how it affects energy companies.
Oh, yeah.
So on the one hand, you have solar companies, for example, that the changes weren't as dramatic as one thought, which is why you saw First Solar rally so much. On the flip side, hydrogen is in a really tough place. It's in a really rough place that I don't know how companies are going to wind up navigating that. Also for solar installations, that tax credit, you have to get a solar for your house before the end of this year. So that's going to hurt. So it's a lot of nuanced, but could have been worse.
Right.
I guess.
EV makers also lose out here
Yeah.
because of that elimination of the consumer credit. So.
Yeah. So there's that as well.
We knew that was kind of happening because Tesla was pushing for that, in fact, because they have the advantage. All right, coming up, we're going to take a look at shares of Rivian.
Oh, I see what you did there.
Yeah.
Yeah, look at that.
Yeah. After Jefferies shifted their call on the EV maker to hold from buy. This is The Close on Bloomberg. Time now for our top calls to look at some of the big movers on the back of analyst recommendations. And we're going to start with SEBI Global Markets. Morgan Stanley double downgrading the stock to underweight from overweight and cutting its price target by roughly $40 to a total of $215, or for a total of $215. Whoa. The firm is recommending lower defensive exposure after the tariff de-escalation between the U.S. and China was better than expected. You could see the stock moving down almost 3%.
All right, coming up, and next is AMD. You got Bank of America maintaining its buy rating, but upping their price target by $10 to $130. BofA sees AMD along with Nvidia as the main beneficiaries of President Trump's agreement with Saudi Arabia and the UAE to grant them wider access to AI chips from the two chip heavyweights. And the Nvidia has actually performed really well, turning positive on the year and back to up over $3 trillion, Scar.
And finally, let's take a look at Rivian. Jefferies hitting the brakes on the EV maker, shifting its rating to hold from buy and maintaining a price target of $16. The analyst says there is cause for concern when it comes to Rivian's downbeat demand outlook for this year. The shares not responding all that much. It's up marginally by 0.25% to $14.91. And those are some of our top calls. All right, joining us now to discuss that Rivian call and the outlook for Rivian overall is Bloomberg's David Welch, joining us from Detroit. So, David, talk to us a little bit about Rivian and whether its outlook kind of matches some of the other companies in the sector.
Yeah, it does. I think there's overall, when it comes to EV sales looking ahead, it's looking pretty dour. Demand was already softening as we kind of hit this flat part of EV growth. A lot of those who want EVs already have them, and winning over the mass part of the vehicle market's been a lot tougher due to charging, due to the prices. But they've got Trump policies, right? So when Rivian lowered their sales target for the year last week, they said they talked about tariffs being an issue, and that is. So it's going to cause them profit problems. Maybe they have to raise prices. We'll see. Everybody is wrestling with that. But then Monday you have Republicans saying that they want to gut the EV tax credits. So those go $100 for consumers who want to buy an EV. Some of Rivian's are too expensive for that, but some aren't. I think generally there's just in the market kind of a downbeat look at people wanting to buy EVs. Trump doesn't exactly talk about them lovingly. The Republicans don't either. So you don't have this enthusiasm behind them like you did a couple of years ago. Tax credits going away. This is what Rivian does. And so I think investors are really taking a wait-and-see attitude, trying to figure out what this is going to mean for a company that does nothing but sell EVs. And by the way, they need sales growth to get scale. You know, they are joined at the hip with Volkswagen, who took a stake in the company. But that doesn't mean their sales are going to be great, and it doesn't mean that their profits are going to get better this year. So I think between the tariffs and between a gutting of EV tax credits, there's just a shadow over that whole business right now, whether you're General Motors and Ford and you sell mostly internal combustion vehicles and some EVs, or whether you're a pure play EV company like Rivian.
Well, I guess also the question is, I mean, Trump did buy a Tesla, so he did buy an EV. How much of this is macro specific and how much of this is Rivian specific?
Some of it is Rivian specific. So you're talking about a company that's looking at selling, under 50,000 vehicles. That's not a lot. They have other vehicles they want to build that are cheaper, can get higher volume. But at this point, and even with a company like General Motors, which has been growing its EV business, you have to get sales up. That's what gets your battery costs down. You just have to get scale and cover the huge fixed costs that everybody's been investing in this. And Rivian's made some real investments here, but there's still, at this point, a niche car company selling a small volume of vehicles that are pretty expensive in a market that is not so hot on electric vehicles right now. So part of that is very specific to a pretty small startup company that doesn't have this other big business. General Motors and Ford can struggle with their EVs, and they're making billions of dollars selling large SUVs and pickup trucks. They don't have that. Tesla's different. Tesla makes money selling EVs. And so even though Rivian has said they might make a small gross profit this year, Tesla makes pretty good money doing it, and they sell EV credits. So Rivian's kind of neither here nor there, right? They don't have truck profits. They're not Tesla where they're selling EV credits and making money on the EVs they sell. They've really just got to make what they do work, and that's very tough to do in this environment.
Yeah, so in comparison to, say, a Tesla, it feels like they're very much a one-trick pony here. So, David, you mentioned General Motors and EVs. What's notable, and I know you wrote a story about this not so long ago, is that General Motors has hired Sterling Anderson. He was the former director of Tesla's autopilot program. He also was a co-founder of the autonomous vehicle startup Aurora, and he's going to serve as the chief product officer for all of GM, so overseeing EVs as well as gas-fueled cars. How significant is this for GM to kind of go to someone like Sterling Anderson?
Look, I think this is a very big hire, and I think the market kind of didn't really give it a seriously long look, because what Sterling Anderson's doing right now with, what he was most recently doing, right, with Aurora is, this is an autonomous trucking company that's just taking the driver out of their vehicles. They're starting to show progress, but for a long time, they were really struggling to get their autonomous vehicles going in a meaningful way and get investor attention. So I think people maybe forgot about Sterling a bit, but this is a guy who launched Model X. He got an autonomous truck on the road, so he knows how to put vehicles from design all the way to manufacturing and marketing together. He can do stuff with self-drive and partial self-driving technologies. He had his hands on that at Tesla and obviously with Aurora too. And this is sort of the really bringing technological smarts to very big jobs at General Motors. The head of product development is a huge job there. That's the job Mary Barra had right before she became CEO. So this is not like some 10th or 12th on the org chart kind of job. You've got Mary Barra as CEO, you've got the CFO, you've got Mark Royce president, and I'd say this is probably the next biggest job after that. So Sterling Anderson has gone to a pretty high position in the company. He's only 41. It's not saying he's going to be next CEO, but it's a big move.
All right, David, got to leave it there. Bloomberg's David Walsh, thank you very much for joining us. All right, coming up, we are going to get the broad take on tariffs and the economy with Michael Froman, president on the Council of Foreign Relations. This is The Close on Bloomberg.
I think it'll show somewhat slower growth to reflect the fact that tariffs have gone up more than they anticipated, and somewhat higher inflation to reflect the same consequence. So I think it'll be even a more pessimistic forecast in the sense that the Fed will be missing both of its dual mandate objectives by a bigger magnitude.
And that was, of course, Bill Dudley, the former president of the New York Fed, talking about the impact that tariffs will have on Fed policy. It's a big question mark, and Jay Powell has been very clear about saying he's not going to make any rash decisions. The committee won't make any rash decisions because they have to see how it all plays out in the economy.
What we have seen, though, is Treasury Secretary Scott Bessent really making an appeal to Wall Street over the past few weeks, particularly at Milken.
Yeah.
And like, guys, it's going to be okay. We're going to lower taxes. And you see the GOP bill coming out of the House. And then you have President Trump in the Middle East talking about all of these deals, saying that he's secured deals totaling more than $243.5 billion with Qatar.
Yeah, so it's been a full court press, and they're very much on message. Look to what we're going to do on the fiscal side next.
All right, well, joining us now for more is Mike Froman, president on the Council of Foreign Relations. Mike, good to see you. Thanks for coming in.
Thanks for having me.
So when we get these headlines here about all the deals that are being done in the Middle East with the U.S., how do you think about that? Like, are these deals like shovels in the ground? We're putting money in the U.S.? Are these just decisions to talk more? How do you take it?
Well, I think some of the deals are likely to produce investments here and exports, very importantly, to those countries over the medium term. Some are probably more along the lines of agreement to discuss more investment down the road. And the thing about these investments is that it can take years, if not a decade or more, for the shovels to actually get put in the ground, and very importantly, for jobs to be created longer term. But it's very positive when we're selling more exports to other countries, like the planes and the engines that were announced. And it's very positive when these countries are making decisions to invest more in the United States.
And given who the president is, he likes the part of announcing the deals the most when it comes to these foreign trips. During the presidential debate all of last year ago, President Trump famously said that he had concepts of a plan when it came to health care without offering any specifics. The one trade deal that has been announced so far, which is the UK, very much feels like concepts of a plan because there's no real detail involved. Yet markets celebrated this even as we wait for the actual details to materialize in months, maybe if not years. What are the risks of the president declaring victory when there are only concepts of a plan for these deals?
Well, look, I think the markets tend to look for any piece of good news. And if you set out a very extreme maximalist position and then walk back and agree to something that is less than that, there's a sense of relief that we're only down to 10% tariffs on the UK going forward. Of course, that's about 4 times the current tariffs that we have on UK exports to the United States. But when you start at a much higher level, that is seen as a positive. I think the challenge is the devil's in the details. And some of the details can be worked out quickly. Some take a great deal of time. You go line by line through tariffs, product by product, to determine what's going to be able to be sold, when it's going to be able to be sold. And that's going to take some time to work out. The risk is that it takes months or longer, and there's disappointment or a lowering of expectations.
Is having this type of economic policy so closely connected to geopolitics normal?
I think economics and geopolitics have been coming together for some time now. And I think the whole notion of economic security, particularly as it comes to competition with China, has become a reality. So national security and economics have very much merged in many respects. We think about government intervention in the markets in the interest of national security, whether it's export controls, preventing their export of sensitive technologies, or putting restrictions on sectors where foreigners can invest in the U.S., or industrial policy to invest domestically in strategically important industries.
I like what you said about how there's this formula here where the president stakes out this maximalist position, freaks the other side out, and then dials it back and then claims victory. Is this an effective blueprint when you move beyond tariffs into things like war between Russia and Ukraine, between India and Pakistan, or striking a nuclear deal with Iran? Like, does this work for those instances?
I think it's much more relevant when you're talking about something quantitative like tariffs, and frankly, nothing that is as life and death as negotiating over war or a border conflict or something of that sort. But I do think the president is working to figure out how to use leverage, the leverage the U.S. has, in a maximal way, how to bring other countries to the table. The question is, what are the long-term implications of that? Because we're doing this not just against our competitors or adversaries like China, but also with our allies and our very close allies. And those allies have their own politics and tend to have a negative reaction when they're being coerced by the United States through the threat of tariffs. They'll come to the table. They'll work with this administration, I think. But at the same time, when it comes to going back to them on some issue that is very difficult for them, will there be the goodwill for them to cooperate with us then?
So let's take a broader look then at the U.S. economy, knowing all that we know and all that we don't know. Have you guys at the Council of Foreign Relations thought differently now about growth and inflation in the U.S. today than you did 2 weeks ago?
Not really. I think there's just a great deal of uncertainty still over what the tariff regime is going to be longer term.
Even though we know there's a 10% baseline, and we know
it's
worst
gonna be
case
at least
scenario
that,
won't happen.
But what else is going to happen? Where are we going to end up with China? What's going to happen in 90 days? Do things get rolled forward and delayed further from there, or do things bounce back? The president has said it would be higher, but not as high as the 140% where he started. And so we don't really know where it's going to end up. And I think the challenge there is if you're a company trying to make a decision about whether to invest, and particularly about whether to move production to the United States or move your supply chains to the United States, if you don't have certainty over what the tariffs are going to be 3, 5, 10 years from now, let alone 3 months from now, it's very difficult to make those decisions. Same thing on the consumer side. If the consumer is unsure about how much things are going to cost, how much they're going to have to spend, they tend to sit on the sidelines. And sitting on the sidelines, company or as a consumer, can be a self-fulfilling prophecy towards a recession or at least slower growth.
I mean, when it comes down to it, everything slips into the same cycle, which is something happens and we kind of react to it, whether it's in the financial markets or whether it's on the diplomacy front. What will you be watching for? I mean, we know the president is on his Middle East tour. He's going to continue it. But what will you be listening for and watching for as he moves forward, as he returns home, and we look for signs of progress on the China trade talks?
Well, I think the question would be, what is he trying to negotiate with China? He made the point in his press conference the other day that he wants to open Chinese markets to U.S. products, which has been a long-standing goal of several administrations.
Right. That's consistent with other administrations.
That is. Now, you can go about that by trying to reform China's economic policies and open up sectors, for example, or reduce regulation. But that has only had limited success. Or you can do what he did the first term, which is to negotiate not really a trade agreement, but a purchase and sale agreement. We agreed to sell them more soybeans, more corn, more LNG, more ethanol. Those are sort of commodities. And the question is he going to be satisfied by reducing the bilateral trade deficit by basically being a commodity provider to China?
Also, can we really look at the deficit with China if they don't have a free-floating currency?
Well, we see the deficit, and we do have a very significant, whether it's inflated by a certain amount or suppressed by a certain amount, the reality is we have a very significant goods deficit with China. We have a significant surplus when it comes to services with the world and with most countries as well. This administration tends to play down the importance of services and very much emphasize goods, particularly manufactured goods. So there is work to be done to open China's market. There is work to be done to rebalance China's economy. And the question will be whether those issues are on the agenda, trying to get China to move towards more domestic demand-led growth, doing the kinds of reforms they need to do domestically to reduce savings and increase consumer spending. Those have been on the agenda for a very long time. Or whether he's going to be satisfied with basically a contract to sell more stuff to them in the short run.
Well, we'll see, because he does tend to move the goalposts quite a bit. Mike Froman, thank you as always. Mike Froman is the president of the Council on Foreign Relations. Now, coming up, we're going to take a look at the market, specifically shares of eToro charging higher, up 29%. Earlier, it gained as much as 43% in its first couple of hours of trading. A closer look at the debut of eToro in today's Stock of the Hour next. This is The Close on Bloomberg.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
All right, we are watching shares of eToro up about 29%, just over 29% right now. And this is after it had climbed as much as 43% in its first session as a publicly traded company. This follows an upsized IPO of almost $620 million. Joining us now to discuss this is Bloomberg News' Katie Roof, who covers all things venture capital. So, Katie, this is an IPO that was delayed because of tariffs causing a lot of market turbulence and creating a lot of not great market conditions for a newly traded company. What can you tell us about the timing here in terms of when they finally did decide to move forward with the listing?
Yeah, so recently, once the VIX was below 25, we started to see the volatility index. We started to see more of these IPOs come back. eToro was one of those that got delayed, as you noted. There was a lot of market uncertainty following Trump's news about the tariffs, but eToro decided to come back, partly because of reduced volatility and partly because their comp, Robinhood, is way up year to date.
Do you think that this paves the way for other venture capital companies to go public, or was this sort of a unique one-off?
So the VC industry is certainly hoping for that. They have had very few exits, so-called exits, where they've made very little money off of IPOs and acquisitions in recent years, and so they've been waiting and waiting. And so because eToro did well, it will increase the likelihood that some of them will feel confident. We have Chime. They filed their IPO yesterday, and we have several others on deck. We're waiting to see what happens with Klarna. And then also Mountain with Ryan Reynolds should be happening soon.
Yeah, I feel like Klarna, we've been talking about that for years now. And,
for real, yes.
Right?
And StubHub, too. I feel like the two
yes.
of those.
Okay, so Katie, when these VCs take these companies public, how much of a stake do they still continue to hold in them? How much do the VC backers of eToro still have in the company?
So Spark Capital is the largest shareholder, and they own about 14% of the company, a stake worth many hundreds of millions at this point. They invested 15 years ago, back when this was a baby startup, and the shares were almost free. So they gained almost all of that money. But yeah, some of the other shareholders were kind of unconventional names. eToro's from Israel, so there was an Israeli investment firm that's part of this. And then it was just a hodgepodge of names, but Spark Capital is the largest shareholder and the most well-known of their backers.
Before we let you go, Katie, how does eToro stack up against Robinhood?
So, I guess it just depends on user preferences, but eToro's known for international markets. Robinhood is good for investing in U.S. markets.
All right, Katie, thanks a lot. Really appreciate it. Bloomberg's Katie Roof joining us. And don't forget to tune in to Bloomberg Technology's interview with the CEO of eToro, Yanni Asia, coming up tomorrow. Definitely looking forward to that. But does this finally open the window? Like, how many times has Klarna been pushed off
I know.
at this
We've
point?
talked about it for so many. I mean, I feel like for 2 or 3 years, we're like, Klarna's going to go public this year. It's going to happen. It's going to happen.
But we keep hearing about all the secondaries in private equity as a way to sort of exit and raise capital. We're not hearing about the other kind of exit strategies.
There's a lot of anxious backers who are like, come on,
let's go. All right, we're at 15 minutes from the close of this very boring trading day. But you know what? We'll take a boring. It's been quite a 6 weeks.
It's a nice contrast to what we saw in April.
Exactly. So how to kind of structure yourself around that is still buy the dip, the direction that we're going to go into. Steve Sosnick of Interactive Brokers helps us count us down to the closing bell. This is The Close on Bloomberg Television.
There's more concern about being left behind when you see this momentum up than we saw on the way down. And I think that a little bit plays to the COVID playbook. Post-COVID, there's been much more of a risk that you get the benchmark FOMO, that AI rips, that mega cap tech rips, and you as an investor who has to post those benchmarks get left behind.
Amy Wu Silverman there, equity derivative strategist at RBC Capital Markets. She kicked off the show. She incorporated 2 main themes that we're going to talk about here, FOMO and momentum.
Yeah, what'd you say? FOMO means Momo?
Yeah, FOMO equals Momo, or FOMO yields Momo, as our guest is going to explain.
Do we not love this?
Yeah,
I love this for her. Okay, the market's doing absolutely nothing. The S&P is now just up by about 0.1% for the year. But you can see we're not going anywhere fast at this point. NASDAQ 100 a little bit higher on that. I should point out that the semi-index is actually doing all right, by 0.4%. Get a nice little upgrade
for direction.
Yeah, you had Bank of America saying that the deal with Nvidia and the Saudis was really good for Nvidia and AMD. Nvidia actually now above $3 trillion. Again, was not doing well. Healthcare again for a second day continues to get pummeled.
Well, yeah, because the president has talked about making sure that those pharmaceutical prices come down to what they're being charged or what people outside the U.S. are being charged. All right, let's come back to the market here and welcome Steve Sosnick. He is chief strategist at Interactive Brokers. And Steve, let's talk a little bit about FOMO and momentum, because it definitely feels like even with the placid moves in the market today, that the direction here is I can't be left behind. And we've seen this incredible rebound since the mess of April. And I'm not sure that fundamentals are justifying the kinds of gains that we've seen.
There's a couple ways to break it down, Scarlett. And one of them is, I think, first of all, buy the dip has been the mantra of individual investors, for pretty much the better part of 5 years. And to be fair, it's essentially worked almost all the time with a few months exception. So you see that. And then eventually these dips run their course and sentiment got so extreme, in early April. So that was quite understandable why we'd see a rally. But then the second part is all rallies need to be chased. That's the codicil of the first part. And that's where your momentum trade comes in. So momentum then takes over. The trend is your friend. But like you just said, MOMO leads to FOMO, and people start to feel like they're missing out. But my problem with just being strictly a momentum trader, there's nothing wrong with it. Trend following is probably the most basic and simple way to interact with markets. But at some point, if you take momentum investing to the extreme, you're basically saying, I don't care about fundamentals. All I care is price action. They're going up. I'm going to keep buying because the price is going up. And so what if the PE is 37 or 52 or whatever?
Or 187.
But aside from the psychology of FOMO, I mean, also what seemed to lead to a lot of buying recently is mechanical buying. The volatility funds had to re-rate. That was a couple weeks ago. Then you have the CTAs now. Then you have hedge funds that they have to re-risk pretty aggressively. Do you feel